Yes, sir. Coming to the accounting point of view, accounting treatment for issue of shares. Accounting treatment for issue of shares. Accounting treatment for issue of shares. Now, what is this accounting treatment for issue of shares? Sir, shares may be issued at nominal value shares may be issued at nominal value or more than nominal value. Sir, shares are issued at nominal value means what? Face value 10, issue price is also 10. In other words, when the shares are issued at face value, or when the shares are issued at nominal value, or when the shares are issued at par value, then it is known as what? Issue at face value or issue at par. More than nominal value means face value is 10, issue price is 15 or issue price is 12. When the shares are issued over and above the nominal value, then the shares are said to be issued at what? Premium. Then the shares are issued at premium. The extra amount collected will be transferred to the extra amount collected. Extra amount collected will be transferred to the extra amount collected will be transferred to security premium account. The extra amount collected will be transferred to security premium account. Now pass the entries. Now shares are issued. When these shares are issued, either you can collect entire money on application. Sir, how these shares are issued? First, I already said, sir, there are 4 stages. First one is what? Application. Second one, allotment. Third one, first call. Fourth one, second and final call. First one is what, sir? Application. Second one is what? Allotment. Third one is first call. Fourth one, second and final call. Sir, will it have every share for these 4 calls? Not necessarily required. Not necessarily required. Some might collect, for example, 10 rupees is face value. Application is 2.5. Our application is 2 rupees. Allotment is how much? 2.5. First call is how much? 2.5. Final call is 3. I hope it is 10. Yes. Face value is 10. Issue price is also 10. Now, when you are making a issue, either you can collect that issue price in installments. Matlab application, allotment, first call and second and final call. Maybe some companies make only first call enough. Entire amount they will collect up to first call. Maybe some companies might have even third call also. 10 rupees only. 1 rupee here and some 2 like that. They might have some extra call also. Are you getting, sir? Very good. Now tell me, sir, imagine company's entire money is collecting at application stage. Entire amount is collected at application stage. When entire amount is collected at application stage, that is known as collecting money. Entire issue price is collecting at application stage. I hope you are getting the clarity. Face value is 10, issue price is also 10, entire amount is collected at application stage. Entry: bank account to debit. Yes sir, bank account debit. Example, you are issued 1000 shares into 10 rupees. 1000 into 10, 10,000 to equity share application. 10,000. Next one, sir. Next one, equity share application account to debit. 2. Equity share capital. Equity share application account debit to equity share capital. How much? 10,000. 10,000. Equity share application account debit to equity share capital. 10,000. 10,000. Yes sir. Next. Next one. Now, equity share application and allotment you are supposed to write. Most of them will write equity share application, but the correct entry is equity share application and allotment, and equity share application and allotment. Are you getting or not, everyone? So what is the correct entry? Bank account to debit 1000 into 10 to equity share application and allotment. Next one, equity share application and allotment account to debit to equity share capital account. How much? 10,000. 10,000. I hope you are getting the clarity. When the entire application money is received, now you are supposed to be right here only application and allotment, application and allotment. This is the entry. No sir, amount is received in applications. Amount is received in installments. Amount is received in installments. Application, allotment, first call, final call. Application lo it is 2, allotment lo 2.5, first call lo 2.5, final call lo 3 rupees. Minimum application money should be 25, minimum call should be 25%. Yes, minimum call is 25%. The time gap between two calls must be minimum 3 months. Yes sir, the time gap between calls must be minimum 3 months. Next, how many shares applied? How many shares offered? Number of shares is equal to 1000. Entry. Entry. Bank account to debit. How much? 1000 shares into 2 rupees. 2. Equity share application. How much? 2000. Next one. Equity share application. Account to debit. 2. Equity share capital. This is application money received. Application money received. This is on the date of allotment. On the date of allotment. Are you getting, sir? This is application money received on the shares and this is on the date of allotment. How much? Convert this 2000 to equity share capital. Next one. And you are making the allotment call. So, application and then you completed that allotment and you are making the allotment call entry. Equity share allotment account to debit. 2. Equity share capital. Equity share allotment account debit to equity share capital. How many shares? 1000 into 2.5. How much? 25,000. 25,000. Sorry, this 1000. Okay, then 2,500. 2,500. 2,500. Entry. Bank account debit to equity share allotment. Entry. How much? 2,500. 2,500. Next one. Next one. Next. Now, I need to convert this into capital. When I received this money, now I need to convert this into capital. Matlab which when I am raising this first call and I need to raise final call and I need to connect that into capital. So, this is what the equity share allotment. Equity share allotment to equity share capital and bank account debit to equity share allotment. I hope you are getting the clarity. Next one, sir. Now, next one I am making the call to the shareholders entry. Equity share first call. Account to debit to equity share capital account. Equity share first call how much? Equity share first call 1000 into how much? 2.5. Entry. Bank account debit to equity share first call. Bank account debit to equity share first call. Next one, sir. Next one. Equity share final call account to debit to equity share capital. How much? 3,000. 3,000. Entry. Bank account to debit equity share final call. Bank account debit to equity share final call. Done. So these are the 8 entries. So for because of any call, if you see the ultimate entry, it should bank to equity share capital. Because of any 2 entries, ultimate entry bank to equity share capital. Because of any 2 entries, ultimate entry bank to equity share capital. I hope you are getting the clarity. Yes, sir. So these are the basic entries, sir. When you issue at a par, when you issue shares at par or when you issue shares at nominal value. If you issue the shares at par or if you issue the shares at nominal value, these are the entries. Next one, face value 10, issue price 12, issue price 12 and entire amount is received along with the application. Face value 10, issue price 12, entire amount received along with application entry. Bank account to debit 2, equity share application. Bank account debit to equity share application. How many shares? 1000 into 12. How much? 12,000. 12,000. Next one. Equity share application account to debit. How much? 12,000. 2. Equity share capital 10,000 to securities premium. So your capital should be always there for what? Nominal value. Capital should always be there for what? Nominal value. And any amount which is received over and above the nominal value will be transferred to where? Securities premium. Will be transferred to securities premium. I hope you are getting the clarity. Perfect. Section 53 of the Companies Act prohibits you to issue shares at discount. Hence, we will not issue discount except from sweat equity shares. Fine, leave that. Next one. Sir, issue of shares at a premium, amount received in installments. Application 2. Allotment 5, which includes premium 2 rupees. First call 2.5, final call 2.5. Face value 10, issue price 12. Application is 2, allotment, first call, final call. Entry, sir. Bank account to debit 1000 into 12,000. Oh, I think it is application. 1000 into application is 2. 1000 into 2. How much? 2000. Bank account debit to equity share application. How much? 2000. Next one. Next one. Equity share application account to debit to equity share capital. How much? 2000. 2000. This is application money received. This is being application money received. This is application money transferred to where? Capital. Application money transfers to capital on the date of allotment, being allotment of shares were done. Being allotment of shares were done. Next. Equity share allotment account to debit. 2. Equity share capital. How many shares? 1000 into 5. 5000. But capital should be at what value? Face value. And the balance amount will be transferred to where? Securities premium. How much? 2000. I hope you are getting the clarity. What is this 5000? Amount due from what? Allotment. Due from allotment. Capital should be always at what? Face value. Balance is what? Securities premium. Entry. Equity share allotment account debit to equity share capital to securities premium. Next one. Bank account to debit. How much you are collecting? 2. Equity share allotment. How much? 5000. 5000. Next. Equity share first call account to debit. When first call is made. 2. Equity share capital account. Equity share first call account debit to equity share capital. How many? 1000 into 2.5. 2500. 2500. Next. Bank account to debit. 2. Equity share first call account. How much? 2500. 2500. Next. Next. Equity share final call. When final call is made, equity share final call account debit to equity share capital account. Next one. Bank account to debit to equity share final call. How many? 1000 shares into final call 3 rupees, that is 3000. 3000. 3000. 3000. Bank account debit equity share final call done. This is how it works. Securities premium for the first time you recorded when writing the due entry for allotment. Due entry for allotment. I hope you are getting the clarity. Yes sir, basic 8 entries, nothing is there, some basic. If you are coming from any commerce stream, matlab, if you know this, you are coming from +2 from commerce, you will have all these things in your basic commerce stream, nothing new. Right? Right. So next come, put the heading, calls in arrears. Calls in advance. Yes sir, next one, next area is calls in arrears. And calls in advance. What is this calls in arrears? What is this calls in advance? Face value is 10. Issue price is also 10. I am continuing with calls in arrears. Calls in arrears. Face value is 10. Issue price is also 10. And the amount payable as follows. Application lo 2. Allotment lo 3. First call 2.5. Final call also 2.5. First call 2.5, final call 2.5, allotment 3, application 2. 3, 2, 2.5, 2.5. Entry, sir. One shareholder, total number of shares issued 1000. Number of shares issued 1000. Okay, number of shares allotted also 1000. Applied allotted 1000. One shareholder holding 100 shares fails to make the final call. Failed to make the final call. Fails to make the final call. So, when any call amount or allotment money call is made, but the shareholder is not paying that amount, even after the time, within the time 15 days, 13 days, even if they are not paying within the time period, then it is known as what? Calls in arrears. Calls in arrears. Yes, sir. Entry, sir. Calls in arrears. Entry. Bank account debit 1000 into 2, 2000 to equity share application. Second one, equity share application account to debit to equity share capital. Equity share application account debit to equity share capital. Next one. Next make the final call. Next make the allotment. Equity share allotment account to debit to equity share capital account. Next, bank account to debit to equity share allotment account. Bank account debit to 1000 shares into how much per share allotment? 3 into 3, 3000, 3000, 3000, 3000. Next one. Next one. Final call due. First call equity share. First call account to debit to equity share capital. How many shares? 1000. How much? 2.5. 2500, 2500. Next one. Bank account to debit to equity share first call account. How much? 2500, 2500. Now come to the last entry. Here there is a difference. Due entry equity share final call to equity share capital. How many shares? 1000 into 2.5, 2500, 2500. Next, bank account to debit. I am getting only for 900 shares into 2.5. For 100 shares, I am not receiving the amount. 2250 only I am receiving. Now what about that calls in arrears? How much? 100 into 2.5. How much? 250. 2. Equity share capital 2500. Equity share capital 2500. Bank account debit, calls in arrears to equity share capital. Sir, other way also you can write, this is not equity share capital, sir, this is equity share final call. Equity share final call. Equity share final call. Bank account debit, calls in arrears to equity share final call. I hope you are getting the clarity. Other way round also you can write, that is bank account to debit 900 into 2.5, 2250 to equity share final call 2250. Now calls in arrears. What? Calls in arrears is there in equity share final call account. Calls in arrears is there in equity share final call account. If you are separately debiting calls in arrears, then the calls in arrears is there in calls in arrears account. If you are not separately writing calls in arrears, then that calls in arrears is there in where? Equity share final call. I hope you are getting the clarity. Next. Now company law provisions. So if anyone is making like this calls in arrears and they are making payment after the due date, interest will be levied maximum at the rate of 10% as per model articles of table F. The maximum interest that will be levied upon this calls in arrears from the shareholder is 10%. This is an income to the company. This interest will be charged from the date it is due or from the date last date due. Date of payment. Are you getting, sir? Last date of due. Matlab this is the last date for payment. From that date to date of payment, interest will be levied a maximum at the rate of 10% per annum. 10% per annum. And this will be the income. This will be the income entry. Shareholder account to debit to interest on calls in arrears. XXX, how much is the amount? XXX. When you received that amount, entry. Bank account to debit to shareholder account. Bank account debit to shareholder account. Now this will go and sit in your P&L account. Entry. Interest on calls in arrears to P&L account. And when he is making final call entry, calls need to cancel. Bank account to debit, when he is making final call, bank account debit to calls in arrears account. You can also club these two entries. Bank account debit to calls in arrears to shareholders, or you can separately write two entries. This is receipt of interest separately, receipt of final call separately, or you can club both these two and write bank account debit to shareholder to the extent of interest to calls in arrears to the extent of calls in arrears. I hope you are getting the clarity. Come to the calls in arrears is done. 10% maximum interest, entry shareholders to interest, that is income, and then bank to shareholders when you collected the amount, and that will be transfers to P and L, done. And when you collected this calls in arrears entry, bank to calls in arrears. Due entry you wrote this here, due entry and receipt entry. I hope you are getting the clarity. Next, calls in advance. Calls in advance is something where the shareholder is making the call payment before the call is made. Example, face value 10, issue price 10, application 2, allotment 3, first call 2.5, final call 2.5. Shareholder holding, total number of shares 1000, shareholder holding 100 shares pays final call amount along with first call. Shareholder 100 shares pays final call amount along with first call. Entry. Bank account debit 1000 into 2000 to equity share application account. How much? 2000. Transfer this application entry. Equity share application account to debit to equity share capital account. How much? 2000. 2000. I hope you are getting the clarity. Yes. Next one. Equity share allotment account to debit to equity share capital. How much? 1000 into 3. Next one, bank account debit to equity share allotment. Bank account debit to equity share allotment. Next, carefully see the next entry. Next entry, equity share first call account to debit to equity share capital. How many? 100,000 into 2.5, 2500, 2500. But a shareholder holding 100 shares is paying final call also along with first call. Bank account to debit 1000 into 2.5 plus 100 into 2.5. 1000 into 2.5, 2500. 100 into 2.5, 250. 2750. What is the 2750? The 2750 is bank account debit to equity share first call 2500 only to calls in advance 250. Calls in advance 250. I hope you are getting the clarity. This is the liability, will be shown in other current liability. Calls in arrears will be shown by way of reduction from the paid up capital. Calls in arrears will be shown by way of reduction from paid up capital, and this calls in advance will be shown as other current liability. I hope you are getting the clarity. Next one. Next one is when you made the final call entry, equity share final call to equity share capital. How much? 2500, 2500. But when you are getting the cash, you are not getting 2500. You will get only 900 into 2.5. You will get 2250. Calls in advance liability is there. Cancel that calls in advance. 100 into 2.5, 250. Equity share final call 2500 to equity share final call 2500. I hope you are getting the clarity now. So cancel this calls in arrears. Earlier I shown it as liability and show it as equity share final call. Next one. First, if articles permits, then only you can collect calls in advance. If articles collects, then only you can collect calls in advance. As per model articles, table F speaks maximum interest that will be given to calls in advance is 12%. From which date to which date? From the date of receipt to from the date of final call or next call. From the date of receipt of this calls in advance to from the date of next call. From this date to date of final call. Date of final call. Date of final call. I hope you are getting the clarity. Entry. This time interest is not income, interest is expense. Interest on calls in advance to shareholder account. Shareholder account to debit to bank account. Shareholder account debit to bank account. Next, P&L account to debit. P&L account to debit to interest on calls in arrears. P&L account debit to interest on calls in arrears. I hope you are getting the clarity. In P&L account debit to interest on calls in arrears. Yes. So simple, sir. First entry, bank to equity application. We are getting bank and we are creating some liability which is the name of equity application and allotment. Cancel this application and allotment on the date of allotment. Entry, equity share application and allotment to equity share capital. Done. Notes are receiving in installments. Entry, bank to equity share application to equity share capital. Next one, equity share allotment to equity share capital, bank account debit to equity share allotment. Next one, equity share first call to equity share capital, bank account debit to equity share first call. Next one, Equity share final call account debit to equity share capital, bank account debit to equity share final call. I hope you are getting the clarity. Now, when you are having calls in arrears also, entry equity share first call account debit to equity share capital, bank account debit, calls in arrears account debit to equity share first call. No sir, calls in arrears is there in final call. Then entry equity share final call account debit to equity share capital, bank account debit, calls in arrears account debit to equity share final call. No sir, calls in advance ke entry. At the time of first call, you are receiving final call amount. First due entry, equity share first call account debit to equity share capital, bank account debit, you are getting higher amount to equity share first call to calls in advance. Now, when you are getting final call entry, equity share final call account debit to equity share capital, bank account debit, calls in advance to equity share final call. Done. We can have some numericals, then you will have better understanding about all these areas. Yes sir. Let's come to the questions part on calls in arrears and calls in advance. Just now we have said an application part, just it. What is this application part is all about? If it is calls in arrears, then the maximum interest charged is at the rate of 10%, and if it is calls in advance, the maximum interest allowed provided if articles agreed is 12%. This is the maximum as per model articles, that is table of model articles law. This is the maximum rate 10 and 12. Perfect sir. Next come to the application part, what we have discussed. Yes, Reshmi Limited, yes, Reshmi Limited issued at par 1 lakh equity shares of 10 each. Issued at par 1 lakh equity shares of 10 each, payable 2.5 on application, 3 on allotment, 2 on first call, and the balance on final call. What is the balance actually? The face value is 10, okay, 2.5, 3 comes to how much? 5.5 plus 2, 7.5, the balance is 2.5. Yes sir, the balance final call is how much? 2.5. All the shares were fully subscribed. Yes sir, all the shares were fully subscribed. Mr. Nair, okay, who held 1000 shares, paid the full remaining amount on the first call itself, meaning thereby a guy out of 1 lakh, a guy named Mr. Nair holding how many shares? 10,000 shares, and this 10,000 shares, on this 10,000 shares he paid the final call along with the first call. He paid the final call along with the first call. Perfect. Next, the final call which was made after 3 months from the first call was fully paid except a shareholder holding 1,000 shares. On the date of final call, a idiot name, did they say any name? No, they are not mentioning any name. The final call which was made after 3 months from the first call was fully paid except a shareholder having 1,000. See, why they gave this 3 months time? Matlab, why they gave the 3 months? Matlab, the final call is made after 3 months from the first call, because to know the interest on calls in advance. To know the interest on calls in advance. Next, that guy who is not paid his final call on 1,000 shares, he paid after 2 months along with interest on calls in arrears. Company also paid interest on calls in advance to Mr. Nair. Give journal entries to record these transactions. Perfect sir, beautiful problem. What happened sir? Sir, they named the company as Reshmi Limited. Perfect. Issued at par, they are issuing at par, okay. How many equity shares? 1 lakh equity shares, and the face value is how much? 10 rupees. Payable as 2.5 on application, 3 on allotment, 2 on first call, and the balance which is 2.5 on final call. Perfect sir. All the shares were fully subscribed. All the shares fully subscribed means this 1 lakh shares were fully subscribed. Mr. Nair, who held 10,000 shares, paid the full remaining amount on the first call itself, meaning thereby he paid the final call amount on the first call. Very good sir. Come to the entries part. Yes, sir. First one. Journal entries in the books of Reshmi. Journal entries in the books of Reshmi. Okay. Next. Date, particulars, LF, debit, credit. Did they mentioning any dates? No. First entry. Bank account to debit to equity share application. How much, sir, this bank account debit to equity share application? I think 1 lakh shares into application is how much? Application is 2.5, which comes to how much? 2,50,000. Being application money received, being application money received. Next one, sir. Next one, on the date of allotment, transfer this application money into where? Capital entry. Equity share application account to debit to equity share capital. Equity share capital. Being allotment made. Being allotment made. How much? 2,50,000, 2,50,000. What is the allotment call? That is 2 rupees per share if I am not wrong. 3 rupees per share. Okay, sir. Entry. Equity share allotment. Equity share allotment account to debit to equity share allotment account debit to equity share capital to equity share capital account. Being allotment money due. Being allotment money due. How much? 1 lakh into 3, which is 3 lakhs. Which is 3 lakhs. Next, sir, receipt of allotment entry. Bank account debit to equity share allotment. Bank account debit to equity share allotment. How much, sir? How much I received? 1 lakh into 3, which comes to 3 lakhs. 3 lakhs. Being allotment money received. Being allotment money received. Perfect, perfect. Being allotment money received. Done. Perfect. Extraordinary. Next. Next one. First call. Make the first call. How much is the first call? 2 rupees if I am not wrong. Yes, sir. 2 rupees on first call. Entry, sir. What is that entry for first call due? Equity share first call account to debit. How many shares, sir? 1 lakh. How much is first call? 2 rupees. 2. Entry equity share capital to equity share capital account. How much? 2 lakhs, 2 lakhs. Being equity share first call made. Being equity share first call due. When you are receiving the money, one shareholder named Nair paying the final call of rupees 2.5 along with the first call. 10,000 into 2.5, which is 25,000 if I am not wrong. Everyone, so entry bank account to debit. How much? 1 lakh into 2 plus 10,000 into 2.5 means 2,25,000 is bank. 2. Equity share first call. How much? 2 lakhs. The extra 25,000 what I received, that is not in the name of fixed share first call, that is nothing but 2 calls in advance, that is my liability having credit balance, calls in advance. How much? 25,000. I hope you are getting the clarity. Everyone, next entry. Next entry, final call. When you are making final call entry, write one entry. Equity share final call account debit to equity share capital. Share capital being final call made or final call due. How much, sir? 1 lakh into final call how much? 2.5 if I am not wrong. Yes. 2 lakh 50. 2 lakh 50. But when you are collecting cash, what happened? Already 10,000 shares ki you collected. Bank lo you will collect for only 89,000 shares. Why 89 means one idiot holding 1,000 shares is not making final call, and one idiot who is holding 10,000 shares he already paid on which call? On the first call itself. Means at final call I will receive only 89,000 into 2.5 if I am not wrong. How much I am receiving? 2,22,500. Calls in arrears. How much? 1,000 into 2.5, which is 2,500. Next. Calls in advance. Cancel that liability. How much? 25,000. 2. Equity share final call. 2 equity share final call. How much? 2,50,000. I hope you are getting the clarity. Everyone, see, this is the key entry here. How much I am collecting? On 89,000 shares. And what is my calls in arrears? 1000 shares I am not collecting 2.5. What is my calls in advance? This calls in advance already I collected on 10,000 shares, which is 2.5. Along with the first call only I collected. Now cancel that. Now ultimately equal share final call, cancel that asset. What is that you are writing? Done. Done. Next one, sir. Next one, you need to pass entries for interest components. And now you are paying, how much is the interest? I said calls in advance, 12% is the interest on calls in advance. How much I received in advance? 25,000 I received. Into how much? 12%. And after how many months? 3 by 12. After 3 months I made final call. 25,000 into 12% divided by 12 into 3. 750 is what? 750 is interest on calls in advance. Interest on calls in advance. Entry, sir. Entry, that interest is an expense for us. Interest on calls in advance account to debit. How much? 750 to, either you can write to Mr. Nair or directly write bank account. Anything is fine. First to write one due entry to Mr. Nair, 750, write one bank entry. Or directly you can also write payment entry, nothing wrong. Mr. Nair account debit to bank account. How much? 750, 750. I hope you are getting the clarity. Next. Next, interest on calls in arrears also there? Yes, sir. And he paid after 2 months. How much is that calls in? 1000 into 2.5 into 10% into 2 by 12. How that 2 came? He paid after 2 months. 1000 into 2.5, which is 2500, into 10%, which is 250, by 12 into 2, which is 41.7, 41.67. Okay, 41.67. This is what, sir? Income for us. This is what, sir? Income for us. Entry. You can write 2 entries. Shareholder account to debit. 2. Interest on calls in arrears. How much? 41.67. 41.67. And when you are collecting the money, entry, bank account to debit, how much you are collecting? 2500 plus 41.67. Total 2541.67. This is what you are collecting in the name of bank, and you are having, why you are collecting? Because of calls in arrears. How much? 2500 to shareholder account. How much? 41.67. This entry you can split into 2 entries, and you can write this entry, you can split into 2 entries. One is bank to calls in arrears. How much? 2500, 2500. Bank to shareholder. How much? 41.67, 41.67. I hope you are getting the clarity. And one more entry, profit and loss account debit to interest on calls in advance, and one more entry, what is the expense, that is debit your profit and loss, and income credit your P&L. What is the income here? Interest on calls in arrears account debit to P&L. Those two entries also you are supposed to write. Profit and loss account to debit to interest on calls in advance. How much is the interest on calls in advance? 750. Interest on calls in arrears. Interest on calls in arrears to P&L account 41.67, 41.67. That is the ultimate answer, sir. Perfect. First what I did, receipt of application, then transfer this application to capital, then due entry for allotment, then transfer this allotment to what? Receipt of this allotment. Next, make the first call and receive the amount of the first call along with calls in advance. Next, when you make the final call, yes, make the final call, adjust with calls in advance, adjust with calls in arrears, and write the interest entries. Fine. Just go through it. Bank to each application, application to capital, allotment to each share capital, bank to allotment, first call to capital, bank first call calls in advance, final call to capital, bank calls in arrears, calls in advance to final call, interest elements, interest entries for interest on calls in arrears to Nair, and then you are making payment to Nair, and then shareholder, who is it may be, shareholder account debit to interest on calls in arrears. Yes, this is income and this is expense. Transfers to P&L account. Come to our answer. Done. Done. Each share allotment. Done. Bank to equity share allotment. Equity share first call to equity share capital. Bank equity share first call, calls in advance. Perfect. Go and check our entry. Perfect. Next, equity share final call to equity share capital. Perfect. Calls in advance, calls in arrears, bank to equity share final call. Perfect, sir. Extraordinary. Done. Next, interest on calls in arrears to Mr. Nair. Perfect. Shareholder, in other words, Nair to bank. Perfect. Shareholder to interest on calls in arrears. Perfect. I wrote the first entry, bank. Okay, bank. Okay, that transfers to profit and loss account in suggested answers, in ICAI suggested answers, they are not giving. So you are also better don't transfer that interest to the P&Ls. I hope you are getting the clarity. Then any doubt, please let me know. Yes, sir. Come to the next element, next area. Accounting treatment for share forfeiture. Accounting treatment for share forfeiture. What is this accounting treatment for share forfeiture means? Sir, a shareholder is not paid money after call is made. Once call is made, he is not paying the money. Give 14 days notice. What is this notice means? Notice of forfeiture. What sir this is? Notice of forfeiture. A shareholder, if you are not making call within 14 days, I will forfeit your shares. I already wrote one entry regarding calls in arrears entry. Now if he is not making payment, I will forfeit his shares. What is the entry, sir? Depends upon whether issue is at par or premium. Sir, issue is at par. This is issue at premium. Sir, if the issue at par and those shares are forfeited. No sir, the issue is at premium and those shares were forfeited. Sir, if the issue is at premium, premium is collected, premium is not collected. Okay. Forfeiture of shares which is originally issued at par. Okay. Forfeiture of shares which is originally issued at par. Sir, when he is not making payment, I wrote one entry, I already passed one entry, bank account debit, calls in arrears account debit to respective call, maybe you said first call or final call, whatever it may be. If he is not making the payment, I will write one entry, cancel that calls in arrears. I wrote that calls in arrears assuming he is my asset, but now he is no more my asset. Cancel that calls in arrears. Entry, sir. Share capital account to debit. The moment I am forfeited, they are no more part to my capital. Cancel my capital to that tune what I am forfeiting. Assuming if it is 1000 shares, 1000 into, so far how much I called up? 1000 into called up. So far how much I raised in the name of capital. Share capital account debit called up. Two, calls in arrears, number of shares into call not paid, call not paid, number of shares into call not paid. This is my calls in arrears. 2, share forfeiture account, number of shares into face value of amount already collected. Face value of amount already collected. Face value of amount already collected. This is my capital gain. Matlab this is my amount what is received from the shares which is not going to be repaid. Are you getting, sir? It will be transferred to where? Capital reserve. It is not my revenue operating income. It will be transferred to where, sir? Capital reserve. But there are some restrictions when to transfer, when not to transfer. I hope you are getting the clarity. For example, so what is the entry? Share capital account debit to calls in arrears to share forfeiture account. Share capital account lo what I am supposed to debit? Called up. Say calls in arrears, how much is not paid? Share forfeiture, what he paid. That's it. Shareholder holding 1000 shares paid 6 rupees and calls in arrears. In other words, he is not making 4 rupees. He is not paid 4 rupees. That's it. These shares were forfeited. Entry. Share capital account to debit. Thousand shares into 10,000. Why is there 10,000? Because I already made what? Final call. This is final call, not paid. Final call, not paid. And this is how much? 1000 shares. Paid how much? 6 rupees. Entry. Share capital account debit. 1000 into 10 which is how much? 10,000. Perfect. Next. 2. What is this 2? How much is not going to be received? This will not going to be received. Earlier I thought this is my asset and I debited this asset, and this is no more an asset. 1000 into how much? 4, which is how much? 4,000. 2. So far I collected how much? So far I collected 6 rupees on this share, and this 6 rupees will be transferred to a separate account. Share forfeiture account. 1000 into 6. How much? 6,000. Perfect. Next. Done. Share forfeiture, it is 6. I hope you are getting the clarity. Now what to do with this share forfeiture? Once again, 3 scenario. Sir, what to do with the share forfeiture depends upon whether it is reissued, what to do depends upon 3. First one, reissued or retained or cancelled. Sir, those shares were cancelled. I don't want to issue to anyone. Cancel those shares. Then transfer that share forfeiture to capital reserve. Share forfeiture account debit to capital reserve account. No sir, those were retained. If it is not cancelled, neither reissued, then added to paid up share capital. Added to paid up share capital. To your paid up share capital, add share forfeiture. No entry and all. Not required any entry. Just add in the notes to accounts presentation or schedule 3 presentation. Add to your paid up share capital. Sir, reissued sir. Sir, if these shares were reissued, now if these shares were reissued means now reissued shares can be reissued by giving a maximum discount. What is therein? Share forfeiture account. What is therein? Share forfeiture account. Sir, if share forfeiture account lo some balance is there, you can give that balance in the name of what? Discount. The maximum amount of discount shall not exceed the amount of balance in where? Share forfeiture account. Sir, what nonsense you are babbling? No sir, wait. Sir, how much is there in share forfeiture? Per share it is there 6 rupees. Now, the balance in share forfeiture account lo how much is there? 6 rupees. Now, reissue these shares at reissue these shares, imagine at 10 or 8 or 6, 4. These are the 4 scenarios. Sir, I am reissuing these shares at rupees 10 rupees. Okay. Entry. Bank account to debit to equity share capital account. Bank account debit to equity share capital account. I think 1000 shares were there. 1000 into 10, 10,000. Now the balance left in where? Share forfeiture account will be transferred to which account? Share forfeiture account to debit to capital reserve account. How much? I think 6,000, 6,000. I think 6,000, 6,000. Yes, this 6,000. Sir, I reissued at 8 per share. How much I am giving a discount? How much I am giving a discount? Reissue is done at 8 per share. How much is the discount? 2 rupees is discount. Now for section 53, shares cannot be issued at discount, but a reissued share can be issued at discount, that the maximum amount of discount shall not be exceeded by the amount in share forfeiture. Now bank account to debit, how much? 1000 into 8, 8,000. Don't debit discount account, debit share forfeiture. Why I am giving discount? Because I forfeited these shares, forfeited 2,000. Now the equity share capital comes to how much? 10,000. Now the balance in share forfeiture account how much? 4,000 will be transferred to where? Capital reserve entry. Here forfeiture account to debit, balance how much? 6,000 minus 2,000 to capital reserve, how much? 4,000, 4,000. I hope you are getting the clarity. Yes sir. Now come to the next area. Now next one, this time reissue is done at what price? If I am not wrong, 6 rupees. How much is the discount? 4 rupees. Now what is the balance in the share forfeiture? Per share it is 6 rupees. Yes, it is not exceeding 6. Entry. Bank account to debit, how much? 1000 shares into 6, 6,000. Share forfeiture account debit, how much? 1000 into 4, 4,000. 2 equity share capital account, to equity share capital account, how much? 10,000. The balance left in the share forfeiture account how much? It is there 6,000, I used 4,000, balance left in the share forfeiture account is 2,000, will be added to where? Capital reserve. Entry. Share forfeiture account to debit to capital reserve account, how much? 2,000, 2,000. Sir, if the reissue is done at rupees 4 per share, if the reissue is done at rupees 4 per share, the maximum amount in the share forfeiture account I am using for what? Discount. Hence, there is no balance left in share forfeiture account. Then entry will be what? Bank account debit 1000 into 4, 4,000. Share forfeiture account 1000 into 6, 6,000 to equity share capital. There is no balance in where? Share forfeiture account. Are you getting, sir? Hence, entire share forfeiture account is utilized for what? Discount. No balance will went to capital reserve. I hope you are getting the clarity. We can solve some problems on this. Yes sir. Next area, same forfeiture of shares when issued at premium. Forfeiture of shares when issued at premium. Sir, forfeiture of shares when issued at premium, once again 2 scenarios. When premium is collected, when premium is collected, premium is not collected. Come to the first scenario when premium is collected. When premium is collected. When premium not collected. when premium not collected. Yes, sir. Come to the scenario when premium is collected. When premium is collected means, imagine some final call is not making. Yes. Premium is collected means that portion of premium is already there in where? Securities premium. That portion of premium is already there in where, sir? Securities premium. Now, share capital account to debit to the extent of what? Called up. In other words, nominal value of called up. Nominal value of called up. To calls in arrears account. To calls in arrears account. To what is this calls in arrears, sir? When you are debiting your calls in arrears, asking that this is the amount which is collectible from whom? Shareholders, and not collected. What is not collected? Nominal value of called up is not collected. 2. Share forfeiture. What is the share forfeiture? Nominal value of amount collected. Sir, then what happened to that securities premium what you collected? Securities premium what I collected is there in securities premium. Don't take from securities premium, record here. That securities premium what is collected? There in that securities premium itself. Don't bring that securities premium here. Are you getting or not? What I am babbling is, imagine at allotment lo premium is there. So what is the entry you are writing? Equity share allotment account debit to equity share capital to securities premium. That is the entry what you are writing. Equity share allotment to equity share capital to securities premium. When you are collecting that allotment money, what is the entry you are writing? Bank account debit to equity share allotment. So what you are trying to convey, that premium you collected. What? That premium you collected. Fine. Now when those shares you are forfeited, means the amount what you collected, the nominal value of the amount you collected, you are transferring to share forfeiture. That securities premium what you collected, don't take to the share forfeiture. That securities premium may retain in that securities premium only. Are you getting, sir? I hope you are getting the clarity. Now, balance in share forfeiture transfers to where? Transfers to capital reserve. Transfers to capital reserve. Balance in share forfeiture transfers to capital reserve. What happened to that premium what is collected? That is there in the securities premium account. That is there in the securities premium account. I hope you are getting the clarity. That amount what you received under the name of securities premium, don't bring here. That amount what you received under the name of capital, bring to share forfeiture account. Are you getting the clarity? Perfect. Now same old story. What is the same old story? Now the treatment for this share forfeiture depends upon 3 cases. Sir, I cancelled. What I did? I cancelled. Yes, sir. You cancelled? Yes, I cancelled. If you cancelled, then transfer entire amount to where? Transfer entire amount to where? Share forfeiture. No, sir. I retained. No, sir. I retained. First one reissued. Yes. Second one cancelled. Third one retained. Sir, I reissued, I retained, I cancelled. What I reissued, what I retained, what I cancelled? Those shares which were forfeited, those shares which were issued at premium amount also collected, that shares I same treatment what I have did for par. Same treatment, nothing change here. Cancelled. If you cancelled, entire share forfeiture will be transferred to where? Capital reserve. If you cancelled, entire share forfeiture will be transferred to where, sir? Capital reserve. I hope you are getting the clarity. No sir, retained. If you retained, added to your, added to paid up share capital, added to paid up share capital. Perfect. Next, reissued. If you reissued means, then the maximum amount of discount that can be given, the maximum amount of discount that can be allowed on the reissued share shall not exceed balance in share forfeiture. The maximum amount of discount on each share shall not exceed the balance in the share forfeiture account for that share. The maximum amount of discount that can be allowed on that share shall not exceed the amount that is there on the share forfeiture account for that share. Example. Thousand shares were forfeited. Face value 10. Issue price 12. He paid up to first call. Up to first call paid 9 rupees. Final call 3 rupees. Final call 3 rupees. Entry sir. Entry share capital account to debit. What? Share capital account to debit. How much is share capital account debit? 1000 into how much? 10, which is 10,000. This amount is not my capital. I am forfeiting, cancel from my capital also. 2. Calls in arrears. How much is my calls in arrears account? This 1000 shares into 3 rupees I wrote each final call. When I am not collecting at the time of receipt, I wrote bank account debit, calls in arrears account debit I wrote. How much? 3, which is 3000. Cancel it. 2. Balance how much? Balance share forfeiture. How much? 7000. Means per share how much you are there? 7 rupees is there to the tune of 1000 shares. Now the maximum amount of discount that can be allowed for the share which you are reissuing, for the forfeited share what you are reissuing, the maximum amount of discount that can be allowed on a forfeited share which is reissued is 7 rupees. This is the maximum amount that can be given as discount I am referring to. Now I reissued 1000 shares. If I reissued 1000 shares and the reissue price 10 rupees, 8, 6, 3. Now what is the accounting entry? Very good. If I am reissuing at 10, entry bank account debit 2, equity share capital account. How much? 1000 into 10, which is how much? 10,000. 1000 into 10, how much? 10,000. Next. The total balance in share forfeiture account will be transferred to where? Capital reserve. Share forfeiture account debit 2, capital reserve. How much? 10,000, 10,000. I hope you are getting the clarity. Next. Sir, reissued at 8. If you are reissuing at 8 per share, entry bank account to debit 8,000, share forfeiture account to debit 2,000, 2, share capital 10,000. The balance in share forfeiture account how much? Balance in share forfeiture account 7,000 minus 2,000, 5,000 will be transferred to where? Capital reserve. Share forfeiture account to debit to capital reserve account. How much? 5,000, 5,000. Come to the next segment. Sir, reissue at 6 per share. If you reissue at 6 per share, discount is how much? 4. Entry. Bank account to debit. Bank account to debit. How much? 1,000 into 6, which is 6,000. Share forfeiture account to debit. How much? 1,000 into 4, 4,000. 2. Share capital account, equity share capital account. How much? 10,000. And balance left in share forfeiture, how much? Balance left in the share forfeiture account, 7,000 is the balance minus 4,000. Balance left in share forfeiture account is 3,000. Share forfeiture account to debit to capital reserve, 3,000, 3,000. I hope you are getting the clarity. Next one, sir. Sir, next one is the reissue is done at 3 rupees per share. If your reissue is done at 3 rupees per share, entry. Cash account to debit 3,000. Share forfeiture account to debit 7,000. To equity share capital 10,000. No balance in share forfeiture account, hence nothing will be transferred to where? Share forfeiture account. I hope you are getting the clarity. Sometimes to twist you, they will tell, up to this okay, any doubt please ask me. Please make a record of it. Please make a record of it. Any doubt please ask me. Yes, sir. Sometime to twist you, they will tell what? Not twist, that is the general scenario. Out of 1,000 shares forfeited in our example, lo, 500 shares reissued, 500 shares reissued, 500 shares retained, 500 shares retained. Then per share how much is the forfeiture? 7 rupees is there. Per share how much you are there? 7 rupees is there. Now this is retained, means 500 into 7, 3,500 will be added to where? Will be added to paid up share capital, and this 3,500 can be adjusted against if any discount is there. No such discount is there, then entire 3,500 will be added to capital reserve. No sir, I utilized 2,000 from here. Now balance amount how much? 1,500 will be added to where? Capital reserve. That's how it works. I hope you are getting the clarity. Next. Sir, up to this what I covered? Now I covered issued at premium when premium is collected. Now last segment. When premium is not collected. When premium is not collected. Premium raised but not collected. That's what that meaning. What is that meaning? Sir, premium is there in first call. Imagine. Or in second call. Okay. Example. That premium is not collected. Now, calls in arrears lo, calls in arrears account comprising of securities premium. Calls in arrears account comprising of securities premium. What is this calls in arrears comprising of securities premium? face value 10, issue price 12, first call is 5 rupees, final call is 3 rupees. In this first call of 5 lo, premium 2 rupees is there. Now a shareholder holding 1000 shares, face value 10, issue price 12. Now first call, FC means first call 5. In that first call lo, premium includes 2 rupees. When shareholder holding 1000 shares is not paying the first call account, what is the entry I will write? Bank account debit to all other shareholders except this 1000. Calls in arrears account. This 1000 shareholders who is not paying money into securities premium, I hope you are getting the clarity. Calls in arrears, which is 1000 into, I will write along with securities premium plus nominal value, to equity share first call, First entry what I wrote? Equity share first call account debit to equity share capital to securities premium I wrote. Initial, before this entry I wrote equity share first call to equity share capital to securities premium. When I am collecting bank account debit, calls in arrears, this calls in arrears includes nominal value plus securities premium. Now when you are cancelling that asset calls in arrears, also cancel what? Securities premium. So what I want to tell, equity share capital, how much? 1000 shares into always my face value. Next, securities premium which is not collected, cancel that securities premium which will not collect, into 1000 shares into 2. Here how much? 10,000. Here how much? 2,000. 2. Assuming I also made final call. 2. Calls in arrears. How much? 5 rupees plus 3 rupees. Total 8,000. 2. Share forfeiture account. How much? So for how much I paid? 5 plus 3, 8 not paid, 4 rupees I paid. 4 rupees into 1000, which comes to 4,000. Once again I am telling sir, when premium amount is not collected, when I am writing a due entry, what is the entry I passed? Equity share first call, or it may be equity share final call to equity share capital to securities premium I wrote. Means equity share first call or final call I also include what? Securities premium. When I am writing receipt entry, bank account debit, calls in arrears, this calls in arrears what I am writing? This calls in arrears includes what? This calls in arrears also includes the securities premium which is not collected. Now when these shares were forfeited, unnecessarily in this calls in arrears securities premium is there, cancel that portion of securities premium. Cancel that portion of securities premium and also cancel what? Calls in arrears, and also cancel what? Calls in arrears. I hope you are getting the clarity. Now, sir, what is the accounting treatment with this share forfeiture? This share forfeiture, same old story. Retained, cancelled, reissued. Sir, cancelled, entire amount in the share forfeiture transfers to capital reserve. Retained, entire amount in the share forfeiture added to paid up share capital. Reissued, then check whether discount is there. Yes, discount is there. The maximum amount of discount that can be allowed in this reissued share is to the extent of share forfeiture balance. On that share, balance left any will be transferred from after the reissue from share forfeiture to capital reserve. I hope you are getting the clarity. Yes, sir. Give journal entries. Yes, give journal entries. Now, yes sir, we have some discussion relating to how to pass the journal entries on these aspects. Very good sir. Now, X Limited forfeited 100 equity shares of 10 each held by RAM on 15th December 2020 for non-payment of first call of rupees 2 and the final call of rupees 3. Yes sir. Yes. Yes sir. X Limited forfeited 100 equity shares of 10 each held by RAM. Who held these shares? RAM held these shares on 15th December 2020 for non-payment. Why we are forfeiting? For non-payment of first call of rupees 2 and final call of rupees 3 per share. Now, these shares are reissued. They are asking you to pass the journal entries for forfeiture and reissue. So, journal entry for forfeiture. Equity share capital account debit. How many shares? 100 into face value how much? 10. 10 each held by RAM and non-payment of first call and final call. First call is 2, final call is 3. Then what is application and allotment? Application and allotment together is 5. How you know? First call is 2, final call is 3, then application and allotment is 5. Very good sir. Now, equity share capital account debit. How many shares? 100 shares. How much you called so far? 10. How you know? Non-payment of first call and final call. When they will make a non-payment? When you are make the first call and final call. Next. Equity share capital 100 into 10,000 to 2. Either if you are opening separate account for calls in arrears, then calls in arrears will come. Or if you are routing through, if you are not opening calls in arrears, then equity share first call to equity share final call. How much first call? First call is 100 into 2 if I am not wrong. Final call 100 into 3 if I am not wrong. 100 into 3. This comes to how much? 200. This comes to how much? 300. 2. Share forfeiture. To share forfeiture account. How much this is? 100 shares paid 5 rupees. Implied information. They are not telling you paid 5. But non-payment of what and what? First call and final call means you made payment of what and what? Application and allotment. How much? 500. I hope you are getting the clarity. Equity share capital account debit to equity share first call to equity share final call to share forfeiture. Next. Now, alternative entry can also be possible. Alternative entry is equity share capital account to debit. How many shares? 100 into 10. How much? 1000. To equity, in other words, to calls in arrears. To calls in arrears. How many? 100 equity shares. He is not paying how much? 2 rupees. And he is not paying 3. How much? 500. 2 share per feature. How much? 500. To share per feature 500. Any entries you can pass, but you have to provide one note if you are passing this entry. Calls in arrears account is not opened for record your calls in arrears. The calls in arrears is there in where account? Which account? Equity share first call and final call respectively. Next, reissue entry. And these shares are reissued at a discount of 3.5 and I reissued these shares at 6.5. Bank account debit. How many shares? 100 into 6.5, 650. Bank how much? 100 into 6.5, 650. Next, share for feature account debit. How much? 100 into 3.5, 350. 2 equity share capital. How much? 1000. One more entry. Share for feature account debit. 2 capital reserve account. How much is share for feature balance? 500 is there. 100 into 5. How much utilized? 350. How much still balance? 150. Now, that 150 will be taken in your capital reserve. I hope you are getting the clarity. This is the entry for reissue. Reissue there is no alternative 1 and alternative 2. Reissue entry is this, and you can pass any one, nothing wrong. Don't pass 2 because it is waste of time. Anyhow, you will not get any additional marks. Just because I know I am telling, any entry is fine. I hope you are getting the clarity for this. Come to the next one. X Limited forfeited 200 equity shares of 10 each, issued at a premium of 5, held by Mothuram on 15th December 2020. For non-payment of the final call of rupees 3, these shares were reissued to Loknath on 25th December at a discount of 4 per share. What they are telling, sir? X Limited forfeited 200 equity shares of rupees 10 each, issued at a premium of 5 per share. 10 plus 5, 15. 10 plus 5 how much? 15. What is this 15? Issue price is 15. Okay. And if the question is silent, always premium is there at which call? Premium is there in allotment. And this guy who called Mothuram, he is not making final call. If he is not making final call means premium is there in allotment, allotment already received. Matlab premium is already received. Fine. Entry. Equity share capital account debit. How many shares? 200 shares. How much? 10. 2000. 2 equity share final call, or you can also write calls in arrears. How much? 200 shares into 200 shares into non-payment of final call 3, which comes to 600. So, how much he paid? that how much he paid will be there in the share forfeiture account, that is 200 into total is 10, final call is how much? 3, means he paid nominal value how much? Into 7, or you can also write this is a misbalancing figure. Are you getting, sir? Even though he paid, that Mr. Motiram paid securities premium of rupees 5, but that is already collected, hence don't bring that securities premium which is already collected to share forfeiture account. Don't bring that amount into share forfeiture account. I hope you are getting the clarity. Next. This share forfeiture 200 shares into is what? Nominal value how much he paid. He paid, except final call he paid nominal value, that is 7. That is the reason I took 1400. I hope you are getting the clarity. Done. These shares are issued at a discount of 4 means bank account debit how many shares? 200 into 6, 1200. Next. Use share forfeiture for discount. How much? 200 into 4. Next. 2. Equity share capital. What is the balance in share forfeiture account? 1400. How much you utilized for discount? 800. What is the balance left? 600. That 600 will be transferred to where? Capital reserve. Share forfeiture account debit to capital reserve account 600. Share forfeiture to capital reserve 600. I hope you are getting the clarity. The premium amount what is already collected, don't take that amount into where? Share forfeiture. The balance amount what he paid, which will be taken in where? Share forfeiture. Come to the third one. Mr. Long, who was the holder of 2000 preference shares. Mr. Long, who was the holder of 2000 preference shares of 100 each, on which 75 has been called up. How much is called so far is 75 only, and could not pay his dues on allotment and first call of 25 per share, means on allotment it is 25 not paid, on first call it is 25 not paid. That is the meaning of each. Are you getting, sir? Mr. Long, who was the holder of 2000 preference shares of 100 each, on which 75 per share has been called up, could not pay his dues on allotment 25 and first call 25, means application how much? 75 per share called up, 25 allotment, 25 first call, and application is 25. Application is 25. Very good. The directors forfeited the above shares and reissued 1500 of such shares to Mr. Short at 65 per share, paid up as 75 per share. 65 per share is paid up and I am making it as 75 paid up, meaning to say I am giving discount of 10 rupees. Okay, reissue part we can see later. Come to the forfeiture part. preference share capital. How much? 2000 shares into 75 only called up so far. Preference share capital 75 only called up so far. 2000 into 75. 1,50,000. 2. Preference share allotment. How much? 2000 into 25. 2. Preference share first call or final call, whatever it may be. First call. How much? 2000 into 25. 2. How much is received? That amount received will be taken to the share forfeiture account. That is 2000 into 25. What is this? Application money received. Amount, nominal value of the amount received and which has not to be returned back. Nominal value of the money received which is not to be returned back will be transferred to share forfeiture account. I hope you are getting the clarity. Now, this is 50,000. This is 50,000. This is 50,000. This is 50,000. I hope you are getting the clarity. Next one. These shares were reissued, I guess. Yes, sir, these shares are reissued. Sir, bank account to debit. How many shares? 1500 shares were reissued at 16.5 into 65, which comes to how much? 97,500. And share forfeiture account. Use the discount with the help of share forfeiture. 1500 into 10. 15,000. 2. Preference share capital. How much? 1500 into 75. 1,12,500. 1,12,500. I hope you are getting the clarity. Now, come to the share forfeiture. Share forfeiture account lo you are having 50,000 and this 50,000 belongs to 1500 shares and 500 shares. This 50,000 divided by 2000 means per share it is 25. Per share it is 25. 25 into 1500 which is 37,500 and which is 12,500. And what about this 12,500? Question is silent, question is not telling anything whether it is cancelled or reissued. I don't want to bother about the 12,500. My focus is on this 37,500 which is belongs to 1500 shares. How much I utilized? 15,000. Balance left how much? 22,500. That 22,500 will be transferred from share forfeiture account debit 37,500 minus how much utilized? To capital reserve account 22,500, 22,500. Or you can also think in this way. On this 1500 shares, 25 is share forfeiture. Per share it is how much? 25. Right. How much utilized for discount? 10. How much is reissued? 1500. Now 1500 into 15, which is 22,500. Directly transfer this. 1500 into 15. 1500 into 15. Directly you will get this answer. 1500 into 15. Why 1500? That is the shares what you have reissued. And how that 15 came? Per share 25 is there. That is nothing but application money received, which is forfeited. 25. Now 10 rupees evaporated in the name of discount. Balance 15. So 1500 into 15. Perfect. I hope you are getting the clarity. And you can also write here in place of preferential allotment and preferential first call, you can also directly write calls in arrears. You can also directly write calls in arrears. I hope you are getting the clarity. If you want to write, make it fast. This is not required to write in the exam. Just for your understanding sake, I am showing this. Exam lo directly write this entry and this entry and this entry. More than enough. And in place these two, you can also directly write calls in arrears. In place of these two, you can also write calls in arrears. Yes, sir. Come to the fourth one. Come to the fifth one, then we can move to the fourth back. Yes, sir. A holds 2000 shares of 10 each, on which he paid 2 on application money. B holds 400 shares of 10 each, on which he paid 2 per share as application money and 3 per share as allotment money. C holds 3000 shares of rupees 10 each. He has paid 2 on application, 3 on allotment, 3 on first call. They all failed to pay their arrears on the second and final call. They all failed to pay their arrears on second and final call. Why they are telling means of rupees 2 per share means these shares are not forfeited immediately after that call is made. Forfeiture can be made immediately after the call is done, or they can wait until the final call and they can forfeit. For example, first call not paid. 2 options. Wait for final call, even if final call is not paid, forfeit, or even if the first call not paid, wait for given notice, not paid, forfeit. Are you getting? Now A holds how many shares? 2000 shares of rupees how much? 10 each. A holds how many shares? 2000 shares of rupees how much? 10 each. On which he has paid how much? On which he has paid 2 on application money. Okay. And they are not telling anything. They paid allotment, all this stuff. Okay. B holds 4000 shares of rupees 10 each, on which he has paid 2 per share as application money, 3 per share as allotment money. Okay. C holds 3000 shares of rupees 10 each, on which has paid 2 on application, 3 on allotment, 3 on first call. They all failed to pay their arrears on second and final call of rupees 2 per share. They all failed to make second and final call 2 per share, and the directors forfeited their shares. Extraordinary. What is they telling? A is holding how many shares? 2000. B is holding how many shares? 4000. C is holding how many shares? 3000. A only paid what? Application. B only paid what? Application and allotment. C paid what? Application, allotment, first call. And they all failed to pay their arrears on the second call, second and final call. They all failed to pay their arrears on. See, they all failed to pay their arrears. What is this arrears? For A, allotment, first call, second call. That is arrears. For B, first call and final call. For C, second call. They all failed to pay their arrears. Arrears, what is that arrears? A, only he paid application, allotment, first call, final call not paid. B, only paid application, allotment, first call, final call not paid. C, only paid application, allotment, first call, final call not paid. On the second and final call 2 per share, directors forfeited their shares. The shares were reissued subsequently for 12 per share, fully paid up. Reissue at 12. Okay. Very good. Now, come to the E. Equity shares. Yes, they are telling shares. Yes. Share means take either equity share or preference share. They are not telling specifically either equity or preference. A hold 2000 shares of rupees 10 each on which you paid application money. Shares. Okay, these shares. Okay. Treat this as equity shares, no problem. Or you can also write share capital. You can also write share capital as question is silent. Or you can assume these shares are equity shares and you can write equity share. I assume these shares are equity shares. Equity share capital. How many shares? 2, 2, 4, 3. 2, 4, 3. 9,000 into 10, 90,000. 2. Equity share allotment. 2,000 into allotment, how much he is not making payment? That is application to 3 allotment, application to 3 allotment, 2, 3, 3, 2, correct only. Application 2, next. Allotment 3, next. 3 first call, 2 final call. 3 first call, 2 final call, perfect. Equity share capital 9,000 into 10, 90,000. 2 equity share allotment, how much? 2,000 into, how much is the allotment? 3, which comes to how much? 6,000. I hope you are getting the clarity. Next, equity share first call, how much? How much is first call? First call, who are all not paying? Mr. A and Mr. B, which is total how many shares? 500, which is 2,000 plus 2,000 plus 4,000, total 6,000 shares. Are you getting or not? First call, who are all not making payment? This guy called A and this one more guy called B. A is not paying how many shares? On 2,000, B on 4,000, and 3 rupees is what? First call, if I am not wrong. Yes, 18,000. 2 equity share final call. How much is equity share final call? Total 4 plus 3 plus 3, 9,000 shares. These guys are not paying 18,000. Final call rupees 2. 2 share forfeiture account. Share forfeiture account comes to how much? Mr. A holding 2,000 shares paid application of rupees 2 plus Mr. A holding 2,000 shares paid application of rupees 2. Next, Mr. B holding 4,000 shares paid application plus allotment, which is 5. Next, one more guy holding 3,000 shares paid application allotment first call. I hope you are getting the clarity. 2,000 into 2, 4,000, 20 and 24. 24,000, 24,000, 20,000 plus 4,000, which is 48. Yes. 18 plus 8, how much? 18 plus 18, 36 plus 6, 42 plus 48, 90. Sir, equity share capital, this is what? 9,000 shares. I raised a capital of rupees 10 each, which is 90,000. So, equity share allotment. In this allotment, only one idiot is there holding 2,000 shares, not paying 3. If calls in arrears account is not opened, then equity share allotment account will show a debit balance to the tune of 6,000. Once forfeiture is done, he will not make payment, hence cancel that 6,000. Equity share first call. Equity share first call comes to how much? 6,000 into 3, 18,000. Equity share final call, 9,000 into 2, 18,000. Why equity share first call? 4,000, one idiot. This idiot 2,000, total 6,000. Both are not paying what call? First call. That 4,000 idiot paid application, B paid application allotment, but first call is not paid. Right? A not even paying allotment and not even paying first call. Final call is not paid by A, B, C, 2,000, 4,000, 3,000. Total 9,000 into 2, 18,000. 2. Share forfeiture account. 2. Share forfeiture account. 2,000 into 2 plus 4,000 into 5 plus 3,000 into 8. 48,000. Done. I hope you are getting the clarity. Now these shares are reissued. How many shares? All shares? All. The shares were reissued, 12 per share, fully paid up. Means they are issuing at securities premium. Okay. No discount. Entry. Bank account to debit 9,000 shares into how much you are collecting? 12. Yes. Yes. 1,08,000 to equity share capital 90,000 to securities premium 18,000. Yes, I hope you are getting the clarity. Done. Next. Next, sir. Balance, how much is there in share forfeiture? 48. Throw it on the face of. Share forfeiture account debit, capital reserve. How much? 48. Done. Next. D part is done. Please make it fast. Sir, if you want to alternative entry, in place of these three, 42,000, write calls in arrears. Instead of writing these three, directly write calls in arrears 42,000. If you are opening separate account, calls in arrears account. If you are opening a separate account for calls in arrears. Please make it fast. Any doubt, please ask me. Please make it fast. Please make it fast. Please make it fast. Next. Then, yes, come to the next one, that is D part. Yes, sir. Mr. Shemi has applied for 1000 shares of the company XYZ Limited, paying application money 2 per share, but has been allotted only 600 shares. But he has been allotted only 600 shares. Mr. Semi has applied for 1000 shares of the company XYZ Limited, paying application money 2 per share, but has been allotted only 600 shares. Okay. These shares having face value 10, premium 2 per share, which is on allotment, the premium is there on allotment, and then final call it is 5. Very good, sir. Application 2, allotment 5, final call 5, premium is there on allotment. Perfect. Mr. Shemi does not pay allotment money and final call. This guy called Semi has not paid allotment money and also not paid final call, and his shares are forfeited. Perfect. Now, guy called, what is his name? Yes, Shemi applied for 1000 shares and by paying an application money 2 per share, but has been allotted only 600 shares, and question law they are not telling that excess application money paid on, that excess application money means that excess applications, that 400 applications were excess applications into 2, that 800 is not refunded. 400 into 2. If it is refunded, question law expressly they will tell 400 into 2, 800 is refunded, but the question is silent about that 400 into 2. Now, what capital? Just they are telling shares, right? Take it as equity shares. Equity share capital. How much? Equity share capital. I think how many shares were there? 600. That is only I need to cancel 600 into 10. That is 6000. 2. Equity share capital 600 into 10, 6002. Equity share allotment. Actually, this 600 into 5 is due, if I am not wrong. Now cancel that. Securities premium. How much? 600 into 2, that is 1200. Equity share allotment, how many shares? 6000 into 5, but minus already 800 is adjusted. 600 into 5, which is 3000, minus 800 is adjusted, which you will get how much? 2200. What is this? Equity share allotment. 2. Equity share call. How much? 6000 into, if I am not wrong, final call 5 into 5, which is 3000. 2. Share forfeiture. How much is share forfeiture? How much we are forfeiting? How much is our gain? On 1000 they paid 2, which is 2000, that is our gain. I hope you are getting the clarity. Everyone. For these two, you can also write directly call scenarios. These two, you can also write call scenarios. To weak share allotment, to equity share solve, you can also directly take call in areas. I hope you are getting the clarity. Next. These shares were reissued to who? Sarita at the rate of 11 per share. At the rate of 11 per share. Bank account debit. How many shares? 600 into 11. 2. Equity share capital. 2. Securities premium. 2. Securities premium. Now the balance, entire balance in share forfeiture will be taken to capital reserve. Entire balance in share forfeiture will be taken to capital reserve. How much? 2000. Yes sir, copy first. Copy first. If you are having any doubt, please ask me. Important area sir, high chances of asking in the exam. Concept, if you are having concept, then you can easily answer. Don't mug up anything, please learn conceptually. Done. Yes sir, done. Yes, 400 shares, okay. Sir, this is correct if all 600 shares were reissued, but it is not 600 shares what is reissued, it is only 400 shares what is reissued. This answer is correct when they have reissued how many shares? 400, right? 600, but how many they are reissued? Only 400. Entry. Bank account to debit, how much? 400 into 11. 2. Equity share capital, how much? 400 into 10, how much? 4000. 2. Securities premium, how much? 400 into 1. Next. Now the balance in share forfeiture account, how much is there? 2000 if I am not wrong. Yes, 2000. This 2000 is for how many shares? For 600 shares. Now for 100 shares, now 2000 divided by 600, if I am not wrong, 3.33333333 per share. Now how many shares were reissued? 400. 13 point share forfeiture account to debit to capital reserve account. How much? 3.3333 into 400, which is 0.33. Sir, what about balance amount? Balance amount is 666.67. Question is silent. Don't assume whether cancel or neither reissued. Just keep aside. I hope you are getting the clarity. Now balance left in share forfeiture account 666.67. Done. Yes sir, this is correct when you have reissued entire 600, but question they are telling only 400 were reissued. Hence you are supposed to be proportionally, you have to be transfer that share forfeiture. I hope you are getting the clarity. Yes, perfect. Yes, this problem is done. Yes. Yes. Yes, sir. This is the answer, suggested answer, just check. Done, 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 done. Even alternate also I said done. Then this is also written. Perfect. And give the dates column. This is on 15th December and this is on 25th December. Give the dates column. Next. Same alternative is there. Yes. Yes. Perfect. Perfect. Check with the third one. Yes. Yes. N. Perfect, sir. Perfect. 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 Yes. Per share it is 25. 10. Balance left 15. That's how it works. Come to the just now we covered. Done. 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 This excess 800 is excess money received on application. Hence, this is 2200. 6E. Done, 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 done. Yes, done. And this is also done. Everything I covered. I hope you are getting the clarity. I hope you are getting the clarity. Yes, sir. Let's move to the one more problem. Yes, sir. Come to the one more problem, CRD 7. Yes, easy problem only. Just go through it. Beautiful Company Limited issued 30,000 equity shares, 10 each, payable as 3 on application. Very good. And 5 per share including premium, which is of 2, and 4 per share on call. Means what is the pattern? 3, 5, 4. What is this 3? Application. Okay. What is this 5? This is allotment. What is this 4? This is first call. Application, allotment, first call. Now this 5 is inclusive of what? 2. Premium. Then 3 plus 3 plus 4, which is face value 10, issue price 12. Are getting? Perfect. 30,000. Perfect. Money due on all the shares are fully received. Very good. Except Ram holding 500 shares failed to pay the allotment and call money. Sham holding 1000 shares failed to pay the call money. All this. Okay. Forget about reissue. First write for future entry. Yes. Beautiful Company Limited issued 30,000 equity shares. They are asking you to pass the necessary journal entries. Okay. Payable 3 per share on application. Write the entry. In the books of Beautiful in the books of Beautiful. Yes. Entry, sir. Entry bank account debit to equity share application account. What is this bank account debit to equity share application account? How many shares in the books of Beautiful Limited? 30,000, and the patron 354 into 3, 90,000, 90,000. Bank account debit to equity share application. Next one, equity share application account to debit to equity share capital. How much? 90,000, 90,000. I hope you are getting the clarity. Next entry is what? Next entry is allotment due entry. Equity share allotment account to debit to equity share capital to securities premium. Equity share allotment, how many shares? 30,000 into 5. How much? 1,50,000. Equity share capital 30,000 into 3, if I am not wrong, 90. To securities premium. I hope up to this you are having clarity. This is normal entry. Now one of our shareholder name E, yes, name Ram, holding 500 shares, failed to pay the allotment and call money. Very good. He is not paying allotment and call money. Entry. Bank account to debit. He is holding 1500 shares. 500 shares, 500 shares, 500 shares. Means 29,500 into 29,500 into, I am getting 50 rupees. 1 lakh, 14 lakhs, 1 lakh, then this is 30,000 into 5 allotment, then this is 5, 1,47,000, 1,47,500. Perfect. Next. Bank account debit 29,500 into 5, how much? 1,47,500. Calls in arrears account to debit, how much? 500 into 5, which comes to how much? 2,500. Perfect. 2. Equity share allotment account, how much? 1,50,000. Perfect. Next, 500 failed to pay the allotment and call money. Shyam holding 1000 shares failed to pay the call money. Okay. Next entry. Equity share final call account to debit to equity share capital. How much? How much means Equity share final call, it is, even though that idiot is not making final call, even though that idiot is not making that allotment call, call is made for 30,000 shares. 30,000 shares into per share, matlab final call, if I am not wrong, 4 rupees, if I am not wrong. Yes, 4. 1,20,000, 1,20,000. I hope you are getting the clarity. Next one, bank account debit, you are getting only on 28,500 into 4. 28,500 into 4, 1,14,000. This is what you are getting in the name of bank. Next one is calls in arrears. How much? 1,500 into 1,500 shares into final call, 100 shares of sham, 500 ram, both are not paying. How much? 1,500 into 4, if I am not wrong, 6,000. 1,500 into 4, 6,000. 2. Equity share final call. How much? 1,20,000. Done. Here ends the matter. Next one. Next. Now pass entry for feature. All 1,500 shares were forfeited. When? After the final call. How you know? Because after final call only this I came to the conclusion he is not making what? Final call. Read this line. All these shares were subscribed, money due on, all shares were fully received except Ram holding 500, failed to pay the allotment and call money. Means after allotment I didn't make any forfeiture, after call failed to make payment, then I undergone a forfeiture. Next. Equity share capital. How many shares? 1,500 into 10. 15,000. I hope you are getting the clarity. Next one. Securities premium. How much? Securities premium account to debit on 500 shares into, if I am not wrong, this is in what pattern they are issuing? 2. Which comes to 1,000. 2. Cancel that calls in arrears. What is that calls in arrears? 500 shares into 5, 1,000 shares into 4 plus 500 shares into 4. If I am not wrong, this is the calls in arrears balance, which is 2,500 plus 4,000 plus 2,000, which is 8,500. Go and check. 2,500 plus 6,000, 8,500. 8,500. How that 8,500 came? 500 shares into allotment 5 failed by Ram. 1,000 shares into 4, first call failed by Shyam. And same Ram is also failed, first call 500 into 4. Total comes to 8,500. 2. Share per feature. How many shares? How many shares means on this 1500 shares, don't write this calculation, just I am showing. Directly you can take this calls in arrears from the calls in arrears account also. Share forfeiture 1500 shares into Ram on 100, I mean on 500 he paid application 3. 1500 into 3, what is this? Application money paid by both these guys. Allotment money paid by only Shyam 1000 into, and you want to take only face value, this is not allowed. 1000 into 3 if I am not wrong, yes, 5 minus 3, 3. Total, this is 3000, this is 4500, total 7500. Perfect. If you directly take this amount also, you will get 7500. 1500 shares, 1000 plus 500, 1000 relating to whom? Shyam. 500 relating to whom? Ram. Both paid what? Application money, where company will not make any refund for them. Even that forfeited, yes, company will not give even any rupee for them. Next, 1000 shares. This is what? Allotment money paid by Shyam only. Why the 2 rupees premium you are not considering? Premium already taken by whom? Securities premium, and that is evaporated. Don't bring back that securities premium what is paid by the shareholder after forfeiture to the share forfeiture account. I hope you are getting the clarity. Equity share capital, securities premium to calls in arrears to share forfeiture account. Done. Next. All these shares forfeited 1250 includes whole of Ram shares were subsequently reissued to Jadu as fully paid at a discount of 2. 1500 shares comprising of Ram 500, Shyam 1000. Now all Ram shares were reissued. First of all, 3 rupees is there, Ram's share forfeiture. Here 6 rupees is there. Now total 7500 share forfeiture. Total 7000 share forfeiture. In this 1500 shares, 500 Ram shares and 1000 Shyam shares. Now all Ram shares were reissued and Shyam shares lo how much? 750 only reissued. How you know? How you know? 715 shares only reissued. How you know, sir? How you know only 750 means? Total reissue is only 1250. Total reissue is only 1250. Entry. Bank account to debit 1250 into 8 if I am not wrong. Yes. $10,000. Next one, share forfeiture account. How much? How much you are using for share forfeiture? 2 rupees. Then how much? 5000. It is 2500. 2500 to equity share capital. How much is the equity share capital? 12,500. Perfect, perfect, perfect. Now how much I need to take from where to where? Share forfeiture to capital reserve means total you are having 7,500, 2,500 evaporated, balance left how much? 5,000. In that 5,000 low, 250 shares were not reissued into 6, 250 into 6 how much? This 1500 don't touch. Don't touch that 1500. Balance left how much? 500 into 1. Yes sir, 500 into 1. 750 into 4. How 4? 6 rupees lo 2 evaporated. Balance left how much? 4. I hope you are getting the clarity. This is 3000 and this is 500. Total 3500. Take to where? Capital reserve. How you got that 3500 sir? Sir, in this 7500 lo 2500 evaporated, balance left only 5000. In that 5000 lo 250 shares were not reissued or neither cancelled. 250 per share 6 rupees which is of sham holding. Remove that 1500. Balance left how much? Share forfeiture account to debit to capital reserve account. How much? 3500. 3500. I hope you are getting the clarity. These are the journal entries which you are supposed to pass in the books of Beautiful Limited. Date, particulars, debit, credit. And this you can also show as a working note. This you can show as a working note. Or you can also present in name of a statement. What is that statement? Balance in share forfeiture account. Balance in share forfeiture account. 7500. Total number of shares 1500. In this 1500 lo, in this 1500, RAM shares were 500, stamp shares were 1000. RAM shares were 500, stamp is 1000. Share forfeiture balance for RAM 500 into 2000. Share forfeiture for sham 1000 into 6, 6000. 500 into 3, 1000 into 6. Thousand into 6, which he paid how much? 6000. 500 into 3, 1500. Total 7500. RAM shares fully issued at a discount of 2. Reduce the 2. Balance 1 rupee there in share forfeiture. Stamp 250 not at all issued. 250 into 6, 1050. Keep aside. In a balance share forfeiture lo, you utilize 2500. Balance throw it on the face of share forfeiture. Balance throw it on the face of capital reserve. Now balance sheet lo they are asking only notes to accounts part. Rest everything you are not having any information. Yes sir. 90, 90, done, done. They are not taking to calls in arrears account. They are directly taking to the, they are directly storing that amount in the equity share allotment. Fine, no issues. Yes, we have transferred everywhere to calls in arrears account. Done. Next, yes, done. Yes, we have took 8500 if I am not wrong. Next, bank, done. Perfect, perfect. Capital reserve 3500. Yes. Cash and cash equivalent 3,61,500. How that 3,61,500? 90, 1,47,500, 90,000 plus 1,47,500 plus 1,14,000 plus 10,000, that is 3,61,500. Perfect. Next, reverse and surplus. $29,500 at the rate of 2, which is 59,000, which is collected. Capital reserve total 62,500. Total 62,500. Next, share capital 2,99,000. Authorized capital, forget about that. Issued share capital, subscribed, called up, paid up 29,750 plus forfeited shares, total 2,99,000. I said no, which is not reissued will be added to the subscribed and paid up capital. Yes, 29,750 and this balance total 2,99,000 and which will be 2,99,000. I hope you are getting the clarity. Yes, yes, balance sheet you are supposed to draw and you are supposed to write the notes to accounts. Yes, 3,61,500. This is for bank. That's how you got this amount, and that's how you got your securities premium. Matlab both reserves and surplus. And authorized capital, we don't know how many authorized shares. Issued share capital 30,000 each shares of 10 each, 3 lakhs. Subscribed, called up and paid up 29,750 into 10. How this 29,750 came? 30,000 minus 1,500 plus 1,250. What is this 1,250? Reissue. What is this 1,500? Call scenarios. Anyhow, both taking place in the same year, directly take 29,750. Done. Done. Yes, sir. Moving to one more area. When shares are issued for a consideration other than cash. When shares are issued for a consideration other than cash. Under 4 circumstances, a company can issue shares for a consideration other than cash. First one, two, promoters. 2, vendor for fixed asset. 2, underwriters. Section 54, sweat equity shares. Sweat equity shares issued to employees or board of directors. Sweat equity shares issued to employees or board of directors at a price less than its face value. At a price less than its face value, sometimes even it's less than. These are the shares which are issued to its employees at free of cost. They are not charging anything. They are issuing at a free of cost. Next, when you have issued shares to the promoter, you are supposed to be debit your goodwill account. Goodwill account to debit. 2, equity share capital, equity share capital. Why to debit goodwill? Because for the services what this promoter is rendering, because of the services what promoter is rendering, now impliedly I am getting profit all these 1, 2, 3, 4, 5 years. He is a sole proprietor, converted his business into what? A company. Now customers are coming into this business not as a company by looking into that sole proprietor, hence some shares are allotted this to this proprietor, hence debit your goodwill, some inbuilt profit you are getting because of conversion of the sole proprietorship into company. Because of this we are allotting some shares, goodwill account debit to equity share capital. Second one, purchase of fixed asset entry. Fixed asset is an asset, asset balance increasing, fixed asset account debit to vendor of fixed asset. How much? The value of fixed asset 1 lakh. Example, creditor or liability or vendor for this fixed asset. Now I am not making cash payment, I am allotting shares. What I am allotting, sir? I am allotting shares. Entry, vendor of fixed asset account to debit, vendor of fixed asset account to debit to equity share capital account. How much? 1 lakh, 1 lakh. Come to the third area. Sir, what if the shares are issued at a premium? For example, now 10,000 shares are issued at 10 rupees each. Imagine 5,000 shares were issued at issue price of 20 per share. Entry, vendor of fixed asset account to debit to equity share capital to securities premium. This is for 1 lakh, this is for 50,000 and securities premium is for 50,000. Vendor of fixed asset is for 1 lakh and equity share capital 50 and securities premium is 50,000. I hope you are getting the clarity. Next, this is 5,000 into 10, 5,000 into 10. Next, come to the third one. What is this third one, sir? This third one is for underwriters. Company issue any shares to the underwriters. For who is an underwriter? Underwriter is a person who undertakes to subscribe for the shares in the shortfall of the subscription by the public. I issued 1 lakh shares, public subscribed for only 60,000, balance 40,000 shares will be subscribed by whom? By the underwriter. Why, sir? Because minimum subscription is there. Underwriters contract is a contract where the underwriters will agree for, in case of shortfall of these shares by the public, underwriters will subscribe these shares. So we are supposed to pay a commission known as underwriters commission, a commission known as underwriters commission. Entry, underwriters commission expense, nominal account debit, account to debit to liability, underwriters to liability, underwriters to the extent of commission. Example, some 1 lakh. and now I am allotting what for them? Equity shares for them. Entry. Underwriter's account to debit to equity share capital account. If I am issuing at securities premium means to securities premium account. How much? 1 lakh. For example, it is 50 means 50,000. Securities premium 50,000. I hope you are getting the clarity. Right? Yes. When the shares are allotted as a sweat equity shares to whom? As per section 54, to the employees or board of directors. To the employees or board of directors for what? For providing technical know-how or technology or goodwill. So, entry goodwill or any technology or any technical know-how or any patent to equity share capital account. To equity share capital account. Goodwill, technology, patent account debit to equity share capital account. So, there are 4 ways where a company can issue shares for the consideration other than cash. One is for promoters for the services what they have rendered in terms of incorporating the company, goodwill account debit to share capital, and for underwriters where company allotted shares in lieu of underwriters commission, in lieu of underwriting commission to underwriter. Who is this underwriter? Who will agree for a contract? If I issued for a shares in public issue, minimum 90% should be subscribed by the public. So, if I am having any doubt regarding this issue, then I will go for underwriters and I will go for underwriters. I will have an underwriting agreement. What is this underwriting agreement? In case of shortfall of shares by whom? By public. Now, these underwriters will subscribe for these shares. Now, for that I need to pay some commission. That commission is known as underwriters commission, and that underwriters commission, what is there? Underwriters commission is an expense for me. So, underwriters commission account debit to underwriters and underwriters account debit to equity share capital. Done. Third one, for vendor for fixed asset. Who is this vendor for fixed asset? Sir, I purchased one asset. Entry fixed asset account debit to vendor for fixed asset. Now, for this vendor creditor for fixed asset, I am allotting shares. Vendor for fixed asset account debit to equity share capital. Now, I am allotting sweat equity shares. Entry for these sweat equity shares. Any technical know-how, patent, goodwill account debit to equity share capital. For those employees, some good employees who are contributing some value to our entity in the name of any patent or goodwill or any technical know-how or any technology, I will recognize that asset and I will give some shares for them. I am not paying any cash for that asset acquiring. I am giving some shares to that employees. So, I will write to equity share capital. I hope you are getting the clarity. So, let us see one problem on this. Yes, sir. Come to problem number 8. X company limited was incorporated with an authorized share capital of how much? 90,000 equity shares of rupees 10 each. The company purchased land and building from Y Limited for 4 lakhs payable in fully paid up equity shares of the company. Entry. Company purchased land and building. Entry. Land and building account to debit. And company purchased from Y Limited, if I am not wrong. How much? 4 lakhs. How much? 4 lakhs. Next one, land and building account debit to Y Limited, 4 lakhs. Next one, Y Limited account to debit. How much? 4 lakhs. To equity share capital. How much? 4 lakhs. I hope you are getting the clarity. Land and building to Y limited, Y limited account debit to equity share capital. Next. Company authorized capital is how much? 90,000 equity shares, and they have purchased a land for 4 lakhs payable in fully paid equity shares of the company. Means total 90,000 shares lo 40,000 shares were issued to whom? For this land. The balance shares were issued to the public and fully subscribed and paid for. Okay. Balance how much? Bank account to debit. Balance how many shares? 50,000 into 10. 10 each only, right? Yes, 10 each. 50,000 into 10 how much? 5 lakhs. 2. Equity share capital how much? 5 lakhs. Next one. You can also write 2 entries: bank account debit to equity share application, bank account debit to equity share application, and equity share application to equity share capital. Equity share application to equity share capital. How much? 5 lakhs, 5 lakhs. I hope you are getting the clarity. I hope you are getting the clarity. Now they are asking you to present what? Balance sheet also. And prepare balance sheet. Balance sheet. First one. Equity and liabilities. Inside that equity and liabilities, first one, shareholders funds. Inside that, share capital. Inside that, reserves and surplus. And rest nothing is there, I think. And one more, non-current assets. PPE will be there. Non-current assets, PPE. Inside that PPE lo tangible. What is the tangible? Land and building. How much? If I am not wrong, 4 lakhs. Equity share capital how much? This is a note. This is amount. How much equity share capital? 9 lakhs. Right in the notes column lo, notes, authorized capital. $90,000 equity shares of rupees 10 each, 9 lakhs. Next one, issued, subscribed and paid up. 90,000 equity shares of rupees 10 each, 9 lakhs, out of which 40,000 shares were issued for a consideration other than other than cash, for a consideration other than cash for purchase of land and building, for purchase of land and building. That is how you need to present. Rest everything remains the same. This is notes number 1. Reserves and surplus not there, and tangible assets you will have some 4 lakhs, and you will also have some cash balance which is to the tune of 5 lakhs. Current assets, cash and cash equivalent, 5 lakhs. 5 lakhs. Done. Done. Go and check the answer. Yes. Land and building to Y. Okay. Being purchase of land from Y and Co. Yes. You have to net the narration, sir. Just now I skipped, you know that is the reason. Being land and building purchased from Y and Co. Yes. Y and Co account debit to equity share capital. Done. Bank account debit to equity share application and allotment. Equity share application and allotment to equity share capital. Equity share application and allotment. Equity share application and allotment to equity share capital. Next. Balance sheet. Done. 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 Next. Tangible land and building, balance with bank. I hope you are getting the clarity. Next. Issue of shares for acquiring running business. For acquiring running business. If you acquire any shares for acquiring the business, sir, then you will get assets. Yes, sir, I will get assets. Business means business comprising of what and what? Assets only. Yes. Assets account to debit. Liabilities account to debit. Liabilities will always have credit balance. Assets account debit. Liabilities account. 2. The balance you are paying in the name of equity shares, right? Equity share capital. Equity share capital. Yes, sir. Come to CRD 9. Comprehensive problem. Given star mark, sir. I am not telling they will ask directly, but concept wise, one of the important concept, because we will have some pro rata and how to adjust that pro rata. Fun. Yes, sir. D Limited issued 2 lakh shares. Perfect. Of how much? 100 rupees each at a premium of 20 per share. Very good, sir. Now the nominal value is 100 s, issue price 120, and they are issuing at a premium of 20. Perfect. On application 20, on allotment 50 includes premium. On first call 30, second and final call 20, 20, 30, 20, 50. Perfect. And the premium of 20 rupees is included in allotment. Specifically they are telling, even if they are not specifically telling, if the absence of information where they are not telling specifically where the premium is there, always assume the premium is there in allotment call. Perfect. Applications were received for 3 lakh shares. Very good. Means I received applications for 3 lakh shares and pro rata allotment was made to the applications of 2,40,000 shares. What allotment, sir? Pro rata allotment was made to the applicants of 2,40,000 shares. Pro rata allotment was made to the applicants of 2,40,000. Means what happened to the balance 60,000 shares? In the absence of information, assume that is refunded. excess money received on applications of 2,40,000. They are talking about excess only on this 2,40,000 was employed on account of sum due on allotment as a part of share capital. Perfect, sir. What they are telling, that excess money, okay, I want 2,000 shares I issued and I want to make allotment for 2 lakhs. I received 3 lakh application. In this 3 lakh lo, 2,40,000 is what and 60 is what? 60,000 I have rejected. Next, what about this 2,40,000? In this 2,40,000 lo, pro rata allotment one made, and the excess 40 on this excess 40 applications, this 40,000 into 20 rupees, which comes to 8 lakhs. This 8 lakhs adjusted against allotment. This 8 lakhs adjusted against allotment. That's what they're telling. Employed on account of sum due on allotment, not against premium, against capital. They're telling this is not against, it is not adjusted against premium, this is adjusted against capital. Perfect, sir. Right, they're asking entries and balance sheet if I am not wrong. Show the entries up to this extent. First one, bank account to debit, equity share, application account. Sir, how many shares? 3 lakhs applications I received. If I am not wrong, into 20 rupees I received per application. Right? Yes, sir. How much I collected, sir? 60 lakhs I collected if I am not wrong. Now, being application money received. Next one, sir. In this application lo, in this equity share application, in this equity share application account to debit, how much? 3 lakhs into 20, which is 60 lakhs. 2. How much is form part of my capital? Equity share capital is 2 lakhs into 20, which is 40 lakhs. How much is form part of my allotment, adjusted against allotment? 2. Equity share allotment 40,000 into 20, 8 lakhs. How much is written on their face? How much is amount thrown on their faces? 2. Bank 60,000 into 20, which is 12 lakhs, or you can also write the balance, I mean the difference between total of debit 60 and minus 48, which is your 12 lakhs. I hope you are getting the clarity. What happened so far? Sir, I received applications for 3 lakhs. In that 3 lakhs lo, for 2,40,000 I made pro rata allotment, and that excess, that 40 on excess 40 adjusted against allotment. That's what I made. And the balance on that 60 I refunded on their I thrown on their faces. I hope you are getting the clarity. Perfect. Next one, sir. Equity share allotment. I need to make a allotment due entry. Equity share allotment account to debit. How much is due? If I am not wrong, I think 2 lakhs into How much is allotment, sir? 50 rupees if I am not wrong. Yes, 50 rupees. Yes, 50. I hope you are getting the clarity. Equity share allotment comes to how much, sir? 2 lakhs into 50, which comes to how much? 1 crore. Two, equity share capital. Two, equity share capital account. How much? Equity share capital comes to 2,40,000 shares into, if I am not wrong, 30 rupees. Why 30? The balance 20 is forming part of your securities premium. Means 2 lakhs into 30. This is 30. How much? 60 lakhs. And the balance is what, sir? 2. SP refers to securities premium. 2 lakhs into 20, which is your 40 lakhs. Which is your 40 lakhs. I hope you are getting the clarity. Come to the next one. Come to the next one. Up to this, okay? Next, read the continuing the problem. Yes. E, to whom 400 shares are allotted. Okay. If we are allotting 400 shares to them means, first of all, how many he applied? Sir, in this problem law, we made pro rata allotment. What allotment? Pro rata allotment. What is that pro rata ratio means? On pro rata ratio we allotted. What is the ratio of that pro rata ratio means? Number of shares allotted divided by number of shares applied. Sir, how many shares I allotted? 2 lakh shares I allotted. Sir, how many shares applied? 2 lakh 40. 5 by 6. 5 by 6. If I need to allot 6, if I need to allot 5 shares to you, you need to apply for 6 shares. The extra 1 rupee application money what you paid will be adjusted against your allotment due. I hope you are getting the clarity. If you want 6 shares, you need to, if you want 5 shares, you need to apply for 6 shares. I hope you are getting the clarity. This 5 by 6 is what? 5 is to 6. If you want 5 shares to be allotted, you make application for 6 shares. Now, one guy, he allotted E, to him 400 shares are allotted, means how many shares he applied? 4,000 shares. 4,000 shares is what we applied divided by 5 into 6. I hope you are getting the clarity. Are you getting, sir? 400 is equivalent to what? Is 5. How many? Allotted. And I want into 6. What is this into 6? How many applications you have to make? Are you getting, sir? Now, 800 into 6 comes to how much? 4,800. What is this 4,800? Applications received for 4,000 shares to be allotted. 4,800 divided by 6 into 5. Perfect. 4,000 shares we have allotted to this guy. Are you getting, sir? I already covered about this pro rata allotment, right? Yes. Now tell the entry, sir. What this entry means? A guy named E, to whom we allotted how many shares? 4,000 shares. He is not making next allotment call. He is not making allotment call. Failure to pay the allotment money and subsequent failure to his call, and subsequently is also failing his call. Perfect. Subsequently he is also failing his call. First write entry for next, matlab this receipt of allotment. How much I am getting? Bank account debit. Sir, a guy called E holding 4,000 shares means balance 1,96,000 shares, balance this 1,96,000 guys, only make payment of this allotment into what is the allotment call? 50 rupees, right? In this law, same 1,96,000 guys already paid some extra amount at the time of application only. Paid some extra amount at the time of application only. How much that comes to? Minus. He paid, matlab 8,000 relating to this guy. In that 2,40,000, remove this 8,000 relating to this guy. 2,39,200. These are the guys. Reduce 2 lakhs, which is relating to application. Balance 39,200 into how much they paid? How much they paid? 20 rupees. Are you getting, sir? Means 7,84,000 is already received relating to this 1,96,000 shares. Minus 7,84,000. Once again, I am explaining how this 7,84,000 came. How this 7,84,000 came? Sir, 1,96,000 guys, they are making allotment money. How you know? A guy who is allotted 400 is not making. So these guys will make a payment of 50. But these guys, so called this 1,96,000 guys, they also paid some extra amount along with what? Application only. Reduce that amount. Why? They will not make payment for that amount. Okay. How many applications were received? 2,40,000 applications were received. In this 2,40,000 lo, for 2 lakhs allotment is done and that amount transfers to capital. Balance how much? 40,000 application. In this 40,000 lo, relating to this 4,000 extra how much? 800. How you know? I can easily see this. He applied for 4,800, allotted 4,000. Means E extra how many E make? On 800 extra applied. Balance how much? 39,200. This 39,200 is relating to the excess application relating to that 1,96,000 shares. Means the application money received on this 39,200, they will not make payment at the time of allotment. Reason being, they already made payment. Done? Yes. How much that is? 39,200 into 20 rupees, which comes to 7,84,000. That 7,84,000 which they will not make payment now. I hope you are getting the clarity. Yes. Now 1,96,000 into 50 minus 7,84,000, which comes to 90,60,000, which comes to 90,60,000. This is what bank, what you received. Next, calls in arrears is there. Yes sir, calls in arrears is there. Calls in arrears. How many sir? 4,000 shares. How much they need to make payment? Into 50. Yes sir, they need to make payment of 50. Now already these guys paid some extra money. That extra money is 800 extra applications they made into 20, which comes to 16,000. This is what my calls in arrears. 4,000 shares into 50 minus 16,000. 1,84,000 is my calls in arrears. I hope you are getting the clarity. 2. equity share allotment. Perfect. 92 lakhs. Equity share allotment credited here 92 and credited here 8. Here it is 8. There it is 92. Total comes to 1 crore. Here it is debited 1 crore. Debit and credit done. I hope you are getting the clarity. Now, no balance is left in where? Equity share allotment. Sometimes you are not writing this calls in arrears account, meaning thereby you are showing your calls in arrears in the allotment call. That is also perfect. It is not always required to take your calls in arrears account here. Don't take anything in this calls in arrears account. Just write bank account debit to equity share allotment 90 lakh 16 and 90 lakh 16. That 1 lakh 84,000 will be automatically there as a debit balance in equity share allotment, which is nothing but your calls in arrears. I hope you are getting the clarity. Perfect. Next. Failure to pay the allotment money on his subsequent failure to pay the first call. His shares were forfeited. Perfect, sir. On his subsequent pay the first call means after first call I am forfeiting, not after second call. How you know? Clearly read. He to whom 4,000 shares were allotted failed to pay the allotment money, and on his subsequent failure to pay the first call, his shares were forfeited. On his subsequent failure to pay the first call, his shares were forfeited. Next. And if the holder of 6,000 shares failed to pay the 2 calls and his shares were forfeited after the second call, means E is also not making payment of first call, immediately forfeited. F is also not making first call and final call. After final call, we are forfeiting F shares. I hope you are getting the clarity. Everyone? Yes. F is holding 6, E is holding 4,000. Perfect. Next entry, sir. Equity share first call account to debit. How much, sir? Equity share first call account to debit. I am having how many shares I need? I made allotment 2 lakhs into what is equity share first call means 30 rupees into 30 means 60 lakhs is equity share first call to equity share capital. How much, sir? 60 lakhs. How much? 60 lakhs. How much you are collecting bank? Sir, this entry alternatively you can also write, alternative entry you can write, don't write in the exam, matlab don't write both the entries, follow any one. Alternative entry for this, bank account to debit, bank account debit to equity share allotment, bank account debit to equity share allotment. How much is bank? 90 lakh 16,000, 90 lakh 16,000. Perfect. I hope you are getting the clarity. Next, equity share first call account debit to equity share capital. You can write 2 entries. One, opening calls in arrears account. Second, one more alternative. Don't open your calls in arrears account. Adjust your calls in arrears in the equity share first call itself. Super. Bank account to debit. Now E is holding 4,000, F is holding 6,000. Total on this 10,000 I am not recovering anything. 2 lakhs minus 10 on 1 lakh 90,000 I am collecting 30. I hope you are getting the clarity. 1 lakh 90 into 30, it is 57 lakhs, absolutely right. Either you can open calls in arrears account, which is 10,000 into 30, which is your 3 lakhs. 2. Equity share first call. How much? 60 lakhs. How much? 60 lakhs. I hope you are getting the clarity relating to this. Next. Either you can pass an alternative entry bank account debit to equity share first call, that is 5757. Now the calls in arrears is there in equity share first call account. Next. Make the forfeiture now. Forfeit means E, a guy who is holding 4,000 shares failed to pay the allotment and first call. After failing to pay the first call, I am forfeiting. This guy is called E's shares. Equity share capital account to debit. How many shares this guy is holding? 4,000 into, so far how much we raised in terms of capital means, except final call we raised, that is application 20, allotment 30 and if I am not wrong first call 30. Perfect sir. Which is 80 into 4,000, which is 3,20,000 is the capital liability which I need to cancel. In other words, this is the amount which I need to cancel because these shares are not form part of my capital as I am cancelling these shares. Securities premium. Sir, securities premium also I didn't collected on this 4,000 shares into 20, which is nothing but 80,000. Cancel that securities premium. 2. Either you can write calls in arrears, or if you are not opened separate account for calls in arrears, now this amount is there in equity share allotment. Any of them you can use this. The entry, what the entry depends here, what you wrote earlier entry means, if you opened a separate account for calls in arrears, then close that calls in arrears because nothing will be recovered from this because we are forfeiting these shares. How much? 4,000 into 50, which is 2 lakhs. No sir, I didn't open calls in arrears account sir. Then in place of calls in arrears account, your calls in arrears is there in where? Equity share allotment. Hence close that equity share allotment because you will not recover anything from the shares. How much? 4 lakhs into 50, which comes to 2 lakhs. 2. Share forfeiture account. How much amount we collected on these shares we are not going to repay. This idiot gave 4,800 on 4,800 applications into 20, which he gave us 96,000 he gave to us. Right? Right. Before that, we need to cancel that calls in arrears which is form part of what? That calls in arrears which is form part of your first call. That calls in arrears which is form part of your first call. Now this guy holding 4,000 shares, he is not making the first call which is of 30, which is once again, either if you are opened a separate account called calls in arrears, add this amount in that calls in arrears, or equity share first call account. Close that equity share first call account to the tune of 4,000 into 30. Here 4,000 into 50. Sir, I am opened a separate account for calls in arrears. Now add this 1,20,000 to the earlier entry, to the earlier 2 lakhs, add this 1,20,000. Once again I am repeating. Sir, I didn't open a separate account, then close your equity share first call. No sir, I opened one separate account. Then In that calls in arrears, what you are having 1 lakh, 2 lakhs, add 1 lakh 20. Now in calls in arrears, you will have balance 3 lakh 20. 2. Share forfeiture account. How much? 4,000 into 4,800 into this idiot paid how much? 20. 4,800 into 20, which you will get how much? 96,000 he paid. Are you getting, sir? Now we are not going to repay anything to this idiot. I hope you are getting the clarity. Yes. Now when you are asking equity share allotment, when you are taking equity share allotment, this 2 lakhs lo already on that 800 shares he paid, which is 20, which is nothing but 16,000. Yes, means in this 2 lakhs lo you are having only 1,84,000. I hope you are getting the clarity. The most mistake where student used to commit, this 1,84,000 they will take here it as 2 lakh. They will take here it as 2 lakh. They will take here 2 lakhs. Make it a star mark. Strike, if you wrote, strike it with a different ink. Write 1,84,000. This is the common mistake what students used to commit. 1,84,000. I hope you are getting the clarity. The whole story revolves around this 1,84,000. If you perfectly take that 1,84,000, nothing is there in this problem. Why 1,84,000? 2 lakhs is due, but already 16,000 is collected along with application for allotment. Now that amount no more we are going to be recoverable in the name of allotment. Only 1,84,000 is going to be recoverable in allotment. Take that 1,84,000 which you are not going to be receiving in future as these shares are forfeited. Next, this excess amount, total amount, which comes to how much? 4,800 into 20, 96,000. Perfect, sir. 1,84,000 plus 96 plus 120, which is your 4 lakhs. 4 lakhs. I hope you are getting the clarity relating to this entry. The whole story is there in 1,84,000, taking this 1,84,000, cancelling this. Even in each share first call also you can take calls in arrears or equity share first call. It depends upon what you wrote. I wrote calls in arrears, then 3 plus 184, which comes to 3 lakhs. In this 3 lakhs lo relating to this idiot, if I am not wrong, 4,000 into 30, 1,20,000 relating to this idiot called E, add 1,84,000, which comes to 3,04,000. I hope you are getting the clarity. Even if you want to take directly calls in arrears, 3,04,000. How 3,04,000? Calls in arrears relating to this guy, 4,000 into 30 for first call, add, and 1,84,000 only this guy's call in allotment, total how much? 3,04,000. I hope you are getting the clarity. Done. Now write final call due entry. Write final call due entry. Yes, sir. Final call due entry. What is this final call due entry? Equity share final call account to debit. How many shares, sir? Equity share final call? 1,96,000 only, sir. Why, sir? That idiot shares were forfeited, and once we are forfeited, he is no longer my shareholder. 1,96,000 into, if I am not wrong, final call is 20 rupees. Perfect. 1,96,000 into 20 rupees, which comes to 39,20,000. 2. Equity share capital account. How much? 39,20,000. Exam lo don't write ES capital, you have to write EQI to total, you have to write equity share capital. Now for time constraint I am using ES. Next, when you are collecting Mr. F holding 6,000 shares is not making payment into 20,000. If I am not wrong, 1,90,000 into 20,000, that's what you are collecting, which is 38 lakhs. And calls in arrears account. If you open calls in arrears account, when forfeiture, close this calls in arrears. If you are not opened calls in arrears account, when you are writing forfeiture entry, cancel your equity share final call. 6,000 into 20, which is how much? 1,20,000. 2. Equity share final call, which is 39,20,000, which is 39,20,000. I hope you are getting the clarity. Now this guy's shares also forfeited. Entry, equity share capital. Now this guy's shares also forfeited. Equity share capital, account to debit. How much? 6,000. Even after making final call, we are forfeiting 6,000 into 100 rupees, which comes to how much? 6 lakhs. Premium amount already collected, don't touch that securities premium, which is already there in your securities premium. 2. If you are writing in calls in arrears account, use calls in arrears account. Calls in arrears account comes to how much? This guy holding 6,000 shares, which he is failing to pay first call of 30, and he is failing to pay 20. 6,000 into 30 plus 6,000 into 20, total comes to 3 lakhs. 2. Share forfeiture account. How much is share forfeiture? This guy paid application money. How much application money this guy paid? 20 rupees. Very good, sir. Now he paid 20 rupees application he paid, and he also paid allotment, which is leaving the premium, because premium went in your securities premium. If you want to allot 6,000 shares divided by 5, how many shares you need to apply? How many shares you need to apply, sir? If you need to apply, if you need to allot how many shares? 6,000, then you are supposed to be make applications for 7,200 shares. And you paid 7,200 into application of 20 plus. And allotment money you will pay only for what? You will pay only for what? You will pay only on these 6,000 shares. I hope you are getting the clarity. Allotment money you will pay for only on this 600 shares. Allotment money comes to how much? 6,000 into, which is your, don't take securities premium, 30, which comes to how much? 1,80,000. But you will not make payment of that excess. Excess means how much? 1,200 into 20, which is 24,000. How much you will pay in the name of allotment? 1,56,000 you will pay in the name of allotment. You will make payment in the name of allotment. How much you will make payment? 1,56,000 you will make payment in the name of allotment. Next one. Next one, how much you received in application? Application you received 7,200 into 20, which comes to how much? Into 20, which is 44,000. This total amount of 3 lakhs which is a gain to the company which will not give to this idiot. How much this is? 6,000 into 30 minus already what you have paid, that 1200 into 20 minus 1200 into 20, you will get 3 lakhs. In other words, if you are not having that much of time in the exam, directly take the balance amount. Directly take the balance amount. Just I am showing how you got the 3 lakhs in terms of that share forfeiture. I hope you are getting the clarity. Yes, yes. Any doubts? Take 1,84,000. This is one of the key part here. Take 3 lakhs. This is one of the key part here. But this key part having some exception, like you can take the balancing figure. But here you can't take balancing figure. You need to compute that. But here that problem is not there. Happily I can take the share forfeiture. I hope you are getting the clarity. Yes, first call is 30 and second call is 20. On that 6,000 into 50 also you can directly take 6,000 into 50. Next, write the reissue entry. Write the reissue entry. Any doubts up to this, please ask me and copy. Yes, copy from here. Here it is starting. Yes, any doubt, please ask me. I think you will have in this 1,84,000, how you got 1,84,000? This idiot is applied for 4,800. That extra 800 what he have paid on application will be adjusted against allotment. That 4,000 what he paid on application will be thrown on the face of capital when you are allotted. Next, cancel that 1,84,000. Most used to fail. Just what you wrote there, just take in this 1,84,000. That's it. Apart from that, nothing is there. Next, reissue entry. Of the forfeited shares, 8,000 reissued to G at a discount of 10%. The whole of each share forfeited were reissued. Total 10,000 shares were forfeited. How many? Total 10,000 shares were forfeited. Yes. Total 10,000 shares total 10,000 shares forfeited. 4,000 belongs to F, E. E 4,000. 6,000 belongs to F. Perfect. 6,000 shares belong to F. 4,000 belongs to E. Very good, sir. Balance in share forfeited per share. Now, E's share forfeiture, how much? 4,800 into 20. When you forfeited this, guys, 3 lakhs is, yes, 96,000. How you got 96? 4,800 into 20. 96,000 divided by 4,000. If I am not wrong, 24 divided by 4,000, which is 24 per share. Which is 24 per share. What is the 24 per share? Balance in share forfeiture. And what about this idiot? If I am not wrong, directly that figure is there. Without looking into that figure also you can see He applied for 7,200 into 20 and 6,000 into, if I am not wrong, leave that allotment, 6,000 into 30 minus that extra amount, which is that 1,200 into 20, 1,200 into 20. But example, don't do this. You are having balance. You are having balance. Directly you can take the balance. 7,200 into 20, which is 1,44,000. Next, 6,000 into 30, which is 1,80,000 minus 24, which is minus 24, which is 1,56,000, which is your 3 lakhs. You can happily see that 3 lakhs here. Example, don't calculate, directly take that figure. This 3 lakhs belonging to 6,000 shares. I hope you are getting the clarity. 3 lakhs belongs to 6,000 shares and it is 50 per share. 50 per share. Next. Now, in this entire 4,000 reissued, in this 4,000 only reissued, balance 20 is retained. Matlab balance 20 neither cancelled, they are not telling anything, means it is retained. I hope you are getting the clarity. Pass the entry. Reissue is done at the whole of is forfeited shares being reissued. Of the forfeited shares, which is 10,000, 8,000 shares were reissued to G. Okay. At a discount of 10%. Face value is 10, discount 10, 90 rupees the reissue is done. The whole E shares were 4,000 shares being reissued. Total 8,000 reissued low is 4,000 is reissued, means F also reissued how much? 4,000. For example, if it is total reissue is 9, then F is 5,000. If total reissue is at 7, then F is 3,000. F shares is 3,000. Bank account to debit. Bank account debit. How many shares, sir? Bank account debit. Bank account debit 8,000 shares into 90. 7,20,000. Share forfeiture. How much is balance in share forfeiture? 8,000 into 10, 80,000. 2 equity share capital. To equity share capital. How much? How much is equity share capital? 8 lakhs. How much is equity share capital? 8 lakhs. Now, balance in share forfeiture will be taken to where? Capital reserve. Yes. 4,024 is there. How much I utilized? 10. Balance left how much? 4,000 into 14. Share forfeiture account to debit. 4,000 into 14 plus 4,000, balance 50 is there. How much I utilized for discount? 10 rupees. Balance left how much? 40. I hope you are getting the clarity. 4,000 into 14, 4,000 into 40. Next. $2,16,000 will be taken to where? to capital reserve. How much? 2 lakh 16. Total share forfeiture how much? 3 lakhs plus 96, 3 lakh 96. 3 lakh 96. Total 3 lakh 96. Utilized for discount 80,000. Transfers to capital reserve 2 lakh 16,000. Balance how many shares were left? Balance 2000 shares were left, which is retained, into how much per share? 50, which is perfectly 1 lakh, which will be added to the paid up share capital if you are retained these shares. Added to the paid up share capital if you retain these shares. I hope you are getting the clarity. Total balance in forfeiture, total here it is 3 plus 96, 3 lakh 96. In this 3 lakh 96 low, how much is utilized in the name of forfeiture? For discount utilized 80,000. And balance transfers to where? Capital reserve 2 lakh 16,000. You left 1 lakh. How that 1 lakh came means the 2000 shares which is not reissued of F's 2000 shares into per share it is 50, total 1 lakh. Perfect. That 1 lakh will be added to a paid up share capital. I hope you are getting the clarity. For balance sheet, cash and cash equivalent important. You should know what is the balance in cash and cash equivalent. For balance sheet, you should know what is the balance in cash and cash equivalent. Now calculate 90 lakh 16,000 which you received application, and initially you received 60 lakhs, yes, and you gave the 12 lakhs in the name of refund, 48 lakhs. Then you collected 90 lakh 16,000. Then you collected 57 lakhs. Then you collected 38 lakhs. Then you collected 7 lakh 20,000 for the reissue of forfeited shares. Two crore 40 lakh 36,000. This is the balance of cash and cash equivalent. This is 9. Okay, they took calls in arrears. Happily, you can also take calls in arrears. No need to figure it off. Perfect. 2 crore 40 lakh 36,000. That is the only asset you are having. Next, reserves and surplus low. You are having securities premium. How much is the securities premium? 1,96,000 into 20. 1,96,000 into 20. That is 1,96,000 into 20, which is 39 lakh 20,000. Add 1 lakh. Add that 1 lakh. I hope you are getting the clarity. Yes. Next. First check the entries. Yes. Check the entries. Reserves and surplus low. Securities premium 1,96,000, 4,000 shares forfeited, hence don't consider. 20, how much? 39,20,000. From share forfeiture to capital raise, how much I transferred? 2,16,000. Add the 2,16,000. You will get 41,36,000. Perfect. Share capital notes I will show. First check the entries. Bank to application. Next, share application. I took assuming all are equity shares. So I assumed that equity and I am writing share application. Note I assumed as equity shares. And if you don't want to write equity, then take share application. Then next, share allotment. Then perfect. Bank call scenarios perfect. Here they took call scenarios. Extraordinary. Next perfect. Bank call scenarios 60. Share capital, securities premium, cancel that 80. Share forfeiture, call scenarios 3,04,000. Call scenarios 3,04,000. Next, bank due entry perfect. This is receipt entry perfect. And this is cancellation of the F share. Cancellation of F shares. Reissue entry and forfeited to perfect. Yes. Pro rata. This what? Calculation of pro rata allotment applications. 2 lakh shares. If you apply 5. Matlab applications 2,40,000 means 5:6. How you got that 5 means 2 lakh divided by 2,40,000. 5:6. If you make application for 6 shares, company will allot 5 shares. 5 shares will be allotted for every 6 shares applied. Yes, this is the working note. I have shown you. Total due 1 lakh. Excess adjusted is 8 lakhs. Next, net which you are supposed to receive 92. But a guy which is not, who is not making payment of your call scenarios, which is 4,000 guy. 4,000 is there. Yes, that 4,000 guy, he is not making allotment. Done. I hope you are getting the clarity. $4,000 into 50 minus he already paid on this 4,800 into 20, which you will get 1,84,000. Perfect. Next, cash received. This is what we wrote. Done. Next, call scenarios. I have shown me exactly this 1,84,000. 96. Perfect. This 16 adjusted. This is 1,84,000, which is call scenarios. Perfect, sir. This calculation I have shown in a form of a table. This is 96. This is relating to that, which is 2 lakhs. Yes, discount, and the balance 2,16,000. And this 1 lakh, which will be added to your paid up share capital, amount forfeited, assuming these shares are retained. Balance sheet. Yes, sir. 1,98,000 shares into 100, add that forfeiture 1, total 1,99 lakhs, and this is your reverse surplus. That's it. Cash and cash equivalent. Just I add everything. Whenever bank is there, I added everything. I hope you are getting the clarity. Beautiful problem. Nothing is there. Just solve once. One of the important problem. that you have to see pro rata allotment, check that pro rata allotment and check whether it is given as applied or allotted. Check whether it is given applied or allotted, that's it. I hope you are getting the clarity. Yes. Yes, sir. Moving on to the one more chapter, which is issue of debentures. Simple chapter. Issue of debentures. Sir, what is this debenture, sir? Debenture is a debt instrument. What, sir? Debt instrument. So, the debenture certificate, what I am referring is a debt instrument, acknowledging a debt instrument. That instrument, so called, that certificate is acknowledging that debt instrument. It is telling that company is liable for this much of amount as on this date. So, in other words, this debentures is a loan to the company. It is a loan taken by the company. Very good, sir. Now, come to the accounting treatment. Similar to that of this debentures, similar to that of the shares, how you are issued at par, premium, or discount, in the same way, debentures also can be issued at par, issued at premium. Debentures also can be issued at a discount. Sir, when it comes to the equity share capital, that is the permanent capital base of the company, which will be repaid only in the event of winding up. But when it comes to the debentures, the maximum tenure for these debentures is 10 years. When it comes to the preference shares, it is 20 years. Meaning to say, these debentures need to be redeemed, these preference shares need to be redeemed. Means, when you are taking money, you are writing as if you are taking a loan. When you are repaying that loan, you are supposed to be repay that loan. So, both the entries has to be written, sir. Example. So, debentures issued at par, issued at premium, or issued at discount. Yes, sir. Debentures are issued at par, issued at premium, issued at discount. Entry, sir. Bank account to debit. 9% means 9%, 10% means 10%. Debenture application. And converting this application into debenture loan when you are on the allotment date, entry. 10% debenture application account to debit to 10% debentures. Right? This is what, sir? Issued at par. Comes to the premium. So, what is the entry for issue of debentures at premium? So, entry for issue of debentures at premium means I am getting cash. I want to write only single entry, sir. Bank to 10% to debentures to securities premium. What, sir? Securities premium. If it is at a discount entry, bank account to debit, discount on issue of debentures, discount on issue account to debit to 10% debentures. These are the basic entries for issue related journal entry. But you are supposed to be remember one fact that these debentures need to be repaid. These debentures need to be repaid. Repaid within how many years? Within 10 years, or as the case may be less than the 10 years what they are mentioned in the agreement, debentures agreement. Okay, sir. So, at that time of issue only I need to tell at what price I am redeeming. Yes, means When you are redeeming, issuing at par and redemption also may be at par, issue at par, redemption may be at premium, issue at par, redemption may be at discount. Are you getting what I am telling? Same way, issue at par, redemption may be at issue at premium, redemption may be at par, issue at premium, redemption may be at discount, issue at premium, redemption may be at premium, issue at discount, redemption at par, issue at discount, redemption at premium, issue at discount, redemption at discount. So what I want to convey, these entries as not focusing on the redemption. Hence, you are supposed to be rewrite your entries taking considerations into what? Redemption value. Are you getting, sir? Yes, sir. Now forget about these three entries, sir. Just basic entries I have set for leaving that redemption. Now every time when you are passing an entry for a debenture, care should be taken for redemption point of view. Issue at par, issue at par, redemption also at par, issue at par, redemption at discount, issue at par, redemption at premium. So what is the entry, sir? Issue at par and redemption is also at par. So par means to nominal value or face value. Imagine 100 rupees is the value of debenture. I am getting 100 and I need to repay only 100. Entry, sir. Bank account to debit to 10% debentures. How much? 100, 100. I want to write only direct one entry. Don't write this application allotment to capital, all the debenture. Leaving this, I want to write only one entry. Yes, sir. Done. Redemption at discount, sir. Okay. What is this redemption at discount? Sir, I am asking you at 100 rupees. Now, I will repay 95 to you. How much I am asking, sir? 100. How much I will repay you? 95. Entry, sir. Sir, why they will issue at 100, why they will repay 95 means that interest calculations. Interest, you will get some higher interest. That is the reason they are offering, they are okay for that in, discount. Fine. I am getting how much? Bank? 100. But I need to repay 95. But don't write that 95 to debenture, take 100 only. Why, sir? Providence are considered in the principle. Don't recognize future gains. As this is a future gain, recognize this gain when you have earned, means at that time of repayment, at that time of redemption, then only recognize this gain. Don't recognize at the time of issue. Why? Because it is a future gain. Don't recognize future gains. Are you getting? Okay, sir. Done. Both the scenarios same entry. But issue at par, redemption is done at premium. Issue at par, redemption is done at premium. What is the entry, sir? Nominal value is 100. Issue price is 100. Redemption value is 110. Now, how much you are getting in the form of bank? I am getting in the form of bank 100. Now, how much I need to repay? 110. That extra 10 rupees is what, sir? Loss on issue. How much is that loss on issue? 10. 2. Premium payable. Yes, how much is the premium payable? 10. Okay, sir. 2. 10% debenture 100. 2. Premium payable on redemption. How much? 10. Now entry. Bank account debit 100. Loss on issue 10. To 10% debenture 100. To premium payable on redemption 10. So this is the entry. Why, sir, loss is debited? Loss will always be debited. Okay. Why, sir, premium payable on redemption is created? That is the liability. So you are getting 100. Loss is 10. So 10% debentures to premium payable. So this is the additional when issue at par and redemption is done at premium. I hope you got the clarity. Right. So what is this? Issue at par and redemption at par, issue at par, redemption at discount, issue at par, redemption at premium. Next case, sir. Issue at discount. Yes, sir. Debentures can be issued at discount. When it comes to shares, it is not allowed, but debentures can be issued at discount. Issued at discount, redemption at par. Issued at discount, redemption at discount. Issue at discount, redemption at premium. Sir, face value 100. Issue price is 90. So issued at discount. Redemption at par. What is the entry, sir? So bank I am getting how much? I am getting 90 rupees. That is the issue price. Discount on issue how much? That is rupees 10. 2. Liability 10% debentures how much? 100. Done. Super. Done. Come to the next one. Issue at discount and redemption is also at discount. Yes, sir. Entry. Bank account debit. How much you are getting bank? 90. Why to recognize this discount expense or loss? Because conservatism principle, prudence principle. How much? 10. To 10% debentures. How much? 100. What is this 10% debentures? 100. Yes, sir. Sir, how much you are supposed to repay? Redemption is also at discount 90 or 95 or 99. But why you are taking that liability at 100? Because conservatism principle, don't take future gains. This is a gain when you repaid. Until that repayment is not done, don't recognize that gain in the books now itself. Next. Sir, premium I am writing. Sir, face value 100. Issue price 90. Redemption value is 110. How much I am taking? 90. How much I am giving? 110. So all this is because of the fluctuations in the interest rate. Apart from that, nothing is there. So how much I am getting in the form of bank? 90. What is the discount on issue? Discount is 10. What is the loss on repayment? Loss on issue. That loss on issue is 10. What is that loss on issue of 10? Is nothing but face value minus redemption value. My 10% debentures. How much is the 10% debentures? 100. How much you need to pay premium? Premium payable on redemption 10. So entry bank account debit, discount on issue account debit, loss on issue on account debit to 10% debit, 10% debentures to premium payable on redemption 10. Done. This is the entry, sir. Okay, next. Sir, when it comes to the next one, sir, are you getting why this is there here? This is nothing but redemption value is 110, face value is 100, this 10 is loss on issue. This is the discount. This premium payable is a liability over and above the 10% debentures. Done. Next. Sir, next one is issue at premium, redemption is also at premium. issue at premium, redemption at par, redemption at discount, redemption at premium. Yes. What is this issue at premium, redemption at par? Sir, face value is 100. Issue price is 110. Redemption value is 100. Now write the entry, sir. At how much you are getting? 110 I am getting. How much you need to repay? 100 only. The excess 10 is what? Securities premium will be dealt with section 52 subsection 2. Entry. Bank account to debit. How much is your bank debit? 110. 2. 10% debentures. How much? 100. 2. Securities premium. How much? 10. Come to the second one. Face value 100. Issue price 110. Redemption value 90. I will give you 90, sir. So issue at premium, redemption at discount. So shall I need to account for that 20 rupees or 10 rupees gain what you have? No, sir. What is that? Prudence principle. Don't recognize the future gains. Right? Entry. Bank account to debit. How much? 110. To 10% debentures. How much? 100. To securities premium. How much? 10. Securities premium 10. Right? Right. Come to the third one. This is a redemption at premium. Issue price is 110. Face value 100. Redemption value, I will tell two scenarios. One is 105, one is 115. If I said these two, you will get the idea of what is for 110. Yes. How much you are getting bank? 110. You are getting bank at 110? Yes, sir, I am getting bank at 110. Sir, loss on issue is 5. What is this 5? Face value is 100, but you are supposed to repay at 105. 5 rupees is your loss? Yes, sir, loss. 2. So, what is the face value of debentures? 2. 10% debentures. How much? 100. 2. Premium payable on redemption. How much? How much you are getting? Yes, 5. What is that extra 10 rupees? 2. Securities premium. Are you getting? So, loss is 5. How you got this 5? 100 rupees is what your face value. How much you are repaying? 105. 105 minus 100. 5 rupees is this loss. 5 rupees is this premium payable. Now, what is the securities premium? The securities premium will be given to equity shareholders, not to these fellows. So that is the reason I am not adjusting with this 110 with this 15, and I am not able to tell anyhow 5 rupees is gain. That is not the scenario here. Are you getting, sir? So how much you are getting? 110, and how much you are repaying? You are repaying only 105. but that 5 rupees only, because that will be there as on the date of when? On the date of redemption. So prudence principle, don't recognize that future, so recognize now itself. So the face value is 100, you are supposed to repay how much? 105, 5 rupees is the loss, recognize that loss, and that's what you are paying the premium. Same way. Next, if that redemption is at 115, bank account debit, how much you are getting? 1110. Loss on issue, how much is the loss on issue? 115 minus 100, 15. 2, 10% debentures, 100. 2, securities premium account, how much you are collecting securities premium? 10. 2, premium payable on redemption, how much? 15. I hope you got the clarity. Sir, loss is face value, you have to compare. Redemption value minus face value is the loss. Don't compare redemption value minus issue price. Your loss is redemption value minus face value. That is what your loss. I hope you got the clarity. Yes, sir. Similar to that of shares, debentures also issued in installments like application, allotment, first call, final call, right? But in our academics law, we will have application and allotment. Even it can also be there first call, final call, done. So application and allotment. So application is a different stage, allotment is a different stage. Fine, sir. Very good. Next, sir, I have issued the shares. I have issued the debentures. 100 debentures, right? And the value per each debenture is 200. How much? 200 is the issue price and face value. Now, on application, I am asking 50. On allotment, I am asking 150. Redemption value is at par, that is 200. Entry, sir. Bank account to debit to debenture application. How much? 100 into 50. Bank account to debit to debenture application. How much? 100 into 50, 5000, 5000. Transfer this debenture application to debenture. Debenture application account to debit to debentures, 9% debentures or 10% debentures as the case may be. 5000, 5000. Next one, sir. Debenture allotment account to debit. Debenture allotment account to debit to 10% debentures. 100 debentures into 150. Are you getting, sir? 100 debentures into 150, which comes to 15,000. 10% debentures, how much? 15,000. So when you receive the cash, how much you will receive? bank account to debit to debenture allotment. How much? 15,000, 15,000. Sir, come to the next scenario. In the same problem lo, the face value is 200, but the redemption is not 200, the redemption is 210. How much? Redemption is 210. Now, application lo there will not be any change. Allotment lo you are supposed to write that loss on issue. When sir? Allotment lo you are supposed to write that loss on issue. Here it will come what? Loss on issue. How much? 100 into 10, right? 1000. 2. Premium payable on redemption. How much? 1000. Loss on issue and premium payable on redemption. I hope you got the clarity. Yes, shall I move to problem? One problem based on this? Yes, sir. So, give the journal entries for the issue of debentures for the following cases. They are asking you to give the journal entries, sir. Fine. So, what they are telling? Modern Equipments Limited issued, this is a number, 4,000, 12% debentures, 100 payable as follows on application 30, on allotments 70. Applications were received for 4,20,000 debentures. Excess application money was refunded on the same date. All money duly received as per the terms of the issue. The debentures are redeemed at 410 per debenture. Excellent question. Simple. How much bank you are getting? 4,20,000 shares, but because those are the shares which were applied. Applications were received 4,20,000 into application is 30 rupees on application 30. How much? 1 crore 26 lakhs. Yes, 1 crore 26 lakhs. Write the entry. Bank account to debit to 12% debenture application. What? Bank account to debit to 12% debenture application. How much? 4,20,000 into 30. 1 crore 26 lakhs. Immediately on the same day, on 20,000 debentures, you are repaying 30, which comes to 6 lakhs. On the extra 20,000, how much you want actually? Issued 4 lakhs. So, you will allot only 4 lakhs. That extra applications received 20,000 into 30 per share, which comes to 6 lakhs. 20,000 into 30 per share, which comes to 6 lakhs. On the same day, I am repaying them. Entry. 12% debenture application account debit to bank. 12% debenture application account debit to bank 6 lakhs. Now I am having 1 crore 20 lakhs. Yes. Immediately transfer this to where? To 12% debentures. Entry. 12% debenture application account debit to 12% debenture application account debit to 12% debentures. Immediately transfer this to liability. 12% debentures. Next. On allotment, when sir? On allotment 70. So, what is the entry on allotment? Equity share, debentures allotment, right? Debenture allotment. How much is the debenture allotment? 70. So, 4 lakhs into 70. How much? 2 crore 80 lakhs. Yes. 2 crore 80 lakhs. What is this 2 crore 80 lakhs? Debenture application account debit, the debenture allotment account debit, debenture allotment account debit 2 crore 80. What is the loss? 10, right. Loss on issue 4 lakhs debentures into 10 per debenture 40 lakhs. Loss on debenture 40 lakhs. 2. 12% debentures to 12% debentures. 2 crore 80 lakhs. 12% debentures, 2 crore 80 lakhs. 2. Premium payable on redemption, 40 lakhs. 2. Premium payable on redemption, 40 lakhs. I hope you got the clarity. Loss how much? 40 lakhs. Now, to the nominal value, I need to credit the debentures to 10% debentures. Yes, 4 lakhs into 70. Done. Right. What is the entry for receipt of bank? Bank account debit. Bank account debit 2 crore 80 lakhs to 12% debentures. To 12% debentures. I hope you got the clarity. Just check with the answer. Yes. Yes. Bank account debit. What is this? 450. Done. Completed writing. Come to the next one. Agrotic Limited issued 1 crore 50 lakhs, 9% debentures at 100 each, of 100 each. This is the nominal value, and at a discount of 6%, means issue price is how much? Issue price is 94. Very good. Redeemable at a premium of how much? 5%. Apply this premium on the nominal value, means redemption value how much? 105. Right? And application is 50, allotment 44. Very good. First one, sir, simple entry. Bank account debit to, bank account debit to debenture application. Bank account debit to 9% debenture application. 1 crore 50 lakhs into 50. 1 crore 50 lakhs into 50. One crore 50 lakhs into 50. Yes, sir. Next. Next one. Immediately transfer this to where? To debentures, means 9% debenture application account to debit to 9% debentures. Done. 9% debenture application to 9% debentures. Done. Come to the one more entry. What is that? Debenture allotment account to debit. Debenture allotment account debit 1 crore 50 lakhs into 44. Debenture allotment account debit 1 crore 50 lakhs into 44. Next. Discount on issue. Discount on issue account debit 1 crore 50 into 6. Next. Immediately in the debit only. Loss on issue is equal to, loss on issue, how much? 1 crore 50 into, anyone? 5. Very good, sir. 1 crore 50 into 5. 2 to 9% debentures. 1 crore 50 into 1 crore 50 lakhs into 50. 1 crore 50 lakhs into 50. 2. Premium payable on redemption of debentures 1 crore 50 lakhs into 5. 2. Premium payable on redemption of debentures 1 crore 50 into 5. Your debit and credit will be matched. Go and check. Total it and debit, your credit, debit and credit will match totals. Super. $75 crores. Yes, debit is 75 crores. First debit, what you have received. Next. Correct only, sir. Next. How much bank you will get? bank account to debit 2, 9% debenture allotment, 1 crore 50 lakhs into 44. Bank account to debit 2, bank account to debit 2, 9% debenture allotment, how much? 1 crore 50 lakhs into 44, done. So, Country Crafts Limited issued 1 lakh 8% debentures of 100 each at a premium of 5. Very good, sir. So, the issue price is how much? 100 plus 100 into 5%, that is 5. Total comes to 105. This is what? Issue price. Come. And redeemable at a premium. So, redemption value comes to how much? 110. Now, payable on application. Yes, sir. So, Country Crafts Limited issued 1 lakh 8% debentures of 100 each at 8%, 100 each at a premium of 5%, payable fully on application. Okay, what is the entry, sir? Bank account to debit. How much you are getting? 1 lakh into 105. That is 1 crore 50 lakhs. Yes, sir. 1 lakh into 105. Yes, sir. Yes, sir. 1 crore 5 lakhs. 2. Debenture application. Did they mentioning any percent there? 8% debenture application. 8% debenture application. How much? 1 crore 5 lakhs. Immediately application and allotment, because there is no entire amount is collecting at application and allotment. Second one, sir. 8% application and allotment. 8% debenture application and allotment. 8% debenture application and allotment. 8% debenture application and allotment account debit. How much, sir? This one. 8% debenture application and allotment. 1 crore 5 lakhs. Next. Loss on redemption or loss on issue. How much is the loss? 1 lakh debentures into 10. The redemption is at 110, right? Yes. Into 10, which comes to 10 lakhs. 2. 8% debentures. What is the face value of debentures? 1 lakh into 100. This is 1 crore. 2. Securities premium. 1 lakh into 5. 5 lakhs. 2. Premium payable on redemption. How much is premium payable on redemption? Yes. Face value is 100. Redemption value is 110. Means 10 rupees per share into 1 lakh. 10 lakhs. This is the ultimate. This is the first entry. This is the second entry. Important for 4 to 5 marks, sir. These type of questions they will ask into some 4 to 5 marks. So just to be focused. Mistake they will commit most of the times. Premium payable on redemption shall be comparison between redemption value and face value, but not redemption value and issue price. It is a comparison between redemption value and face value. That is the only thing. premium payable on redemption, and this is loss. I hope you got the clarity. Yes, done. Shall I move on to the next problem? Yes. X company limited issued 10,000 14% debentures of the nominal value 50 lakhs as follows. Number comes to how much, sir? 10,000. Value comes to how much, sir? 50 lakhs. Very good. Next. To sundry persons, maybe creditors, to sundry persons for cash at 90% of nominal value of 25 lakhs. Okay, sir. What is this 90% of the nominal value? 50 lakhs divided by 10,000. You will get per share, right? Yes, sir. You will get per share. So, how much is per share, sir? What is the nominal value? Can anyone? Yes. Yes. Next. Now, to sundry persons at 90% of nominal value 25 lakhs. Can anyone tell what is this? Yeah, sir. The nominal value is 500. Okay. Yes. For cash at 90% of nominal value means issue price is at 450. Very good. 50 rupees is discount. Excellent. Next. To issue at a discount. Okay. Of a nominal value 25 lakhs. Super, sir. 25 lakhs divided by 500. You will get 5,000 debentures. Means 5,000 debentures were issued to sundry persons for cash. Entry. Bank account debit. Yes. 25 lakhs into 10%, that is the discount, means 22 lakh 50,000 bank account debit. Discount on issue. What is the discount? Discount is 10, means 2 lakh 50 to 14% debentures. To 14% debentures. This is the entry for A. As there is absence of information with respect to redemption, always assume that redemption is made at par if there is absence of information. Come to the B. To a vendor for purchase of fixed asset. I purchased a fixed asset from vendor. Entry. Fixed asset account to debit to vendor account. What? Fixed asset account debit to vendor account. Okay, sir. So, worth 10 lakhs, 10 lakhs. Fixed asset account debit to vendor, 10 lakhs. Fixed asset to vendor, 10 lakhs, 10 lakhs. So, to a vendor for purchase of fixed asset worth 10 lakhs, rupees 12,500 nominal value. Okay. You issued how much, sir? The nominal value of 12,500. Can anyone tell what is this? Yes. Yes, sir. Yes. Okay, let's see. The first entry for that, matlab for the case 2 I am talking. You purchased on fixed asset. Fixed asset account debit to vendor for fixed asset. How much? 10 lakhs. 10 lakhs. And you are giving them debentures worth nominal value how much? 12,500. Can anyone tell whether you are issuing a discount or at a premium? You are supposed to give them 10 lakhs, but means in other words, you are taking an asset worth 10 lakhs and you are giving an item worth 12,50,000. Yes, sir. But that is nominal value. If that is the case, that is the nominal value, that is that premium. Yes, yes, you are issuing at a discount. Sir, how you know that is discount? How much you are giving? How much you are giving? 12,50,000 worth of debentures you are giving. In turn, resource how much you are getting, whether it is cash or any other resource, how much you are getting? 10 lakhs. Means the worth of debentures you are giving is 12,50,000. In turn, you are getting either cash or any asset, how much? 10 lakhs means issue at what? Discount entry. Vendor account to debit 10 lakhs so that the vendor account will get cancelled. Discount on issue. How much is the discount on issue? 2,50,000. 2,50,000 to 12% debentures, 14% debentures. To 14% debentures, how much? 12,50,000. I hope you got the clarity. Yes, very good, sir. So 10 lakhs lo 10,000 lo already you issued worth nominal value how much? Here it is 12,500 divided by 500. 12,500 divided by 500, how much? Here also, wait, this third case I will see. So, for this 10,000 lo, you issued how much? 5,000, 2,500. You issued 5,000 and 2,500. Last one. A bank has collateral security. So, these collateral securities will be allotted only at the time of default made in the repayment of loan. Sir, I took a loan from the bank, yes, and I am giving as a collateral security, means tomorrow if I fail it to repay this loan, then automatically these debentures belongs to you. Automatically this belongs to you. Then you will become what? Secured. Okay, bank is also fine for that. So, at that time of taking a loan, there is no entry, sir, there is no debenture, sir. When you fail to repay the loan, now they will become what? Debentures. Yes. Loan, how much you took? 10 lakhs. Debit that loan account. Loan account debit, how much? 10 lakhs. Discount on issue, how much? 2,50,000 to 14% debentures, how much? 12,50,000. Here it is 2,500 debentures. Here it is 2,500 debentures. In the first case, 5,000 debentures. Done. Okay or not? I hope you got the clarity. So, first one, yes, how many debentures? 5,000. Yes, at 90. Yes, sir. How much you will get? 22,50,000. Yes. I didn't wrote the entry for that. Okay, wait, I will write. Yes. Better write entry for A. Cash account to debit 22,50,000. Discount on issue 2,50,000 to 14% debentures. That application, I hope I considered that entire amount is application element. I wrote the direct entry one entry. Done. Redemption is made at par. That is the assumption I considered. Done. CRD4 is also done. Yes. Yeah, sir. Discount on issue and loss on issue together. discount on issue, loss on issue, matlab that you are paying at a premium, shall be written off to P&L or SOPL, statement of P&L, not in the year 1, throughout the life of the debentures, in the ratio of outstanding debentures, What you are talking, sir? No, sir. There are 4 years. 1, 2, 3, 4. I raised the debentures worth 10 lakhs. Outstanding at the end of year 1, 10 lakhs. At the end of year 2, 10 only, same 10. At the end of year 3, same 10. At the end of year 4, same 10. So this is nominal value. So discount and issue or this loss on issue, both written off to P&L over the life of debentures, in the ratio of nominal value of outstanding debentures, in the ratio of nominal value. So I want to take the nominal value. So now you repaid at the beginning of 10th year, at the beginning of 5th year. Okay. Now imagine loss comes to ratio 1:111 ratio. Imagine loss and discount together comes to 1 lakh. How much? 1 lakh. 1 lakh. 1 lakh. Same 1 lakh. 1 lakh. Now, how much you are supposed to charge to P&L at the year 1? As per matching principle, I am talking. What is this? Is matching, because the corresponding benefit should be there in the SOPL lo. So corresponding cost has to be debited to P&L. P&L account lo 1 lakh into, in the ratio, equal ratio 1:4 means 25,000. Here also 25,000. Here also 25,000. Here also 25,000. Are you getting? Everyone, imagine case number 2. This is case number 1, sir. Important area. Come to the case number 2. What is this case number 2 is? Sir, 1, 2, 3, 4. No doubt, debentures is 10 lakhs. This is the debentures. But every year, an equal amount of 2,50,000 is redeeming, either by lottery or some other ways. Every year 2,50,000 is redeeming. First year, how much I utilized? Yes, sir. First year, how much I utilized? 10. Second year, 7.5. Third year, 5. Fourth year, 2.5 lakhs I utilized. Right? Imagine the loss comes to 1 lakh. The loss comes to how much? That is, imagine example, the loss comes to how much? 1 lakh. That 1 lakh into 10 divided by 25. Second one, loss comes to how much? 1 lakh into 7.5 divided by 25. 1 lakh into 5 divided by 25. 1 lakh into 2.5 divided by 25. Are you getting? This is how you are supposed to be compute when annual withdrawal is done at the end of every year. Equal annual withdrawal matlab you are making payment. No sir, uniform amount matlab at the end of the period I am making payment, then 1:1:1:1 ratio. No sir, I am making payment in this type of a form, then you are supposed to be how much you utilized for year 1, entire 10 lakhs. Second year how much you utilized, so total amount of loss is for 25. In that low, first year ki 10, second year ki 7.5, third year ki 5, fourth year ki 2.5. In that way, you are supposed to compute. That is the amount what is getting, you are supposed to be transferred to where? Profit and loss account. Right? Come to the problems. Yes, sir. Come to the problems. Yes, sir. Go through the problem. Completed? Very good. HDC Limited issued 2 lakh numbers of what? Debentures. 12% debentures. 10 each at అంటే issue at discount. Discount is equal to 2 lakhs into 0.6, which comes to 1,20,000. This is only my loss. Yes sir, this is only my loss on issue. Discount, okay, on 1st Jan, okay. Under the terms of issue, 1/5 of the debentures, and always then on the basis of what? This discount or loss on issue of debentures have to be amortized to P&L on the basis of outstanding nominal value of outstanding balance. Once again I am repeating, nominal value of outstanding balance. Very good. 1/5 of the debentures is annually redeemed by drawings. Okay, so I'll randomly pick whoever name is coming, I'll throw them that money. Okay, the first redemption is occurring on 31st December 2020, means for the full year of January, from January 2020 to December 2020, how much I utilized? Nominal value 2 lakh numbers into 10, 20 lakhs. This is for first year. 1/5 of this 20 lakhs comes to how much? 4 lakhs. Means at the end of the first year, as on 30th December, 4 lakhs is redeemed. Second year ki how much is the value? Outstanding nominal value of debentures before redemption. Outstanding nominal value of debentures at the end of the first year before redemption 20. Outstanding nominal value of debentures at the end of the second year before redemption 16. Have one column year 1, 2, 3, 4, 5. Second one, outstanding nominal value of debentures before redemption. Outstanding nominal value of debentures before redemption at the end of first year 20 lakhs. First year at the end, first year is there, no? At the end of first year 20. At the end of second year, second column 16. End of third year 12. End of fourth year 8. Last year 4 lakhs. So first one, first top at the end of, first column at the end of 1, 2, 3, 4, 5. Second one, nominal value of the debentures outstanding before redemption 20, 16, 12, 8, 4. Now the ratio of benefit, in which ratio you derived that benefit? 5, 4, 3, 2, 1. 5, 4, 3, 2, 1. First year lo you utilized 20 lakhs. Second year lo 16. Third year lo 12. Fourth year 8. Last year 4. Means 5, 4, 3, 2, 1. This amortization, the last column is amortized to P&L. Amount charging to P&L or amortized to P&L. How much? Discount into 1,20,000 into. Yes sir. 5, 4, 3, 2, 1. How much? 5 plus 4 9. 9 plus 3 12. 12 plus 2 14 plus 1 15. Right? Right. 1,20,000 into 5 by 15. First one. 1,20,000 into 5 by 15 means 1 by 3. 1,20,000 into 3. First year is 40,000. Next. Second year. 1,20,000 into 4 by 15. 1,20,000 into 4 by 15. Yes. Very good, sir. 32,000. Can anyone tell third year? First year it is how much? 40. Second year how much? 32. Third year 24. Second, I mean fourth year 16. Last year 8. 1 lakh 20 divided by 15 into 1. 8 for the end of first year 40, end of second year 32, end of third year 24, end of fourth year 16. Yes, means first year ki how much? 40,000 charge to P enter. Second year ki 32,000 charge to P enter. Third year ki 24,000 charge to P enter. Fourth year ki 16, fifth year ki 8,000 charge to P enter. This is on the basis of nominal value of outstanding value of debentures. Nominal value that you have focus on. I hope you got the clarity over this. Yes, how many columns? 4 at the end. Second one, outstanding at the end before redemption. Third one, in the ratio of benefit derived. Fourth one, amount charging to P and L. Super, sir. Next. One more last problem, sir. Simple problem, nothing is there. Yes, last problem. So just now we have discussed, no, that is the important problem, that debentures. If entire amount is redeemed on the last day, then on the uniform ratio 1:1:1:1, it is on a drawings, annual drawings base, then it should be on the ratio of benefit derived. So according to that ratio, amortize that discount or loss, whatever it may be, to the P and L. Company issued 12% debentures of the face value rupees 10 lakhs at 10% discount on 1/1/2020. Very good. Debenture interest after deducting tax at source 10% was payable on 30th June and 31st December. See, what is this TDS means? Sir, CA Inter lo you will have TDS concepts from section 192, 193, 194, 195, 196, TDS sections, even 197. Very good, sir. So, according to that TDS sections, if you are paying interest on debentures, yes sir, I am paying interest on debentures. Income tax law, if you are paying interest on debentures, the interest to whom you are paying? Yes, recipient. How much? If 1 lakh is, if you are paying interest, reduce tax at the rate of 10% means how much? 10% means 10,000. Balance 90,000 only pay to whom? Pay to the recipient. How much? Balance 90,000 only pay to the recipient. Yes sir, balance 90,000 only pay to the recipient. What about this 10,000, sir? The 10,000 pay to the government in the name of this guy. That guy is there, to whom that 90,000 is paid. Don't pay the 10% amount, that is 10,000, to that person, pay to the government. Yes, on behalf of this person. Income tax. What the 10% position? Come to CA Enter, you can CA Enter, you can learn all about that TDS provisions and all that. Done. Fine, sir. Come to the accounting entry, sir. Interest is the expense. Yes, sir. Interest account to debit. How much? 1 lakh. 2. Debenture holder 90,000. 2. TDS payable 10,000. When you are making payment, debenture holder account to debit 90,000. TDS payable under section. How much TDS payable? 10,000. 2. Bank is going out 1 lakh. This is the simple entry. Now, so what they are telling? 12% debentures, even though they are issued at a discount, the interest will be paid on the nominal value. Interest will be paid on the nominal value. Pass the journal entry. First entry. Bank account debit 9 lakhs. Bank account debit 9 lakhs. To debenture application 9 lakhs. Application and allotment 9 lakhs. That is 12% debenture application and allotment. Second entry. 12% debenture application allotment account debit 9 lakhs. Discount account debit 1 lakh. To 12% debentures 10 lakhs. Assume that redemption is made at par. These two entries is to pass on 1st January 2020. Come to the 30th June. Pass one entry for interest. Interest will be always paid on the nominal value. 10 lakhs is the nominal value. Apply 12%, which comes to 1,20,000. Now, interest account debit 1,20,000 to debenture holder. To debenture holder account debit 98,000. Why debenture holder 98? Interest 1,20,000. In this 1,20,000, apply 10%. How much? 12,000. This 12,000 pay in the form of income tax. So that is TDS payable. Credit debenture holder only to the tune of 98,000. Now entry interest account, interest expense account debit 1,20,000 to debenture holder account debit 98 to TDS payable account to government. TDS payable to government. How much? 12,000. On the date of payment, on the same day, 30th June, debenture holder account debit 98, TDS payable account debit 12 to bank 1,20,000. Done. But this interest is for not 12 months. This interest you need to compute for 6 months. Right? But are getting, sir? Completed? Yes. Yes, that is for full year. Means for 6 months how much? That's what I said, no, sir. Sir, on 30th June, 31st December. This is for 6 months interest. This is for 6 months interest. Here the interest is 60,000. TDS is 6,000. Here the interest is 60,000. TDS is 6,000. Here the entry. Debenture interest or interest account 62. TDS payable 6 to debenture holder 54. Entry. Next one more entry. TDS payable account debit 6. Debenture holder account debit 54 to bank 60. Done. Same two entries here also. Because that is 10%. Means for 6 months half. 6 months half. You have to give the time proportion. 10 lakhs into 10% into 6 by 12, which comes to 60,000. Same here also. 10 lakhs into 10% into 6 by 12, which comes to 60,000. Same here also. Yes, sir. Entry gets, this chapter gets over from my end. Important thing you need to see that just now I said one problem, discount problem is important. This problem is also equally important. But the thing you are supposed to remember, redemption at premium, issue at par, you will get that extra premium payable on and loss on issue. Issue at discount, redemption at premium, you will get the extra column. Issue at premium, redemption also premium. When that redemption is there, that loss you are supposed to consider is the difference between face value and the redemption value. That is what premium payable, that is what loss, that's it. More than that, nothing is there in this chapter. Yes. Yes, a chapter completed from my end. Thank you. Yes, sir. Let us begin with one more new chapter. Redemption of debentures. Yes, sir. Easy only. Comparing to at least preferentials, it is very easy, sir. Nothing is there in this redemption of debentures. Very easy chapter. Earlier, this is formed part of your CA Inter. Recently, under the new curriculum, it is brought into the foundation level, and in CA Inter, there is one peculiar method, which is that method is known as purchase from open market, and that method itself is not there in the foundation level. Pretty easy only, nothing is there. Basic general entries. Some calculation of DRR, that debenture redemption reserve, as per section 71 subsection 4 of Companies Act, and one more DRRI. If you know how to calculate and when to transfer how much of amount from where to where, nothing is there in this chapter. Yes, sir. Redemption of debentures. Redemption in our colloquial language, it is nothing but what, sir? Repayment. Repayment, or in other words, discharging an obligation. What, sir? Discharging an obligation. What is this discharging an obligation? Yes, like I said, debenture is a debt instrument which tells a debt made to a company, debenture document which speaks the debt made to the company. Very good. Now tell me, sir, when this debentures I borrowed money in the name of debentures. The debentures loan what I borrowed, I am repaying now. That is the whole story. How much I took that loan in the name of debentures? I took the debentures loan worth 10 lakhs. Very good. Some 8% to 12% interest. Now, I said I will repay after 10 years. The maximum is 10 years. We have to repay 10 years. Or if it is an infrastructure projects company, the maximum tenure is 30 years. Now, I need to repay them. Yes, sir, I need to repay them. Okay, sir, I am repaying what and all the journal entries and what is the financial impact in your books. That is the whole story. Yes, sir. When you took that loan, I already covered in the issue of debentures entry. Bank account to debit. 2. Debenture application. In our case, imagine that is 10 lakhs. Bank account to debit, debenture application. Next one. Now I am converting this debenture application into percentage of debentures. Matlab, the moment I allotted these debentures, debenture application account to debit to 15% debentures, 10% debentures. That is the whole story. Bank account debit to debenture application account debit 10%, 15% the coupon rate, the interest rate which you need to pay annually. Yes, sir. Some companies they used to pay once in 6 months. Yes, nothing wrong. They will tell the dates. According to the dates, they will have to follow the instruction. Perfect. Up to this, okay. Next. Now this is the issue related entry. When you are repaying, what is the entry? 15% debentures account to debit. How much? 10 lakhs. 2. Debenture holders account. 2. Debenture holders account. How much? 10 lakhs. When you are making payment, what is the entry? Debenture holders account debit to bank account. Debenture holders account to debit to bank account. How much? 10 lakhs. As simple as that. But it is not that simple. Companies Act is forcing you to create some reserve create some DRR and DRRI for this smooth functioning of this repayment on all this stuff. We will discuss that. Are you getting? This is on the year of issue, in the year of issue. This is in the year of repayment, assuming issue at par and redemption at par. Assuming issue at par and redemption at par. Okay, sir. I will slightly tell what is the premium and all that stuff. Wait. Next, sir. Next. Sir, how I am repaying? There are 4 methods, sir. Method 1. Purchase from open market. That method is not there in the foundation level. Purchase from open market. That is nothing but purchase of own debentures and cancelling them, fine. Not in your syllabus. So forget about that. Next one. By repaying lump sum amount. By repaying lump sum amount. By repaying lump sum amount. What is that by repaying lump sum amount, sir? I said I will repay after 5 years. After 5 years, I am repaying the entire amount. This is known as by repaying lump sum method. Next, by annual drawings method. By annual drawings method. What is this by annual drawings method? If you remember, I covered one problem at issue of debentures law. I think if I am not wrong, they procured some 5 lakhs. Every year they are repaying 1 lakh, 1 lakh, 1 lakh. How you used to amortize your discount on loss on issue of debentures, if you remember. That is nothing but what, sir? Annual drawings method. Means at the end of every year, certain portion of debentures by drawing method they used to repay. By annual drawings method. If you remember, at issue of debentures I covered this. Last. Conversion into shares. Conversion into shares. Are you getting? And one more by special notice that is not required. Forget about that. From law you can learn in that law. And one more method is also there, like at any time after the end of the specific time. At any time after the end of the specific time, fine. Not required for accounting point of view. Fine, sir. Now this method itself is not there. Purchase from the open market, but repaying lump sum, we will solve one problem on this. By annual drawings method, we will solve one problem on this. By converting into equity, we will solve one problem on this. And consolidated, we will solve one problem. Done chapter. What is by repaying lump sum? By annual drawings, by converting into shares. Each method I will solve each one. One problem consolidated, else chapter will get over. Now, the governing sections is section 71, subsection 1 of the Companies Act is telling, whenever you are issuing convertible debentures. What debentures? Convertible debentures. Yes, sir, I am issuing convertible debentures. If you are issuing convertible debentures, at the time of issue of these debentures, pass what? Special resolution. Sir, what is meant by convertible debentures? Convertible debentures means there is an option to this debenture holder at the end of the life of the debentures. If you want, you can convert into equity shareholder, or if you don't want, then take your money and get out from the company. Are you getting, sir? Sir, I am giving one option to you at the end of the life of the debentures. If you want, convert into equity shareholder. If you don't want, take the money and get out from the company. That is what is convertible debentures. Converting into what? Shares of the company. Are you getting? When you are issuing this type of debentures, convertible debentures, at the time of we are issuing equity shares to them, that is nothing but affecting your section 62. What is the section 62? Further issuance of shares. What is this further issuance of shares? Whenever issuing any further shares, the first option shall be given to whom? Existing equity shareholders. If you are not giving to the existing equity shareholders, you need to pass special resolution. That point, section 71 and section 62, if you read together, section 62 ki exception, what is that? Even though you are issuing equity shares to the debenture holders, Not special resolution. No special resolution is required at the time of conversion, provided special resolution must be taken at the time of issue of debentures. I hope you are getting the clarity. At the time of issue of debentures, take what? Special resolution. Come to one more point. Section 71 subsection 2. No company shall issue debentures which carry voting rights. Yes. Yes. I am paying interest, even that interest I am paying out of my, means charge against my profits. Even I am not having profits, I am paying you that interest. Please don't interfere in the matters what is going in the company. Take your interest and get out from the company. Matlab, don't interfere in our internal matters. Next one. This is our DRR. Sir, the moment when company issued debentures, at any time during the life of the debentures, transfer some amount from the profits available for dividend distribution. Transfer some amount from profits available from dividend distribution. Profits available for dividend distribution. Profits available for dividend distribution. To DRR. DRR. It is not CRR, capital redemption reserve. It is DRR, debenture redemption reserve. What is this nonsense? No, sir. A minimum percent of 10%. How much? A minimum 10% on what? Debentures issued, on the nominal value of debentures issued. Minimum 10% on the nominal value of the debentures issued shall be transferred from where to where? From your profits, which is available for dividend distribution, which is nothing but free reserves, to DRR. How much percent? 10%. On what? On the nominal value of debentures issued. At what time? At any time during the life of the debentures. Transfer from where to where? Free reserves to DRR. What is free reserves? Which is available for dividend distribution, including current year profits, to DRR. Now tell me, why this nonsense? That I am not telling maximum 10, this is the minimum 10 to have smooth functioning of the company in relation to what? Debenture holder. Who will see whether I created or not? Debenture trustee will see whether I created this 10% or not. Who is the debenture trustee? Who is the representative for all these debentures holders who are all there. Now, whether I created this DRR or not, he will verify. Yes, sir, I created. Why this DRR means? It will increase the confidence level on the debenture holder that that company is in an intention to repay that money to us. That is the reason they created DRR. Are you getting, sir? Minimum 10%. If you want, you can create 50. If you want, you can create 100% also, no problem. From profits to where? DRR. What is the entry? Entry. Profit and loss account to debit. Account to debit to DRR. Very good. This profit and loss, maybe you can also replace with general reserve or free reserve, whatever it may be. Sir, which company need to require to create this DRR? First one, company which is issuing debentures. Sir, I am not issuing debentures. Then why this nonsense of DRR? DRR will comes into existence only when we issue what? Debentures. Okay. Yes, sir, debentures are issued. Now, sir, who I am? I am a company. Sir, will it require this DRR for all the companies? Answer is depends. Sir, for which company this DRR applicable? For which company this DRR not applicable? It depends upon what type of a company you are. What is the meaning of what type of a company you are? Sir, I am a listed company. What is the meaning of listed company? Listed company is that company which is listed with any of the stock exchange. Unlisted company, my company shares are not listed in any of the registered stock exchange. I am an unlisted company. Oh, very good. I am a listed company. If you are a listed company, when you are taking some money from the public in the name of debenture holders, forget about company law. SEBI law is forcing so many restrictions on you. Some better rules were there. Now, this DRR is not required. When this DRR is not required, when you are a what type of a company? Listed company. All listed companies are exempted to create what? DRR. Why? SEBI rules, some stringent rules were there, follow that stringent rules. Come to the unlisted company. You are unlisted company. Yes, sir, I am an unlisted company. You are mandatorily compelled to create what? DRR. How much percent? At the rate of 10%. On what? Nominal value of debentures issued. Nominal value of debentures issued. Are you getting, sir? Sir, if there is any convertible portion, for example, I issued 10 lakh debentures at an option, tomorrow 4 lakhs means at the time of redemption 4 lakhs will be converted into equity shares. Then DRR is required on these balance 6 lakhs. Where a company issued convertible debentures, on the convertible portion no need of DRR, on the balance portion only create what? DRR, which is 10% on the nominal value. Sir, I am an unlisted company. All unlisted companies are required to create what? DRR except 4 companies. Except 4 companies. Sir, I am an all India financial institute which include banking company and all these things. Sir, I am an all Indian financial company which includes what? Which includes banks and all other things. No, sir. I am financial institutions which is covered under section 2 subsection 72. What is this? I think some LIC. If you are a financial institutions which is covered under section 2 subsection 72 of the Companies Act, once again for you which is not required, which is your DRR is not required. I am talking about listed or unlisted? Unlisted. Listed anyhow exempted. All India financial institutions, banks and all these things governed by RBI having stringent provisions. Once again these provisions are not required. Next. NBFC, yes sir, NBFC also unlisted, no DRR is required. Some stringent provisions is there, we will follow that provisions. Next. Housing financial companies. When you are all Indian financial institutions or you are a financial institution which is covered under section 2 subsection 72 or you are a non-banking financial company like Bajaj companies, all these non-banking financial companies which they will not perform, which they will perform banking functions but they will not have a power to collect demand deposits from where? From the public. Matlab in the name of saving deposits and all this stuff where banks is performing. Not required at this level. Relating to in-depth analysis of these companies at enter final level you can learn all these companies. And one more, housing financial companies. If you are belonging to that, you are listed, anyhow exempted. Unlisted, exempted. Except these, for any unlisted company you are supposed to create a minimum of 10% of what? DRR. Minimum of 10% of what? Debenture, redemption, reserve. I hope you are getting the clarity on this. Yes sir. Next. Last at any time. But in our academics law, most of the suggested answers or most of the authors what they are doing, including our ICAI suggested answer, even though in the in the provisions it is there at any time, but on the date of issue, when sir? On the date of issue. On the date of issue only create what? DRR. From where? From P&L. Entry. Profit and loss account debit to DRR. When? On the date of issue only create your DRR. That is what sir? Minimum of 10% on the nominal value of debentures issued. I hope you are getting the clarity on this. Sir, for whom DRR required? Sir, I am an unlisted company. For me, DRR required? No. Sir, I am a listed company. For me, DRR required? If you are a listed company, DRR not applicable for you. If you are a listed, DRR not applicable. Sir, I am an unlisted company. Yes, sir. Unlisted company? Yes, sir. If you are falling under these 4, yes. If you are falling under these 4, once again not required. Other unlisted, for other unlisted only what is required? DRR is required. For other unlisted, DRR is required. What are those 4? All Indian financial institutions which is covered under section 272 which covers your LICs and all these things. all Indian financial institutions, which includes banks also, and NBFC, non-banking financial companies, and housing financial companies. All these, if you belong to these four, then even though you are an unlisted, not required. Rest every unlisted, prepare, I mean, maintain what? 10% of your from profits to DRR at the time of issue only, as per our suggested answers. Next one, sir. DRRI. DRRI. What is this DRRI? Debenture Redemption Reserve Investment. Debenture Redemption Reserve Investments. Yes, sir. Whatever the money you have created in the name of DRR, that amount, which includes some other amount, invest in the unencumbered securities or some risk-free securities. For why? On the date of repayment, to have liquid funds for the repayment. What is this nonsense? Sir, this is the financial year. This is one financial year. This is one financial year. This is on 1st April. This is 31st March. 1st April, 31st March. 1st April, 31st March. Sir, what is this DRRI means? Go and check for the current period as on 31st March. What is the nominal value of debentures you are redeeming? Yes, sir, I am redeeming nominal value of debentures 1 lakh. If you are redeeming nominal value of debentures 1 lakh on this 31st March, a minimum of nominal value on this nominal value, minimum 15%. Before which date? 30th April. From where to where? Minimum. And this is before. Invest in the investments. DRRI investments account debit to bank account. How much? 15%. On what? Nominal value of the debentures which is redeeming at the end of the current period. For DRR, it is on the life, matlab throughout the life, how much you are repaying after 10 years, 15 years, after 5 years. Take that, on that 15%, create as what? 10%, create as what? DRR. For DRR, it is 10. For DRRI, it is 15%. What is this 15%? Invest in the investments. For the first entry, no cash outflow. Some profits create what? DRR. But for DRR investments, cash outflow is there. You need to purchase some investments for to what? Having some liquid funds in your hand at the time of repayment. Similarly, next year also I am repaying 1 lakh. On this nominal value, 15%. On our 30th. One more. On the next year also I am repaying 15%. When? On our 30th. Here it is how much? 15. Here it is 15. Here it is 15. Invest in where? Invest in your DRRI. On the date of redemption, sell this investments. Sell this investments. Mobilize the cash. Use this cash to repay these guys. Use this cash to repay these debenture holders. Some excess balance you require, some 85. Bring from your cash and throw it on their faces. Throw on their face. I hope you are getting the clarity. On this, once again 15,000, and on the date sell these investments, get 15,000. In the problem they will tell whether you are getting 15 or more than 15 or less than 15. Get that amount more or less so and use that amount to repay these guys. Same way third case also. Are getting one more. On these debenture investments, DRRI, you will earn some interest. The interest what you are earning on these debenture redemption investments, that interest you are not reinvesting. You are assuming, your ICAI solutions is assuming that this is not reinvesting. Hence, take to the P&L account. Bank account debit to interest, interest account debit to P&L account. Bank account debit to interest, interest account debit to P&L account. I hope you are getting the clarity. Yes sir, I am getting the clarity. Imagine if you are repaying by annual drawings method, okay, this is fine. If you are not repaying annual drawings method, you are repaying lump sum method. Year 1, year 2, year 3. Year 1, year 2, year 3. Yes sir, year 1, year 2, year 3. Now in year 1 low, I mobilized some 3 lakhs and that is repaying on this date. Now lot telling before this date, before April 30th, matlab before April 30th of this year, year 3rd, you need to invest at any point of time 15,000. At before that date, at any point of time, invest how much? 15 not, it is 15%. 15% on this, 15% on this 3 lakhs comes to 45,000. 15% on this 3 lakhs comes to 45%, 45,000. Now this 45,000 invest in where? DRRI. Now in our suggested answers flow, all the suggested answers, even though you are repaying at this year, even though you are having time up to this date, on the date of issue only create DRRI. Once again I am repeating, even though you are having time up to this date, on the date of issue only create what? DRRI. I hope you are getting the clarity. Sir, entries for DRR and DRRI. P&L account to debit. 2. Even if you are having general ledger, use the general ledger. 2. DRR. When? On the date of creation. As per your ICAI solutions, when you are creating this, on the date of issue only I am creating. Next. On the date of repayment, when you are repaying that money, sir, until repayment, this DRR cannot be used for any other purpose. This debenture redemption reserve can only be used for the purpose of redemption. It cannot be used for any purpose. Once the redemption is done, throw it on the face of once again P&L or general reserve. DRR account debit to general reserve. I hope you are getting. This entry is on which date? On the date of redemption. This entry is on which date? On the date of issue. But this is what? For DRR. For whom this DRR will be applicable? Yes sir, this DRR will be applicable to. You are a listed company? Yes sir, I am listed company. Not required. SEBI is looking much better rules. You are an unlisted? Yes sir, I am an unlisted. If you are belonging to these 4 companies, once again not required. All Indian financial institution, NBFC, housing finance companies. In these 4 companies, once again not required. What is that not required? DRR is not required. Other unlisted, DRR required. Come to DRRI. I think DRRI, for whom this DRRI applicable? Wait, I will tell. Before that, when you are purchasing, what is the entry? Sir, even when you are following, even when you are repaying on annual drawings method, our ICAI suggested answers low, on the day 1 entire 45,000 you are investing on the DRRI. On this day 1, 15, 45,000 they are investing as per our suggested answers. What is this? DRRI entry. DRRI account to debit. Debenture redemption reserve investments account to debit to bank account. Debenture redemption reserve investments account debit to bank accounts. Debenture redemption reserve investments account debit to bank. For example, in our example, 45. If you are earning any interest on this, bank account debit to interest account, assuming this interest is not reinvested. In our suggested answers, it is not reinvested. Bank account debit to interest on what? This DRRI investments, and transfer this interest to where? P&L account. Interest account debit to P&L account. On the date of redemption, sell off these investments, Generally in answer they will tell at what value you are selling. Generally they will tell that par value you are selling. Bank account debit, selling that your bank balance is increasing to cancel your, matlab you are selling your investments, DRR investments, then will balance will decrease. How much? 45. I hope you are getting the clarity. Next one is for whom this is applicable. Once again companies are classified into two. Question lo they will tell which type of company you are. If the question is not telling, you assume that it belongs to other and unlisted. Why? Means for other unlisted both will applicable, that is the reason. Yeah, DRR. What is this DRR? You are a listed company? Yes, I am a listed company. You are an unlisted company? Yes, I am an unlisted company. All listed company, DRR applicable. Wow. All listed company, DRR applicable. All unlisted company, yes sir, I am an unlisted company. Once again, DRR applicable. Then why you wrote 2 times? Wait, ruko jara. Yes. If you are a listed company, yes sir, I am a listed company. If you are belonging to these 2 companies, DRR not required. What are those 2 companies? All Indian financial institutions, other financial institutions as per section 2, subsection 72, like LICs and all this stuff. Sir, I am a listed, DRR applicable? Yes. I am a listed, AIFI listed, DRR applicable? No. I am a listed, other financial LIC, DRR applicable? No. No, not applicable, not applicable, except for these 2, all listed applicable. Sir, I am unlisted, DRR applicable? Yes, applicable. But I belong to those 4 companies, not applicable. What are those 4? All Indian financial institutions, next NBFC, next housing board financial companies, housing financial companies. I hope you are getting the clarity. Sir, apart these 4, any other unlisted, DRR applicable. How much rate? 15%. On what? On nominal value of debentures which is redeeming at the end of the current year, but we will never calculate on this. We will take the at the end of 5th year, 4th year, how much you are repaying on that 15%, and you will throw it on the face of what? DRR. We will create that DRR. Sir, how to remember? Remember techniques and all, I am not that well about these techniques, but I can hardly tell one thing. For DRR, debenture redemption reserve. Sir, you are a listed company. Yes, I am a listed company. Not applicable, not applicable, not applicable. You are an unlisted. Yes, sir, I am an unlisted. Inside unlisted, I belong to 4 category. Not required. That's it. Inside unlisted, I belong to 4 category. Not required. What are those 4? All Indian financial institutions, other financial institutions, and one more NBFC and housing financial companies. How to remember? How to remember this DRRI? What are these rules of DRRI? Yes, you are listed. Yes, I am listed. Applicable, applicable, applicable. Except for 2. What are those? All Indian financial institutions, other financial institutions. Unlisted. All unlisted it is applicable except for 4. Except for 4 means NBFC listed applicable, unlisted not applicable. Housing finance company listed applicable, unlisted not applicable. Fine, sir. That's it. Sir, as per ICAI suggested answers law, they are taking on the day 1. We will also take on the day 1. Yes, I will teach the entries part. What and all entries will come. Once entries is done, then we can move to the numericals part. Yes, sir. Come to the entries part. Accounting entries. Accounting entries in the books of so and so company. In the books of so and so company. Yes, sir. I issued debentures. Imagine issue at par, redemption at premium, or even some cases issue at premium, redemption is also at premium. Entry. Bank account to debit. Sir, imagine I am receiving 10 lakhs. Issue at par. Redemption is at premium. 2. Debenture application. Debenture application. Next, sir. Debenture application account to debit. 2. Percentage of debentures, whether it is 8%, 9%, 10%, as the case may be, and you are repaying at a premium. Perfect, sir. Next. Now this is issue at par. Issue at par. Now you are repaying at a premium. How much premium? 10%. Now entry. Debenture application account to debit. Debenture application account to debit. How much? And either you want to write 2 entries or you can also adjust in 1 entry. Loss on issue account to debit. How much is your loss? You are repaying at a premium of 10%, which is loss on issue 1 lakh. 2. If it is 10% debentures, 10% debentures will be shown at face value 10 lakhs. The balance 1 lakh is nothing but 2 premium payable on redemption of debentures. Premium payable on redemption of debentures. I hope you are getting the clarity. These 2 entries are passing at the time of issue, right, sir? Yes. Sir, issue at par and redemption of premium. Okay, you can also see that entry also. Sir, you can also write debit this, credit this as 1 entry, and you can also write debit this and credit this as a separate entry. Anything is fine. Next. Sir, issue at premium, redemption is also at premium. Issue at premium. 1 lakh debentures, or in other words 10,000 debentures. 10,000 debentures, face value 100, but you are issuing at 10,000 into 105, but you are repaying at 10,000 into 110. I hope you are getting the clarity. Yes, repaying at a premium 10 rupees, issue at a premium 5 rupees. Pass the entry. At the time of issue, I already covered at the time of issue chapter. Just we are once again supposed to pass these entries also. That is the reason I am asking. If the question is asking about pass all the entries from the first year to the last, means you are supposed to pass these entries also. I am once again recollecting these entries. Entry. Bank account to debit. 2. Debenture application account. How much? How much means 10,000 debentures into 105. 10,000 debentures into 105. 10 lakh 50,000. 10 lakh 50,000. Now, pass one more entry. The concept of premium will come into existence when you allot these debentures. Debenture application account to debit. How much? 10 lakh 50,000. Next, what is this debenture application, sir? The debenture application is 10 lakh 50,000. Now, 2. 10% debentures. How much? 10 lakhs. 10 lakhs. 2. Securities premium. How much? 50,000. How much? 50,000. I hope you are getting the clarity on this. Yes, sir. Come to the one more entry. What is that one more entry, sir? I am having a loss. Loss on issue account to debit. How much is the loss on issue? 10,000 debentures, which is 10 rupees per debenture, which comes to how much you are repaying extra? 10,000 into 10, which is nothing but 1 lakh, if I am not wrong. Everyone? Yes, sir. 2. Premium payable on redemption. How much? 1 lakh. I hope you are getting the clarity. Debenture application to 10% debentures to securities premium, loss on issue account debit 1 lakh, to premium payable on redemption 1 lakh. You can also club this entry and you can also write as one entry. Debenture application account to debit. How much? Debenture application is 10 lakh 50 and loss on issue how much? Loss on issue account to debit, that is 1 lakh. To 10% to debentures, to securities premium, to premium payable on redemption. I hope you are getting the clarity. This is 10 lakhs. This securities premium is 50. This premium payable is 1 lakh. If you want to write 2 entries, okay, you can find past 2 entries, or you want to club it and you want to write 1 entry, and all these entries I covered at the time of issue of debentures. This is the first entry what you are supposed to be record. Perfect. This is, I said, when issue at par and redemption is at premium. Generally in the question they will have premium. Done. ICAI suggested answers is asking you to calculate DRR on the day 1 itself. But as per the provisions of the Companies Act, at any time during the life of the debentures, you can create from your free reserves or profits which are available for dividend distribution to DRR. But in our ICAI suggested answers, on the day 1, when you are issuing debentures, on the day 1 you are creating what? DRR entry. P&L account to debit to DRR. For all type of companies this is required, or only for the specific companies? Yes, all listed companies not required to create DRR. Unlisted companies, if you are falling under the category of those 4, what are those 4? All India financial institutions, other financial institutions, and NBFC and housing financial companies. Once again, even though they are unlisted, DRR not required. For all other unlisted, DRR required. P&L to DRR account how much? Nominal value, 10% on the nominal value of debentures issued. If you issued any convertible debentures, that convertible portion not required to create DRR, and the balance portion which you are supposed to redeem, on that portion you are supposed to create your DRR. Perfect. 10 lakhs into 10%, which comes to how much? 1 lakh, which comes to 1 lakh. To DRR 1 lakh. I hope you are getting the clarity. Next, sir. Next, even on the same day create what? DRR investments. What is the rule as per the Companies Act? What and all the debentures which are going to be redeemed at the end of the year, which is on the current period ending on or before 30th of the April, please create 15% of the outstanding value of the debentures, nominal value of outstanding. But what we are doing, 15% on day 1 on the total value of debentures what you are redeeming. That is what the ICAI is following. We are also following that. What is the entry for DRR investments? DRRI account to debit, DRRI account to debit to bank account. DRRI account debit to bank account. How much? 15% on nominal value of debentures issued. How much? 10 lakhs, which is 1,50,000. Sir, for whom this DRR I will be applicable? Sir, I am a listed company. Yes, DRRI applicable. Except for those two, even though listed, not applicable. All Indian financial institutions, other financial institutions. Sir, I am unlisted. For me, DRRI applicable. Yes, except for those four. What are those? All Indian, other financial institutions, NBFC, and one more. One more is what? Housing financial companies. Unlisted housing financial companies, not required. Listed housing financial companies, required. Unlisted NBFC, not required. Listed NBFC, required. Just go through the table. Just in the last class I covered. Everyone, perfect. Next, sir. Now, you need to pay the interest to the debenture holders. You will receive interest on DRRI. First, pass that interest entries. Interest account to debit. Either you can create one due entry, but I am writing directly bank account. How much is the investments? 10 lakhs. What is the rate I said? 10%, which is, imagine yearly once I am paying, I am writing 1 lakh and charge this to where? P&L account. Charge this to where, sir? P&L account. Interest charge to P&L. Now, come to in the year of redemption. I am writing entries in the year of redemption. Issue year done. Even you can issue some interest, sir, on DRRI. You are receiving some interest on what? DRRI. Entry. Bank account debit. ICAI is solving problems by taking an assumption that these interests are not reinvested in the what? In this DRRI, because the minimum balance that should be required is 15%, hence 15 is there. They are assuming it is not reinvested. Entry. Bank account debit to interest on DRRI account. How much you will get? Imagine some 10% means 15,000 you will get, and don't add to DRRI, take this to P&L. Take this to P&L income side. This P&L debit side. I hope you are getting the clarity. Maximum entries you will get on the year of issue, and this loss I said to be amortized over the useful life of debentures, or the life of the debentures. If it is 10 years means 10 years on equal proportion. If it is redeeming on yearly basis on annual drawings means nominal value of outstanding debentures before redemption you have to take. In that balance you have to amortize. If you remember, I said one problem on this also. Next. What is the next? In the year of redemption. In the year of redemption. Sir, in the year of redemption, first entry, when you are redeeming these debentures, sell off your investments what you are having. Entry. Better write first due entry. 10% debentures. How much? In our example, that is 10 lakhs. One liability I created, premium payable, cancel that liability when you are repaying. That liability is not required. The liability what I created here is a liability which will be shown in the balance sheet. Now, cancel that liability. Premium payable on redemption account debit. How much? 1 lakh. 2. Debenture holders account 11 lakhs. I hope you are getting the clarity. Next entry. Sell off your what? Question load they will tell. If you are not telling, assume you are selling at face value. Bank account debit to DRRI. How much? 15,000 you are selling. Very good. Now, the moment you are redeeming your debentures, balance in the DRR reserve account, back not required. Once debentures are issued, once debentures are repaid, that DRR balance is not required, transfer that balance from where to where? DRR to general reserve. DRR account debit to general reserve account. What is the balance left? 1,50,000. Yes. Repay these guys, debenture holders too. Debenture holders account to debit to bank. How much? 11 lakhs. I hope you are getting the clarity on the entries part. Nothing is there. The new thing what you are learning on the date of issue, DR is 1 lakh. Okay. On the date of issue, create a new reserve DRR from your profits that are available for dividend distribution. Next, DRR I account to debit to bank. What is this? Investments made. And next entry, interest account to debit to bank account. Next entry, you are receiving interest. So these interest entries are not that new, but these two were the new entries. And this is a new entry which you are learning now in this chapter. And this is a new entry. Okay, so far we might not cover this part. And this is a new entry. Payment part, okay, fine. Even preference shares also you are making payment. That's it, sir. If you know why this entry came, and if you know why this entry came, and you know why these two entries came, nothing is there in this chapter. Just a random figures I took and I gave one example. That's it. And amortization of this depends upon what? How many years were there? If you are repaying lump sum on one day, then on the life the life of the debentures, amortize in equal proportion. If the apportionment will change when you are repaying in annual drawings method. If you remember, I have done multiple problems on that debentures chapter relating to this. Yes. Can I move to the numericals? Yes. Yes, sir. Numericals. All folders. Sivacharan sir. EO batch. Redemption of debentures. Perfect. Come to the questions part. Come to the second question. Yes. Yes, sir. Read the second one. X Limited has a balance of 42 lakhs in the P&L account. Just it is an information what they are telling. In my P&L account low, I am having a balance. How much? 42 lakhs. Very good. The company decided to forego the payment of dividend and instead utilize the profits to repay 30 lakhs. What they want to tell? They are not, the shareholders is not taking any dividend. In other words, company is not making any payment to that shareholders. Instead of that, they are utilizing that profits to repay 30 lakhs. I hope you are getting the clarity. Next, 12% debentures issued on, when you issue these debentures, 1st April 2018. Very good. Fully out of profits on 30th June 2022 at a premium of 10%. Beautiful. Read, sir. X Limited has a balance of 42 lakhs in the profit and loss account. The company decided to forego the payment of dividend and instead utilize the profits to repay 30,000 to repay 30 lakhs 12% debentures issued on 1st April 2018 fully out of profits on 30th June 2022 at a premium of 10%. Means 30 lakh debentures. 30 lakh debentures. Now they are repaid at a premium of 10%, which you are repaying 33 lakhs. Perfect. And you are repaying on which date? On 30th June 2022. I hope you are getting the clarity. Debentures worth 30 lakhs. The profits to repay 30 lakh, 12% debentures. They are talking about nominal value. They are not talking about at what price. Fully out of profits at a premium of 10%. They are telling this 30 lakhs I want to repay, and at a premium of at a premium of 10% they want to repay. Very good. As per the provisions of the Companies Act 2013, minimum DRRI created. What is the minimum DRRI created? 30 lakhs into 15%. If I am not wrong, 4 lakh 50. Minimum DRR created is how much? 4 lakh 50, and they are only telling as per the provisions of the Companies Act 2013, minimum DRRI is created. Debenture interest is payable annually on 31st every year when the accounts are closed. The accounts are closed on 31st December every year when the accounts are closed. Okay, they are paying what? Interest on the 31st December, and the accounts are also closing on that day. Okay. The company also had a balance of 2 lakhs in the debenture redemption reserve. Conceptually speaking, how much is the minimum DRR should be? They are not telling whether listed or unlisted. Assume it is other unlisted, so that both will be applicable. Assume other unlisted. You are supposed to assume it as other unlisted. Next, the company also had a balance of 2 lakhs in the debenture redemption reserve. Means how much DRR is how much DRR you are supposed to create before the date of redemption. I need to create DRR 10% of the 30, which comes to 3 lakhs I am supposed to create. But so far I created only 2 lakhs. Now create one more 1 lakh. Next, the investments were realized at par. Perfect. Journalize the transaction during the year of redemption of debentures. Ignore taxation. I will ignore taxation. Everything is fine, sir, but there is a small conflict between my approach and ICAI approach for this. Anyhow, you are supposed to follow ICAI approach only. But in the year of redemption, they are telling they are following calendar year, if I am not wrong. As per debenture interest is payable annually on 31st December every year when the accounts are closed. Okay. Now, what is the year of redemption? 1st January 2022. This is the year of redemption. To 31st December 2022. 31st December 2022. In this year lo, on 30th June, I am repaying. On 30th June 2022, I am repaying. I hope you are getting the clarity. Next. Yeah, pass the entries. CRD 2. In the year of redemption means what is that? 1 1 2022 transfer P&L account to debit to P&L account to debit to DRR. How much? 1 lakh. Why this 1 lakh? Because 2 lakhs is there. Actually, it should be 3 lakhs. Create that 3 lakhs. I hope you are getting the clarity. Next. Debentures are paying every year as on 31st December. Yes. Now, as on which date? 30th 06 only. Yes. 30th June 2022. Compute interest on these debentures also. Interest account to debit to debenture holders account. How much, sir? What is the rate of this? 12%. Yes. And which is 30 lakhs. 12% of 30 lakhs for a period of 6 months. 30% into 12, 3 lakh 60 divided by 2, 1 lakh 80,000. 1 lakh 80,000. Calculate in your calculators. 30 lakhs is the total value of debentures into 12% is the rate of interest, and 30 lakhs into 12%, which comes to 3 lakh 60. And now I want to compute only for a period of 6 months because I am computing as on the date of redemption, that is 36. Already last year interest is paid as on 31st December. That's what they are telling in the problem. Next. Pass due entry for debenture holders. Matlab, you are repaying at a premium if I am not wrong. Yes. Entry. 12% debentures account to debit. How much? 30 lakhs. Cancel premium, that what you have written at the time of issue. Premium payable on redemption account debit. How much is the premium payable at the time of redemption? 1 lakh 80,000. 2. Debenture holders. 31 lakh 80,000. 31 lakh 80,000. Very good. Next entry. Yes. Sell off your what? Sell off your DRI investments. DRRI account debit. Matlab, sell, you will get bank. How much? Bank account to debit, and you are selling it par. DRRI account. How much you are getting bank? If I am not wrong, 4 lakh 50, because that's what I created. Now, I hope you are getting the clarity. On the same date, you are getting bank account debit to DRRI. Perfect. On the same date, transfer balance in DRR account to general reserve, because once the redemption is done, you are not supposed to maintain the DRR account. Balance in DRR account debit to general reserve, or even you can transfer to P&L. How much? 3 lakhs. 3 lakhs. Now repay them. Repay them. Entry. Debenture holders account debit. Debenture holders account debit to bank. How much? 33 lakhs plus interest you are getting how much? 1 lakh 80. Total 34 lakh 80,000. 34 lakh 80,000. Now everything wrote ICAI correct. I mean everything is correct only. I mean everything what I interpreted is correct. But the only thing I am not getting, this entry they have passed on 31st December 2021. And they are asking entries in the year of redemption. If year of redemption means on the other half they are telling interest is paid on 31st December, on the date books of accounts are closing. They are telling their books of accounts are closing on 31st December and on that day they are telling their interest is paid. Then if you want to pass the entries in the year of redemption means year of redemption is which year? 36/2020 means falling under 1/1/2022 to 31st December 2022 means they are asking to pass entries in these years. Right? I don't know whether I am interpreting wrong or something else is wrong, but for my point of view, this is what they should answer. But they are charging on 31st/12 and they are also writing interest payment for the last period. Means the interest paid they are telling no. This 1,80,000 means for year it is 3,60,000. On the 31st December, they are writing the 3,60,000 interest account debit to bank and all these entries, and which I don't think those two interest entries for last year not supposed to be recorded in the current year. But I say recorded, but okay, follow the ICAI approach only. We are students of ICAI. We can't have any luxuries over it. Next, yes, that's it. At the end of the year, charge this interest to P&L. At the end of the year, charge this interest to P&L. Can you? Yes. Yes. Yes, this is the answer, sir. Yes. 1/10/2020. Yes. This entry they are creating as on 31st/12/2021. What I want to write, what I wrote actually 1/1/2022, but follow the ICAI approach, we can't do anything. And this interest entries of last period not at all required, because they are asking to pass entries in the year of redemption and this is not in the year of redemption. That's it. But follow ICAI approach and rest everything we covered. Debentures, premium payable, debenture holders, done. And this is also done. This entry also done. Next, interest also done, 1,80,000, 1,80,000. Next, transfer this is also done, 3 lakhs. Done. This is also done, 3 lakhs. Next, sale this, done. We sold this and then we are paying. Except that point I am having like they are telling books are closing on 31st December 2021, whatever it may be, and they are telling asking the entries in the year of redemption. In the year of redemption is falling on 30th June, which means that is falling under the next year. Then why to write that interest entries for the last year? That's my only thing. But okay, maybe something I might interpret wrong also. But you have to follow the approach of ICAI. That's why we can't have any like freedom on this. Done. Yes, sir. Any doubt, please ask me. I think nothing is there in this problem. Just small the DRR and DRRI. Unless otherwise telling, don't assume that is a listed. If it is listed, they will specifically tell this is a listed company. Inside listed, if that like inside unlisted, if they belongs to those four, like housing finance company or non-banking financial companies or financial institutions or all India financial institutions, they will tell. If they are not telling, assume unlisted others. Done, sir. Can we move on to the next problem? Any doubt, please ask me. Yes. Yes, any doubt, please ask me. Everything we covered. Perfect. Come to the problem number 4 or even 5, then better moving on to the fifth one. We can start with CRD 5. Yes, sir. Start with this CRD 5. X Limited has issued 1000, okay, 12% convertible debentures. Very good. They have issued what type of debentures? Convertible debentures, 100 each. What is this 100 each? Redeemable after a period of 5 years. Very good. Now I have issued how many? 1000, which is 100 each, and which I am going to redeem in which year? I am going to redeem in the year of after 5 years. Perfect. According to the terms and conditions of the issue, these debentures were redeemable at a premium of 5%. Means in the year of issue only you are writing that loss on issue and one more premium payable on redemption to the tune of 5%, which is 1 lakh into 5%, which comes to 5,000. Perfect. The debenture holder also had an option at the time of redemption to convert 20% of their holdings into equity shares of rupees 10 each, of 10 each is face value at a price of 20 per share. Means issue price is 20, face value is 10. Perfect. And the balance in cash. I am giving you an option. What is that option? See, 20% of your holdings will be converted into what? Equity shares. Balance 80% I will pay in the cash. That's what they are telling. The debenture holders also had the option at the time of redemption to convert 20% of their holdings into equity shares of 10 each, face value 10 at a premium at 10 each, means of price 20 per share, and balance in cash. What is this balance in cash? The balance amount they will give in the cash. Debenture holders amounting 20,000, debenture holders amounting 20,000 opted to get their debentures converted into equity shares as per the terms of issue. Opted to get their debentures converted into equity shares as per the terms of issue. What is this nonsense? Debenture holder amounting to 20,000. Total debenture holders 1 lakh. In which amounting to 20,000. Okay. Opted to get their debentures converted into cash as per the terms of issue. What is the terms of issue? The terms of issue is, I am giving an option 20% will be converted into as what? Equity, and the balance 80% will be paid. That is your option. Now 20,000 worth they are taking that option. 80,000 they don't want all this equity and all that stuff. Please throw the cash on my face, then I will go. That's what the debenture holder is telling. CRD 5. Just don't write anything. This is the rough work I am telling. 1000 debentures, 100 each, 1 lakh. And I am giving one option. What is that option? That option is how much? 1 lakh, 20%, 80%. 20% of your holdings will be converted as equity shares at 20 issue price, face value 10. 80% paid cash, balance will be paid in cash. This is the option. Now, how many of your exercise option means 20,000 wala exercise option. 20,000 debentures value exercise option, exercise that option. Balance 80,000 debentures value, they are not opting any option, they want payment of cash. They want payment of cash. Perfect. Come to this 20,000 wala people. 20,000 wala they are taking this option means 20,000 wala people they are taking this option means once again this 20,000 wala bifurcate into what? 20%, 80%. This 80% you will pay in cash. This 20% only you are converting to equity share. That should you have an idea. Once again I am repeating. Sir, total I issued 1 lakh debentures value I am talking in terms of rupees. Now I gave an option. If you want, I will convert to 20% of your holdings into what? Equity. Balance 80,000 I will repay. If you don't want, entire 100 I will repay. None of them exercise this option, then entire 1 lakh I need to repay. Now in this 1 lakh low, 20,000 value, okay, I want this option. What is this option? 20% give me in the name of equity shares, balance 80 I want cash. Balance 80% pay me cash. Balance 80 pay me cash, 20% convert into equity. And balance 80,000 value, I don't want all this nonsense, pay me cash. That's what. Are you getting or not? One more time. 1 lakh is what? Debentures bifurcate into what? 20%, 80%. What is this 20%? I will give you an option. If you want, 20% can be converted into equity. Balance 80% I will make the payment. This is the option. Now, none of them exercise this option, means entire 1 lakh I need to repay. Debenture holders holding 20,000 exercise this option, means that to 20,000 lo 20% I will convert equity, that to 20,000 lo 80% I will repay cash. Balance 80,000 total amount I will repay cash, because they don't want all this nonsense, they want cash. Are you getting? Yes. Now come to the statement, how to prepare and what is the requirement of the question. First of all, debenture amounts 20,000 opted to get their debentures converted into equity shares as per the terms of the issue. You are required to calculate number of shares issued and cash paid to the, okay, they are asking about this 20,000, okay. They are asking about that 20,000. How much cash you have need to repay and how much shares you need to issue. Redemption value of value 20,000 debentures, I think at par or at premium? Premium of 5%. How much you will get? Redemption value of 20% debentures 105 means, if I am not wrong, 21,000. You need to repay them 21,000. Very good. Are you getting? Yes sir, I will repay 21,000. Very good. Just next come to the statement. Number of debentures 20,000 divided by 100, which is equal to 200. How many number of debentures are there? 200 in number. Number of debentures which comes to 200. Very good sir. 200 is the number of debentures. Come to the next one. Next one. How many of them? What is that option I am giving? Number of debentures will be converted into equity. Number of debentures will be converted into equity means 200 into 20%, which comes to 40. I hope you are getting the clarity. Redemption value of 40 debentures is 40 into 105. I need to make them 40 into 105, which is 4200. I hope you are getting the clarity. Redemption value is how much? This is a separate line item. Next, number of debentures 20,000 value they want to convert, which is 200. Next, number of debentures will be converted into equity share, that is 20%, which is 40. How much I need to pay for that 40? 4200. How many number of shares to be issued? Number of shares to be issued. Here I think equity shares, number of equity shares to be issued. 4200 divided by issue price is 20. 4200 divided by issue price is 20. 210 shares I need to issue, which is equity shares, 210 equity shares. Next one, number of debentures, cash will be paid. I think out of 200, 40 is gone, 200 minus 40 is gone, 160 into 105 if I am not wrong. 200 minus 40, 160 into 105, which is 16,800. Cash paid 16,800 plus 4,200 shares issued, that is 21,000. That is the reason I asked you to write this 21,000 in the starting. Are you getting how you got this 16,800? How I got means number of debentures on number of debentures cash will be paid. That 200, how 200? 20,000 is my nominal value divided by 100, that is 200. In that load 20%, 40 equity shares converted, balance amount 160 on 105. This is the amount. Now what is the requirement? How many shares to be allotted? 4,200. How much cash to be paid? This is the answer, and this is the answer. Go and check in the answer part. Debenture holders opted for conversion. Yes, 200, 20,000 divided by 100. Option for conversion is 20%. Yes. Number of debentures to be converted, which is 40. Number of debentures to be converted, 40. Redemption value of 40 debentures at premium. Equity shares of 10 each issued at conversion, 210 shares. Calculation of cash to be paid. Put the heading here, calculation of cash to be paid. Number of debentures 200, number of converted into 40, and the balance is 160. You need to repay 105, 16,800. I hope you are getting the clarity. What about 80,000 worth of debentures? 80,000 into 105, you need to make payment for the entire amount. 20,000 into 105, if they are not asking for this conversion. So 20,000 worth of debentures, they want to choose this option. What is this? Choose this option. 20% convert into equity and balance 80 cash. Next, 200 into 100, 20,000 gone. Next, in this 200 lo 40%, I mean 20% comes to 40 into how much I need to make payment? Redemption value. I need to make redemption value 105. 40 into 105, 4,200 if I am not wrong, divided by 20. How many shares I am supposed to issue to them? And these guys balance. How much cash to be paid? So the balance cash to be paid is like 80% of what? Balance cash to be paid is 80%. This is nothing but 200 minus 40, 80% of 200 into 105, 16,800. I hope you are getting the clarity on this. Yes. Come to the one more problem. One more problem is problem number 2 is done, 5 is done, 4, yes. Come to problem number 4. Important problem, sir. Yes. You want to copy, make it fast. Yes, sir. Come to the next problem. Sir, make it as important. Yes, sir. Some 2 to 3 combinations were there in this problem. Nice. So, recent problem what we have covered, that is nothing but conversion, partly convertible debentures. Next. And that before problem is lump sum. This problem is something like you will have that mix because annual drawings method is there, no, on this on that concept this problem is designed. Just on 1st April 2020, yes sir, on 1st April 2020, yes, birth was limited, okay, issued, this is rupees, how many, 40 lakh rupees they are talking, issued 40 lakh rupees, 12% rate of interest, coupon rate, debentures of 100 nominal value of 100. So 40 lakhs divided by 100, 40,000 debentures were issued. Once again, how you got this 40, sir? 40 lakh is the value divided by half rupees nominal value. Half means half, whenever they are telling half nominal value, which comes to 40,000. What is this 40,000, sir? This 40,000 they are talking about number, in terms of number. At a premium of 5%, at a premium of 5%, nominal value is 100, issue price is 105. Nominal value is 100, issue price is 105. Now 40,000 into 105, this is what I am collecting from the debenture holders. 40,000 into 105, this is what I am collecting from the debenture holders. And redeemable at a premium of 10%. I am repaying to them at a premium of 10% means 40,000 into 110. This is what I am repaying to them. This is what I am repaying to them. Next, 10,000 debentures are to be redeemed at the end of first year and balance at the end of second year. Fully out of profit, fine. They are redeeming out of profit. Okay, sir, fine. Forget about that. And it is by of annual drawings. First year, how much you are? 10,000 numbers. Out of this 40,000, 1 by 4 means 10,000. 1/4 of the debentures are redeeming in the current period. How much? Out of 40,000, 1/4 is redeeming in the current period and the balance amount at the end of second year. There are 2 years. First year, second year. In the first year low, 1/4, second year low, 3/4. This is what they are repaying. 1/4 in the first year, 3/4 in the second year. In other words, they are telling out of 40,000 in terms of numbers, 10,000 number of debentures redeeming now, balance 30 is redeeming in the next year. At the end of second year. This is what the question what they are talking about. Next, pass the journal entries for issue and redemption. First entry, sir. When you made any issue, how many numbers in terms of numbers? 40,000 into application money you are receiving at 105. 40,000 into 105 entry. Bank account debit to debenture application and allotment, which comes to how much? 40,000 into 105. Right. Next entry. Debenture application and allotment account debit, that 40,000 into whatever it may be, 105. Next, loss on issue of debentures. How much is your loss? 10 rupees is loss. 40,000 into 10, that is your loss. 2, 10%, how much? 12% debentures. 2, securities premium. 2, premium payable and redemption. Combination of 2 entries. No sir, if you want to write 2 separate entries, then debenture application and allotment account debit to 12% debentures to securities premium. Write one more entry, loss on issue of debentures account debit to premium payable on debenture holders, premium payable on redemption of debentures. Done. Anything is fine. Now the first entry gets over. Next, like I am telling from the starting class, DRR, DRRI. DRR can be created anytime during the life, but in all our ICAI suggested answers, they are creating on the day one, matlab on the date of issue only they are creating. Here, what is the date of issue? 1st April 2020. On the same day, 1st April 2020 only, you need to create what? DRR. Very good. How much? 10% of the nominal value of debentures. What is the 10% of nominal value of debentures? 10% of nominal value of debentures, 40 lakhs into 10%, which comes to how much? 4 lakhs you are creating in the name of what? DRR. Entry, profit and loss account debit to DRR. Next, sir, on the day one only you are creating what? DRRI. So next entry, DRRI account debit to bank. DRRI account debit to bank, how much? 15%. On what? Actually the law, what the law is telling, on the, in the current period low, how much you are redeeming? In our case low, current period low, 1/10, which comes to I think 10 lakhs. But on 10 lakhs it is 15% sufficient. But in our suggested answers low, they are taking only 40 lakhs. No issues. 40 lakhs into 15%. I hope you are getting the clarity. DRRI account debit to bank. Next one. You have to pay the interest for them. Yes, I need to pay the interest. Yes, how much is the interest? 12%, year ending. How much? 40 lakhs into 12%. You need to pay that interest to them. Yes, sir. Entry, interest on debentures account debit to, you want to create directly credit to the debenture holders, because in the current period you are redeeming some part, add and repay to them. Yes, entry, interest on debentures account debit to debenture holders. Next. Now in the current period you are redeeming how much? 10,000 in terms of number. Write the entry. Debentures, matlab 12% debentures account debit. Yes, sir, 12% debentures account debit. Next, just now I created one liability, premium payable at the beginning of the year. Cancel that liability by debiting only to the tune of 10,000 debentures. Premium payable on redemption to debenture holders. Immediately, the DRR what I created on the beginning, to the extent of 1/4 transfers to once again general reserve. To the extent of 1/4 transfers to general reserve. To the extent of 1/4, sell your DRRI and mobilize the cash and pay them to your debenture holders only to the extent of 1/10. Next, sir, that loss on issue of debentures is there if I am redeeming uniformly first year and second year, matlab equally in the first year and second year, then I might apportion in the ratio of 1:1. But here I am not redeeming in the ratio of 1:1. Here I am redeeming the ratio of first year low. How much I am redeeming? Only 10,000. Second year low, how much I am redeeming? 30,000. So the nominal value of debentures outstanding before redemption, if you remember, I said issue of debentures low, the loss on issue of debentures has to be amortized to your P&L in the ratio of nominal value of debentures outstanding before redemption. Nominal value of debentures before redemption. In our case, before redemption, how much? You have to take that figure and you need to adjust in that ratio. I hope you are getting the clarity. Done. Come to the second year. Second year also same thing. Interest, transfer the interest and throw the debenture holders entry, cancel liability and transfers to holders, and convert, matlab the DRR transfers to general reserve, sell it DRRI, sell your debenture investments, mobilize the cash and throw that amount on the face of debenture holders. And that loss is there, loss amortized in the ratio that nominal value of debentures outstanding. That's it. Yes, this is the outline of the problem. Let's solve the problem. Yes. First one, sir. They are asking journal entries only. They are asking journal entries. Yes, journal entries. Journal entries in the books of whatever the company made. Date, particulars, write along with me. LF, debit, credit. First entry, sir. First entry I am collecting money. How much I am getting? On which date? 1/4/2020. 1/4/2020. Entry. Bank account debit. Bank account debit to debenture application and allotment. How much? 40,000 in numbers if I am not wrong, into I am getting 105, which I am getting 42 lakhs. Bank account debit to debenture application and allotment 42 lakhs. Done? Yes sir, done. Next one sir. Next one, on the same day I am allotting. Entry. Debenture application and allotment account debit to debenture application and allotment account debit. How much? 42. Loss on issue of debentures. Loss on issue of debentures. How much is loss? That is 40,000 into 10. What is this 40,000 and what is this into 10? 40,000 is number of debentures, into 10 is what? That extra premium what you are paying, that is my loss, 4 lakhs. 2. What is this? 12% debentures. 12% debentures account, which comes to how much? 40 lakhs. Always debentures has to be shown at nominal value, which is 40,000 into 100. 2. Securities premium. 2. Securities premium. How much is your securities premium? I collected 5 rupees extra on each share, 40,000 into 5, which comes to 2 lakhs. 2. Premium payable on redemption of redemption of debentures. How much? That is 4 lakhs. What is this premium payable on redemption of debentures? 40,000 in terms of numbers into 10 per debenture, which comes to 4 lakhs. Debit is equal to credit. You can also split into 2 entries, this loss on issue and premium payable. This a separate debit, this separate credit. You can also write splitting entry. It's up to you. Like I am already telling, on the first day create what? DRR. P&L account debit to DRR account. How much? P&L account debit to DRR account, how much? You are having nominal value of debentures, how much? 40 into 10%, how much? 4 lakhs. 4 lakhs, 4 lakhs. Next one. On the same date, create one more. What is that? DRRI. Entry. DRRI account to debit to bank account. How much? How much is DRRI account debit to bank? 15% of how much? Your 40 lakhs? Yes. 15% of 40 lakhs is nothing but 6 lakhs. Are you getting how I calculated these figures? And once I am telling, it is not on the year ending outstanding balance, the total outstanding our ICAI is creating, we are also supposed to do the same. Yes, even if you want, create now 40% of the outstanding and create the balance on the next year beginning, but don't do that. I hope you are getting the clarity. I hope you are getting the clarity. Next, what is the next entry I said? Come to the year ending date. Year ending date, interest is there. Yes, interest is there. What is the year ending date? Year ending date. December 2021. What is the entry? Interest on debentures. Interest on debentures. Account to debit to debenture holder, create liability. I will settle this liability along with this 10,000 debentures I am repaying along with that. Debenture holders account. How much is the amount? 40 lakhs. Interest will be always payable on nominal value. 40 lakhs into 12%. I hope you are getting the clarity. Next, 1 lakh 20 into 4, which comes to how much? 4 lakh 80. Yes, 40 lakhs into 12%. Yes, sir, which comes to your 4 lakh 80. Next, what is the next entry? Next entry on the same date, transfer your what into what? Your liability, cancel the debentures liability and create holders liability. Means as on the same date, you are having 12% debentures. How many number of debentures you are repaying now? 10,000 into 40, which comes to how much? 10,000 in terms of number into 100. 10,000 into 100, which comes to how much? 10 lakhs, which comes to 10 lakhs. 2. And you need to write off certain portion of that liability also, cancel that liability. What is that liability? Premium payable on redemption. How much is that premium payable on redemption? That is 4 lakhs is there. 4 lakhs is for how much? 4 lakhs is for, this 4 lakhs is for 40 lakh debentures. Then how much is for 10 lakh debentures? If I am not wrong, that is 1 lakh. If I am not wrong, that is 1 lakh. 2 debenture holders. How much? 11 lakh. 2 debenture holders, 11 lakhs. 2 debenture holders, 11 lakhs. What is the next entry? Sir, next entry on the same date, that portion 1/4 is redeeming now. That 1/4 portion of DRR transfers to your general reserve. How much? 1/4 portion. Entry. Entry is DRR account debit to general reserve, or you can also call it as P&L account. DRR account debit to P&L account. How much? How much this DRR account debit to P&L I need to create? This amount is, if I am not wrong, how much I am having? 4 lakhs I am having. This 4 lakhs is for how many value? It is for 40,000 into, I want for 10,000 value. I want for 10,000 value, and this is for 40,000 value. I hope you are getting the clarity. 1 lakh need to be transfers to your P&L. How you got this 1 lakh? Are you getting? You are having 4 lakhs. This 4 lakhs is for 40,000 debentures. Now I want how much is for 10,000. Your 1 lakh need to be transfers from, cancelled from DRR and transfers to P&L account. Sell off your what? DRRI. So what is the entry to sell your DRRI? Bank account debit. How much is your bank? Sir, I am getting to DRRI. Sir, how much is there? My DRRI 6 lakhs is there. This 6 lakhs is for how many? 40,000. And I want how much is for 10,000. 1 lakh 50,000 if I am not wrong. Total 6 lakhs is there. In that low 1,50,000. Mobilize that money. Question is silent. Assume that I am selling at what? I am selling at face value. Now throw their liability on their face. Debenture holders account debit. Debenture holders account to debit to bank account. How much is debenture holders account debit to bank account? That interest is there, if I am not wrong. How much is the interest on them? 4,80,000. And 11 lakhs is how much you are supposed to be repaid to them towards their premium plus face value. Total you are supposed to repay 15,80,000. Repay that 15,80,000 for them. Repay 15,80,000 to them. I hope you are getting the clarity. Yes sir, the first year is not over sir. Star mark, don't forget to transfer this loss to the P&L over the life 2 years in the ratio of nominal value of debentures outstanding. Yes sir, have one working note. Have one working note. Have one working note. Calculation of loss on issue of debentures. Calculation of loss on issue of debentures shall be amortized to P&L. Shall be amortized to P&L. Now, year end. In other words, 31st March 2021, 31st March 2022. Nominal value of outstanding. What is the nominal value of outstanding before redemption? Here it is 40 lakhs. Here it is 30 lakhs. I am repaying how much? 10 lakhs. So the before redemption, how much you are having? 40 and 30. What is the ratio? This is 4 and this is 3. What is the loss you are having? That loss to be amortized. In your problem, total loss is how much? 4 lakhs. Now, loss to be amortized 4 lakhs into 4 by 7, 4 lakhs into 3 by 7. How much you are getting? 4 lakhs divided by 7 into 3. 1,71,428. 1,71,428. Next, 4 lakhs divided by 7 into 3. 1 lakhs. This is 3 value. Okay. 4 lakhs divided by 7 into 4. 2,28,571. 2,28,571. Next, 4 lakhs divided by 7 into 3, which is 1,71,429. 1,71,429. Now, for the first year P&L, 2,28,571. 2,28,571. P&L account debit to loss on issue of debentures. How much? 2,28,571. 2,28,571. 2,28,571. I hope you are getting the clarity. This entry you need to pass on which date? This entry you need to pass on 31st March 2021. I hope you are getting the clarity on this part. Next one sir. Come to the next year. Exactly after 1 year. First entry for interest. Interest on debentures. Interest on debentures to debenture holders. How much? On 30 lakhs, because 10 lakhs I redeemed. 40 minus 10, 30 lakhs into 12%, which comes to 3,60,000. I am not repaying, sir. I will repay along with this principal amount. Next one. On this interest I transfer to P&L. Yes, this interest also you need to transfer to P&L, 4,80,000. So P&L to interest on debentures. P&L to interest on debentures. How much? 4,80,000. 4,80,000 plus 2,28,571. How much? 7,08,571. How much? $7,08,571. Okay, sir. Next. Next one. Next one is 31st March 2022. Come to the next one. Next year. Yes, interest element is done. Next one. Now transfer your which to where? DRR to general reserve. Balance part 3/4. DRR account debit. How much is there balance? If I am not wrong, 3 lakhs to P&L account. 3 lakhs, 3 lakhs. Right? 10% of 4 lakhs is 40 is 4. 4 lo 1 lakh is already gone. Balance 3 lakh transfers to P&L. Next one. Sell off your what? This is 22. Bank account debit. DRRI. DRRI. How much? How much you are mobilizing? Total 6 lakhs is there. Last year, 1,50,000 I mobilized. That is nothing but 1/4. Balance 3/4 is how much? 4,50,000. Get that 4,50,000. Are you getting how you are getting this 4,50,000? Total is 6 lakhs, sir. This 6 lakhs is for how much value? 40,000. I want how much is for 30,000. This is I am talking about number of debentures. Even you can calculate by taking 40 lakhs value also, you will get the same value. Next one, 4,50,000 and 4,50,000. Now, pay to these idiots. So cancel that liability and pay to these idiots entry. Debentures, what debentures? 12% debentures account debit. How much? 30 lakhs. Premium payable. How much? Premium payable. How much is the premium payable you need? How much premium is payable for them? I think it is 4 lakhs. Now it is 3 lakhs because already 1 lakh is cancelled. 2 debenture holders. How much? 33 lakhs. 33 lakhs. Next entry. Pay them. Debenture holders account debit. Bank account. How much? 33 lakhs. 33 lakhs because I need to make payment 33 lakhs to them. Yes, 33 lakhs plus interest also. How much is interest? 3,60,000. 3,60,000 plus 33 lakhs. We need to make payment 36,60,000. We need to make payment of 36,60,000. Pay them 36,60,000 to them. 36,60,000. 36,60,000. Pay them. Don't forget to take the interest. Next. On the same day, transfer this loss as well as interest to P&L. Entry. P&L account debit to interest on debentures to loss on issue. How much is interest? 3,60,000. What is this loss? Loss on issue. This loss on issue is Where did we calculate that one? Working note. Yes, 171,429. 171,429. How much? 3,60,000 plus 171,429, which comes to 5,31,429. They are not asking any ledgers and all. Don't forget to take, when you are transferring DRR to P&L in the subsequent year, don't forget to take 3/4, first year 1/4. Same way selling your investments also. Make working note for one more element is for how you are getting these values. Which values? Here only I did, but take as a working note DRR, because that's how they present suggested answer. Any doubt, please ask me. First, collection of application, this is allotment, and this is creation of DRR, and then this is investing DRRI, then this is year ending invest, this year ending interest, and this is cancelling your capital and creating holders liability. Next, this is that portion what you are redeeming, that portion you are redeeming, transferring to where? Transferring to your P&L once again, and this is getting the cash selling of your DRRI investments. Perfect. Yes sir, in the same way next year also. Same way next year also. Can we verify this in the answers part? Yes. 42 lakhs, done. 42, okay, done, yes. Done, yes. Yes. Check the date also. Yes. S, and also S. Done. Given holders to bank, which also includes your interest. And perfect. Total 7,08,571. Same value I took. Yes. Next. Second year. Perfect. Done. Perfect. 36,60,000. Yes, done. Next, this is also done. I hope you are getting the clarity over this. Yes, sir. Yes, sir. Come to the leftover portion in redemption of debentures. We covered extensively, we covered some 3 methods, and now combination of all. In other words, some comprehensive problem relating to some bonus is there, rights issue is there, and you are repaying debentures in that year. Just accumulation of what we discussed so far in terms of all chapters like bonus chapter and issue of right shares, that section 62, and one more chapter. What is this? Like debenture redemption. You have to accumulate all this. Yes. This is the last problem for this chapter. Important area, because this is a newly added chapter, so high chances of asking questions from the newly added, like that bonus, or it may be rights issue, or it may be redemption of preference shares, or it may be redemption of debentures. I think these 4 were added newly. Yes, just give one importance over these areas, including that single entry what is added, that incomplete records, right? So the only thing what this CA foundation or what is that new syllabus is, sir, just we are supposed to be give our best. Forget about whether it is added, syllabus deleted, like some tougher. Don't go into that notion, IO syllabus increase. No, never, sir. I say will never trouble any of the student for that matter. If you reasonably prepare well, happily you can pass. Reasonably, I am not asking extraordinary preparation. Reasonably preparation means don't skip any area. Just focus more on presentation. Write as many as exams. It will teach us you how you are performing in writing. What you know. Answer is there. No, you are practicing. It tells you how you are writing. So write as many as exams before you are attempting your main exam. That's it. And correct yourself, rectify yourself, then you will easily clear it. Then come to the next problem. What is this? The balance sheet of whom? BEE Company Limited. Yes, the balance sheet of BEE Company Limited. Unlisted company. Very good. If it is an unlisted company other than these 4 companies, means for you DRR as well as DRRI both will be applicable to DRR and DRRI both will be applicable to you. Yes. Next, equity and liabilities, shareholders funds. First one, share capital, they are telling 2 lakhs is the share capital. Reserves and surplus which you are telling 1 lakh 20. Yes sir. Long term borrowings. What is your long term borrowings? 1 lakh 20. Current liabilities. How much? Trade payables 1 lakh 15. Perfect. See, you should also know how to read the balance sheet. Matlab, if you want how this figure came, go and see working note number 1. Where is this working note number 1? Authorized, this 30 lakhs is the maximum amount of capital that a company can raise during the life of the company. If the company wants to increase, pass the necessary resolutions in the board meeting, in the general meeting. Next, in this 30 lo 20 already issued. That's how it is 2 lakhs. I hope you are getting the clarity. Are getting? Next, come to the next one. What is the next one? Reserves and surplus 1 lakh 20. If you know how this R&S is 1 lakh 20, go and check the second R&S, matlab second working note, profit and loss account, which is 1 lakh 20. I hope you are getting the clarity. Next, come to the next. If you want to know how this long term borrowings is 120, go and check. You are having 12% debentures of 100 each, which comes to 1 lakh 20. That's 1 lakh 20. That's how it is 1 lakh 20. Trade payables, how much? Trade payables is 1 lakh 15,000. Check your trade payables. Trade payables is there is no note here. Trade payables itself is like some outstanding for purchases of goods or any services rendered in terms of which you are incurring. That is your trade. For business purpose you are incurring this trade direct, like purchase of goods, matlab creditors or bills payable, all these things will be there here. They are telling trade payables. How much? 1 lakh 15. Come to the assets part. You are having assets 1 lakh 15,000. Come to the fourth note. Yes, you are having freehold property. How much? 1 lakh 15,000. And you are having what? Cash in hand, cash at bank 2 lakh 30. That's what that 2 lakh 30, cash in hand, cash at bank, free hand property, and then long term borrowings. I hope you are getting the clarity. This is your cash and cash equivalent. This is your trade receivables, and this is your inventory. So directly they are telling this cash and cash equivalent. They are telling like the 2 lakh 30 how it is coming means that is cash in hand is this much, cash in bank is this much. Why they are providing means if any redemption repayment is there, check whether sufficient cash is there or not. Next, at the annual general meeting it is resolved. At the annual general meeting it is resolved. What it is resolved? To give existing shareholders. What is this existing shareholder? How many? 20,000 existing shares. On the annual AGM meeting, to give existing shareholders an option to purchase 110 rupees share at 15 for every 4 shares. Means if you are holding 4 shares, I will giving one option. What is that option? You can buy 1 share, face value 10 at a price of 15. Market price is pakka more than 15. That is the reason I am offering you at 15. This is this section 62. What is the section 62 of the Companies Act? Further issuance of shares, or in other words it is known as right issue. Further issuance of shares or rights issue. Next, to issue 1 bonus shares for every 5 shares held. This is what? Section 63. Capitalization of your profits. Capitalization of profits, matlab by way of bonus. Converting your reserves and surplus into capital by way of what? Bonus. This is what they are telling. If you are holding 5 shares, I will give you 1 share as what? Fully paid bonus shares. Section 63. Next, to repay debentures at a premium of 3%. Section 71. What is the section 71? They are telling the provisions with respect to section 71 subsection 4, the creation of DRR and DRRI, and when you are repaying, all these things are telling in section 71. To repay redemption, debentures at a premium at of 3%. I hope you are getting the clarity. If you are in a position to write entries for these three, problem done. I think they are also asking balance sheet. Balance sheet is not a big deal. You can easily grab the things. Then, yes. First one, to give existing, they are asking journal entries. Okay. How many existing shares were there? 20,000 means for every 4 held, company is giving an offer to purchase 1 share. Then it is having how many shares? 5,000. 20,000 divided by 4, you will get 5,000 shares company is offering. For every 4 shareholders, if you are having 4 shares, you can have one option to purchase. You are having one right to subscribe for the share at 15. All shares were subscribed. See, prior to bonus issue, what they are telling, it is not after bonus, before bonus issue. This option was taken up by all the shareholders, is exercised this option. Very good. Now, entry, you are getting bank, account to debit, to equity share application. How much? How much refers to 20,000 shares if you are having. If you are having 4, company will give you 1 share. 20,000 divided by 4. How much you are getting? 5,000, and per share it is 15 if I am not wrong. 5,000 into 15, you will get 75,000. 15 only, right? Yes, 10 for. This is issue price. 1 rupees, 10 rupees face value at 15. This is face value is 4 and issue price is 15. 75,000 to equity share application. 75,000 being money received for application. Next one. Next one, on the date of allotment, equity share application account debit to allotment. Matlab, what is that allotment? Equity share capital to equity share capital. How much? 75,000. 75,000. I hope you are getting the clarity over this. Yes, come to the next part. Next, what company is doing, sir? Capital is only 5,000 into 10, 50,000. Capital is only 5,000 into 10, 50,000, and the balance will be taken to where? Securities premium. Balance will be taken to where, sir? Securities premium. 2 securities premium. 5,000 shares into how much? 5 rupees, which is 25,000. I hope you are getting the clarity. Next one. Company is giving an bonus. What is that bonus? If you are holding 5 shares, the company will give you how many shares? 1 share. After rights issue, existing number of shares 20,000. After rights issue, you are having 25,000 shares. Yes, 25,000 shares. Now, if you are holding 5 shares, company will give you how many? 1 share as bonus. Means once again 5,000 shares. Are you getting, sir? Now, entry, reserves account debit to bonus to shareholders. Go and check whether reserves are there or not. First of all, check how many bonus shares. 5,000 into 10. How much you want? I want 50,000. How much I want? 50,000. P and L is there 1,20,000. Super. Or you can also use the securities premium. Section 52 subsection 2, what the section 52 subsection is telling? Securities premium can exclusively use for the purpose of what? Fully paid bonus share. Happily I can use. Securities premium account, how much? 25. How much I want actually? 25,000 divided by 5 into 10. So total how much I want? 50. Now next one, P and L account debit. How much? 25,000 to to bonus to shareholders account. How much? 50,000. Bonus to shareholders account. How much? 50,000. I hope you are getting the clarity. Next one. This is on the date of announcement. Next one on the date of allotment. Bonus to shareholders. Liability is created. Cancel that liability. Create capital to equity share capital share hai. How much? 50,000. 50,000. How much? 50,000. 50,000. I hope you are getting the clarity. Yes. I hope you are getting the clarity. Next. First, rights issue done, bonus issue done. Now come to the debentures part. I am repaying the debentures. Yes. If you are repaying debentures, what is the first one? Create what? DRR. Entry. Entry for creation of DRR. P&L account to debit to DRR account. How much I need to create? What is the value of debentures? 1,20,000 into 10%. 12,000. Next. Create what? DRR investments. Entry. Purchase DRR investments account debit to bank. How much? 15% of 1,20,000, which comes to 18,000. Next one. Next one. Cancel that debenture liability and create what? Debenture holders. Entry. What is the percent? We are paying at premium 3%. Yes. Entry. 12% debentures account to debit. How much? 1,20,000. Now, premium payable how much? That liability which I need to create, premium payable, yes. But go and check whether that liability is there or not. That liability has to be there in the balance sheet, because if you are raising an entry at the time of issue, this will come and sit in the balance sheet liability. Meaning thereby, if you are not creating that liability, only into 3%, 3,600. What I am babbling relating to this, wait, I will tell. Not, I don't want to confuse you. Wait, I will tell. 2. Debenture holders account. Don't write DH and all these things, because of time constraint. I am doing all these things. See, I can't teach 10 hours, 15 hours like how the regular batches I am teaching. It is almost I have to complete in 30 to 40 hours. So every chapter I need to complete in 2 hours. So for the time constraint, I am writing. Otherwise, I might. So don't write DH all this stuff. We have to write debenture holders in the exam. Total how much? 1,23,600. I hope you are getting the clarity. So 12% debentures, premium payable to debenture holders account. Fine. Next. Come repay them. So if you are repaying, so what first you are supposed to do? First, transfer this DRR to general reserve, sell this and settle your debenture holders. First, DRR to P&L. DRR account debit to P&L. How much? 12,000. Sell your DRRI investments. You are getting how much? Bank account to debit to DRRI. How much? 18,000. Now check how much you are having. Check how much you are having. Bank 75,000 initially I am having. Yes. Then how much existing bank balance I am having? 2,30,000. 2,30,000. Total how much? 3,05,000 I am having. How much I am repaying them? 1,23,000 if I am not wrong. Yes, 1,23,600. What is the balance cash left? 1,81,400. Remember this figure. 1,81,400 is the cash balance left. I mobilized cash from issue of fresh shares. Matlab that rights issue section 62. How much? Around some 50,000 or 75 I mobilized. Yes, 75. Existing balance sheet lo 2,30,000 is there. This is what total cash I am having. And I am throwing on the face of the debenture holders how much? Okay, some 18,000 bank balance is this is also there. 18. Okay, payment 18 and receipt 18. Nullifying. No issue in that. So you are having 1,81,400 is what is this 1,81,400 balance, closing cash balance. Next, throw this amount on the face of debenture holders. Entry. Debenture holders to bank. How much? 1,23,600. One more entry, sir. Wait, I will tell. Now come to this part. Up to this over, please. See, nothing happened. This is what? Rights issue. Go and see my rights chapter. I said in the rights chapter lo. Same, these two entries relating to rights. What are these two entries? Go and see my bonus. I covered these two in my bonus chapter. Next. What is this? This is I covered in my debenture chapters only. Yes, covered in the debenture chapters only. And all these three things are cancel the debentures liability and then throw this debenture. Once the repayment is done, throw this on to that P&L and other DRRI, cancel that and holders paying the payment. One. This premium payable at the time of issue. When? At the time of issue. What is the entry I am writing? Bank account to debit. Loss on issue of debentures account debit. 2. 12% debentures. 2. Premium payable. If I am writing that entry at the time of issue, that premium payable shall come and sit in the liabilities law as in this non-current liabilities law, other non-current liability. Other non-current liability. But that is not there. Other non-current liability is not there. How much? That premium, that amount what is there? That is not there means what is that meaning? This amount, this loss is not recognizing at where? At the time of issue. Now recognize that loss by transferring to where? P&L. If you are recognizing that loss means during the life of the debentures you need to amortize in an equal proportion. But you failed to do that. Now you recognize that loss and throw it on the face of P&L. Entry. P&L account to debit to premium payable on redemption of what? Debentures. How much? 3,600. So that your premium account is closed. This will not appear. Sir, in your balance sheet, this premium payable account is there. Then this is not required. Then this is not required. Then this is not required. Why? You are cancelling that. You are cancelling that. I am cancelling this. I hope you are getting the clarity. Now come to the balance sheet part. Entries part is done. Entries part is done. Now tell me what is the new capital in your books? 30,000 into 10. Yes. New capital is 3. How 30,000? Existing 20 plus 5,000 rights plus 5,000 bonus. Come to the reserves and surplus. Newly added reserve is securities premium to the tune of 25. For old reserves, add the securities premium 25. Reduce 50,000 for what? Bonus. In the name of P&L, reduce 25,000 and securities premium just now came and gone also. Just now came and gone also. I hope you are getting the clarity. Rest the difference will be there in your bank balance, that is 1,81,400. Rest there is no difference in your balance sheet. First one, equity share capital 3 lakhs. Reserves and surplus, existing reserves plus securities premium 25 less 50,000 means the net impact in the reserves is 25. You have to reduce. That's it. 25 you have to reduce from the opening balance. Rest cash balance show 1,81,400. Nothing will change in your balance sheet. Yes, first entry is for what? Receipt of application, allotment, take the premium. Next one, what is this? Bonus, and then allot shares, and then create DRR, create what? DRRI investments. Then cancel the debentures liability, transfer these two, and then bank, and then P&L. Perfect. Come to the answers part. Yes. Bank to equity holders, you can also pass equity application, capital premium, done. Securities premium, P&L, bonus to shareholders, done. Bonus to shareholders to equity capital, done. P&L to DRR, done. DRRI to bank, done. Debentures premium, done, done, done. At the time of redemption, transfer this, done. Mobilize, done. Pay to them, excellent, excellent and extraordinary. I hope you are getting the clarity. I hope you are getting the clarity. Yes, come to the balance sheet part. Come to the balance sheet part. Yes, I said this is 3 lakhs. Yes, 3 lakhs. And this is just 25,000 add to the opening reserves. What is the opening reserves? Opening reserves and surplus is 1,20,000. In this P&L 1,20,000. To this P&L add securities premium. How much? 25 less same securities premium. Ultimately no impact in the securities premium. Reduce 25,000 and reduce 3,600 means 1,20,000 minus 25,000 for bonus and 1,20,000 minus 25 I use it for bonus and reduce 3,600 premium I am adjusting minus 3,600, you will have 91,400. Yes, how this 91,400 is coming? Existing 1,20,000 sir, securities premium came 25 sir and gone sir, 25 that is gone, and for bonus 25 I am using from where? From free reserves sir, and minus 3,600 what I am using for P&L to premium payable, so that 91,400. Trade payables no change, takes the same figure. This will be no change, take the same figure. Next, this will be no change, take the same figure. This will be no change, take the same figure. This balance I am babbling from the last class, I mean just now I am babbling from last 10 minutes, 1,81,400. I think your balance sheet is done. I don't think they'll ask balance sheets and all this type of balance sheet, I don't think. Done. Even if they're asking also, you should be in a position to prepare. That is the reason I'm telling. See, 1,20,000 minus 3,600 minus 25 plus 12 add 25 minus 25. This is premium on redemption. This is what? Utilization bonus and then DRR, then securities premium less utilization bonus, then the total balance, this 12,000 and you will have 91,400. This sum of all these things is net 12. Done. Rest everything is remains the same. I hope you are getting the clarity. This you have to write a note. Out of the above 5,000 share, out of the above 5,000 of rupees 10 each issued as fully paid bonus shares. I hope you are getting the clarity. Yes sir. Entries part is they'll just mere focus sir. Balance sheet also you have to focus. Done. Yes sir. Done. Yes sir. Put the heading accounting for bonus shares. Accounting for bonus shares and rights issue. Accounting for bonus shares and rights issue. What is meant by bonus shares means giving bonus shares refers to allotment of free shares to its existing equity shareholders. Bonus shares refers to allotment of free shares to its existing equity shareholders in proportion to paid up share capital, in proportion to paid up share capital. Very good. In proportion to paid up share capital. First one, sir. First one is, I am having reserves and surplus. What I am having? Reserves and surplus. That reserves and surplus I am transferring to capital by way of what? Bonus. By way of bonus. Converting your reserves and surplus. Converting your what, sir? Reserves and surplus. Converting reserves and surplus. Converting reserves and surplus into what? Into capital by way of bonus. By way of bonus. By way of bonus. Very good. Next. Yes, sir. The corresponding section, section 63 talks about issue of bonus shares. Now, whenever bonus shares are issuing, no impact in cash, no impact in cash or bank. Matlab, I am giving it free of cost. Next one, increase in share capital. Increase in share capital or increase in number of shares. Yes, obviously my number of shares will increase. Decrease in market price. Where it is decrease, sir? Decrease in market price. Very good, sir. Next. Decrease in earning per share. If you are issuing bonus shares, means there will not have any impact in your cash and bank balance. Increase in number of shares and increase in share capital. Decrease in market price and decrease in earning per share, and net worth remains same. Net worth remains same. Net worth remains same. Next. Yes, sir. If company wants to give bonus, means there are certain requirements. First, authorization in AOE is required. Yes. Then there should be an authorization in AOA, and there should be one members approval. Members approval should be there. Yes. Members approval should be there by way of authorization. Next. There should not be no default, sir. When you want to give you bonus, means there should not be no default in terms of what? Either principal or interest in terms of what? Fixed deposits or any debt securities or any statutory dues. Also there should not be no default in statutory dues. And bonus shall never be given in lieu of dividend. Bonus shall never be given in lieu of dividend. And once the decision is made, you can't withdraw the decision. Today I have announced the bonus. And once the decision is made, you can't withdraw such decision. Sir, first of all, there should be an authorization. Yes, sir, authorization is there. And there should be, and that board of directors has to be proposed that, and it should be approved by equity shareholders, members. Okay. And there should not be no default in principal and interest, and there should not be no default in statutories towards employees. And bonus shall never be given in terms of what? In lieu of dividend. And once the decision is made, you can't withdraw such decision, and any other conditions as may be prescribed. Okay, sir. These are the conditions. Bonus are of two types. One is bonus issue. One is bonus call. If you want to issue bonus, it should be fully paid up shares. It should be fully paid up share. If you want to give bonus issue, the existing equity shares must be existing equity shares must be fully paid up. When existing equity shares are not fully paid up, you can convert partly paid up shares into fully paid up shares by way of bonus. You can convert partly paid up shares into fully paid up share by way of bonus. Next, sir, when you want to issue bonus issue, what? Bonus issue. The reserves what you can use? Sources for bonus issue. Sources for bonus issue. Sir, if you are having 1 lakh equity shares, how many shares? 1 lakh equity shares, and which are fully paid up. Now 1 lakh equity shares which are fully paid up. Now 1:2 ratio, that bonus they are announcing, bonus ratio is 1:2. If you are holding 2 shares, 1 share is what? Bonus. If you are holding 2 shares, 1 share is what, sir? Bonus. Now entry. First one, CRR can be used for fully paid bonus. Next one, securities premium if realized in cash. Next one, capital reserve if realized in cash. Next one, general reserve. Next one, P&L. Next one, dividend equalization reserve. These are the sources for bonus issue. What is the sources for bonus issue? Means 1 lakh equity shares were there and the ratio of bonus is 1:2. If you are holding 2 shares, bonus will be 1 share. Means company will allot how many shares? 50,000 shares. Company will allot how many shares, sir? 50,000 shares. Company will allot 50,000 shares. Done. Next. Sources: CRR, securities premium, capital reserve, general reserve, P&L, dividend equalization reserve. Next. Next, sir, you have to issue 50,000 equity shares. Per share is 10 rupees face value. You want 5 lakhs. This 5 lakhs has to be taken from where? No cash is inflow. Cash inflow not there. From reserves I am transferring to where? From reserves I am transferring to share capital. From reserves I am transferring to equity share capital. I hope you are getting the clarity. From reserves I am transferring to equity share capital. Next one. Next one. Which reserves to use? From reserves I am transferring. Which reserves to use? CRR, capital redemption reserve, securities premium, capital reserve, general reserve, P&L, dividend equalization reserve. Second one, sources for bonus call. What is this bonus call? Means partly paid up shares, converting into fully paid up shares. Partly paid up shares were converted into what shares? Fully paid up shares. Partly paid up shares were converted into what, sir? Fully paid up shares. Under which the first one? Which reserve to use? CRR cannot be utilized for bonus call. CRR can be utilized only for the purpose of fully paid bonus shares. That is section 655. Section 55 is talking CRR can be used only for the purpose of fully paid bonus. Next, securities premium. Section 2 is talking securities premium can only be utilized for what, sir? Fully paid bonus. Then what to use? Capital reserve, general reserve, P&L, dividend equalization reserve. These 4 reserves can only be used for bonus call. Means, for example, 1 lakh equity shares were there, 8 rupees paid up. 1 lakh equity shares, 8 rupees paid up. Now, what this 2 rupees? Which is yet to be called. Now, company is converting this partly paid up share into fully paid up share by way of bonus. How much amount required? 1 lakh shares into 2 rupees, which is 2 lakhs required. That 2 lakhs I has to convert from reserves. What reserves? Don't use CRR, don't use securities premium. When to use CRR, when not to use? If it is a bonus issue for a fully paid up share, I am issuing one bonus share. Use what? CRR and securities premium. No bonus issue, it is a partly paid up share, I am converting into fully paid up share by way of bonus. Don't use CRR and securities premium. Once the share is fully paid up, then I am issuing bonus. For example, in this case, I made it as 10 fully paid up by calling that final call by a bonus. Once it is fully paid up, hence once again you can issue what? Bonus in terms of 1:2 or 1:3, 1:4 depending upon the agreed ratio. I hope you are getting the clarity for this. Yes. Now come to the entries point, accounting entries. Accounting entries for bonus. Accounting entry for bonus. Bonus issue, bonus call, bonus issue, then reserves account to debit. Because of my bonus, my existing reserves are decreasing, reserves account to debit to bonus to shareholders account and bonus to shareholders account debit to bonus to shareholders account debit to equity share capital. Bonus to shareholders is a liability. This is on the date of announcement. This is on the date of allotment. On the date of announcement and on the date of allotment. On the date of announcement, what is the entry? Reserves account debit to bonus to shareholders. On the date of allotment, what is the entry? Bonus to shareholders account debit to equity share capital. Next, come to the bonus call. Can anyone tell what are the reserves I can use for bonus issue? Once again, the same old story. What are the reserves I can use? The order is important unless there is any other order which is prescribed in the problem. First one, CRR as per which section? Section 55 subsection 3. Next one, securities premium as per which section? Section 52 subsection 2. Next one, capital reserve which is realized in cash, securities premium which is realized in cash, and P&L, and then general reserve, and then dividend equalization reserve. First use general reserve and then come to the P&L. general reserve, and then P&L. I hope you are getting the clarity. Next one. So these are the reserves account debit to bonus to shareholders. Bonus to shareholders account debit to equity share capital. Entry for bonus call. Reserves account to debit to bonus to shareholders. Next, equity share final call or first call, whatever the call may be, to equity share capital. This is the asset what I have debited, equity share final call asset, and this is the liability what I credited. Once I made a bonus call by way of conversion of partly paid up share into fully paid up share, neither this asset is not required, neither that bonus to shareholders liability is not required. On the date of allotment, cancel that bonus to shareholders to equity share final call account. I hope you are getting the clarity. I hope you are getting the clarity. Next one, sir. While you are using reserves, which reserves you are not supposed to use for bonus call? CRR I am not supposed to use, securities premium also I am not supposed to use for bonus call. Right. If it is a listed company, securities premium must be realized in cash if I want to use for bonus issue. If it is an unlisted company, there is no such restriction. If you are an unlisted company, even though securities premium is not realized in cash, you can use for bonus issue. Once again, if it is a listed company, securities premium must be realized in cash if I want to use for what? Bonus issue. Unlisted company, securities premium, even though not realized in cash, you can also use for that bonus issue. I hope you are getting the clarity. Yes. Come to the problems part. Yes, that's it. More than that, nothing is there. This is bonus is nothing but giving free shares to the existing equity shareholders by way of conversion of your reserves into capital. This is also known as capitalization of reserves. Capitalization of reserves or is also known as scrip issue, SCRIP scrip. Capitalization of reserves and surplus into bonus into capital, or converting your reserves into capital, all these things bonus. Next. Come to the bonus and rights issue questions. We can solve some 1 or 2 beautiful questions which are important from exam point of view. Come to CRD 3. Make sure that because of bonus issue, if authorized capital is increasing, then write one note. Okay, wait, I'll tell all these things. Following notes pertaining to whom, sir? Pertaining to the balance sheet of Preet Limited. Okay, the following is the notes which is the following with this balance sheet which is pertaining to the Preet Limited. 15,000 12% preference shares of 10 each, that is 1,50,000. 1,50,000 equity shares of 10 each, that is 15 lakhs. This is what is your authorized capital. 12 lakh, 12,000, 12% preference shares of 10 each fully paid up. Very good. 1,35,000. The difference here is how much? 15,000 is yet to be issued. Very good. Which you paid only 8. 10,80,000. Come to reserves and surplus 1,80,000. Come to CRR 60. Come to securities premium 37,500. Come to profit and loss account 3 lakhs. On 1st April 2022, the company made a final call at the rate of 2 rupees. On 1st April 2022, company made a final call at the rate of 2 rupees each on 1,35,000 equity shares. Very good, sir. On 1st April 2022, company made a final call at the rate of 2 each on 1,35,000 equity shares. Entry, sir. The call money was received by 20th April 2022. So they are asking you to, okay, fine. First complete the question. So on 1st April 2022, the company has made a final call to each on 1,35,000 shares. The call money was duly received. Very good. Next. Thereafter, the company decided to capitalize its reserves by way of what? Bonus at the rate of 1 share for every 4 shares held. Okay. What is the problem? There is no bonus call here. Bonus matlab the final call they are raising and they are collecting cash, and the ultimate point is they are announced to capitalize of reserves by way of bonus at the ratio of 1 share for every 4 shares held. Show necessary journal entries in the books of the company. Prepare extract of balance sheet on 30th April after bonus issue. After bonus issue. Who is this company? Preet Limited. Journal entries in the books of Preet Limited. Extract of balance sheet. Journal entries in the books of Preet Limited. Date, particulars, LF, debit, credit. 1st April 2022. 1st April 2022. Equity share, final call account to debit. 2. Equity share capital being final call made. How many shares? 1,35,000 if I am not wrong. How many shares? 1,35,000 into 2. Yes, 1,35,000 into 2. 1,35,000 into 2. 2,70,000 if I am not wrong. Perfect. And what is the entry for final call received? So the call money was duly received by 20th April. Call money was duly received by 20th April. Entry. Bank account to debit. 2. Equity share. Final call. How much? 2,70,000. 2,70,000 being final call received. Being final call received. Prepare extract of balance sheet. On which date? 30th April. Yes, sir. Prepare the extract of balance sheet on 30th April. Prepare one working note. For what purpose? Prepare one working note for what purpose? Calculation of bonus shares. Calculation of bonus shares. Existing number of equity shares. Existing number of equity shares, how many are there? 1,35,000. Bonus ratio. What is the bonus ratio? 1 share for every 4 shares held. 1:4. Number of bonus shares. Number of bonus shares. That is 1,35,000 divided by 4 into 1. 1,35,000 divided by 4 into 1, 33,750. So, number of bonus shares, how many sir? 33,750. Next one is amount required. Amount required. How much amount required for from reserves? Amount required from reserves to transfers to capital by way of bonus. How much amount is required from reserves that should be transferred to capital by way of bonus means 33,000, what is this? 750 shares into 10 rupees. I want 3,37,500 in terms of amount that has to taken from the reserves to capital. Now, go and check whether that much of reserves is there or not. How much I required? Yes. General reserve 1,80,000 is there. Yes, I am having P and L of 337. Happily I can use. The first preference is CRR. Second preference is securities premium. Third preference is capital reserve. Fourth preference is general reserve. Fifth preference is P and L account. CRR how much is there? 60,000. Convert that CRR into capital. Entry. CRR account to debit. How much? 60,000. Next, securities premium. Next, general reserve. How much? Capital reserve is there. If capital reserve is there, use that capital reserve. No capital reserve, right? Yes. General reserve 1,80,000. Total how much? 60, 37,500, 1,80,000, 2,77,500. But I want how much? 3,37,500. Still I required 60. That 60 I can take from where? P and L account. Debit 60,000 to bonus to shareholders account. How much is that bonus to shareholders account? 3,37,500. Next one, bonus to shareholders account debit to share capital. Onward. Bonus to shareholders account debit to share capital account. 3,37,500. 3,37,500. Next one, draw balance sheet, extract only. Draw balance sheet, extract. equity and liabilities. First one, shareholder funds. How much? First one, share capital. Second one, reserves and surplus. 1, 2. Yes, that is enough, more than enough. They are asking balance sheet. Yes, extract of balance sheet after bonus issue. Yes. Now share capital lo prepare one notes. Authorized share capital. How much? 15,000, 12% preference shares. 15,000, 12% preference shares of rupees 10 each. That is 1,50,000. Next one, 1,50,000 equity shares of 10 each. 1,50,000 equity shares of rupees 10 each. That is 15 lakhs. Next, close this. This is authorized capital. Come to the next one. Issued and subscribed. Issued and subscribed. Now remember one thing, because of bonus your authorized capital increased. Before bonus, what is the number of shares you are having? 1,50,000. How many issued? 1,35,000. How many bonus shares? 33,750,000. Your authorized capital must be 1,35,000 plus 33,750, which is 1,68,750. Don't forget to write 1,68,750. 1,67,000. 1,68,750. Note, you have to mention that after bonus issue your authorized capital is over and above the existing authorized capital. In other words, after bonus issue authorized capital exceeding bonus, after bonus authorized capital is exceeding existing authorized capital. Necessary resolutions OR is passed in the general meeting to increase authorized capital. To increase authorized capital. Issued and subscribed 12,000. Yes, 12,000, 12% preference shares of rupees 10 each. How much? 1,20,000. Next one, 1,68,750 equity shares of rupees 10 each, which is 16,87,500. 1,68,750 equity shares of rupees 10 each, 1,68,000, 16,87,500. Bracket lo out of above 33,750 shares were issued by way of bonus. Were issued by way of bonus. By way of bonus. I hope you are getting the clarity and done. How much this is total? 1,20,000 plus 16,87,500, 18,07,500, 18,07,500. Come to the reserves and surplus. General reserve completely utilized, CRR completely utilized, securities premium completely utilized. From this 3 lakhs lo how much you utilized? From 3 lakhs lo 60 utilized, 2,40,000. General reserve comprising of 2,40,000. That is also nothing but P and L balance. P and L balance. Not required, only one is there, no? P and L balance. Reserves is nothing but P and L balance to the tune of 2,40,000. That's how you are supposed to solve this question. Sir, what we did? First raised the final call. So, equity share final call account debit to equity share capital, received bank account debit to equity share final call. Now there are 1,35,000 equity shares and one bonus share for every 4 shares held. That is 33,750 into 10, which comes to 3,37,500. Right? This is the amount they have taken from CRR, securities premium, general reserve, and balance left in the P&L 2,40,000. Total 3 lakhs. Reduce that, and you are having 2,40,000. I hope you are getting the clarity. Just check with the answers. Equity share final call. Equity share final call to equity share capital. Bank to equity share final call. Reserves to bonus to shareholders. Bonus to shareholders to equity share capital. Done. Done. Yes, that is also completed. Total how much? 1,20,000 plus 16,87,500. Yes. Next. Next, you are having 2,40,000. Yes, sir. 1,67,750. That is done. 6,87,750 done. Done, sir. Perfect. Everything all right. And they have setting that you have completely utilized and nil, and their reserves and surplus they are giving reference to completely nil. Reserves and surplus low, they are giving reference in this number 2, note 2 low, reserves and surplus low, existing general reserve is there 1,80,000, that is completely utilized, hence the balance is 0. Next. Next one, CRR existing 60,000 is there, entire utilized, like that they are referring. CRR 60 entire utilized, this is also entirely utilized, nil, and this is 2,40,000 which is left, and that is taken from where? Taken to the balance sheet. Come to the next topic, rights issue. Sir, what is this rights issue? What is this rights issue? Section 62, rights issue. Sir, this is also known as further issue of shares. Further issue of shares. In other words, this is known as rights issue. What is this further issue of shares or rights shares? Means if you want to issue the further shares, or you want to issue the right shares, first give that option to the existing, give option to existing equity shares. Give such option to the existing equity shares. If existing equity shares are not subscribing, then only issue to the outsiders. Why this, sir? Why this refers to always whenever you are issuing further shares, you will issue at a price less than the market price. Less than the market price. Is there any small benefit? The benefit shall be given to whom, sir? That small benefit shall be given to whom? To the existing equity shareholders. To the existing equity shareholders. I'll complete this with a small example. I'll teach with a small example, then you'll have better understanding about what is this rights issue. Yes, sir. Rights issue, section 62. What is this rights issue, section 62? Whenever company is going for further issuance of shares, whenever company is going for further issuance of shares, whenever company is going for further issuance of shares, further issue of shares. Then whenever company is going for further issuance of shares, then the first priority, then the first option shall be given to whom? First right should be given to whom? Existing equity shares in proportion to paid up share capital, in proportion to paid up share capital, in proportion to paid up share capital, in proportion to paid up share capital. Very good. Whenever company is going for further issuance of shares, yes, company is going for further issuance of shares, the first option or right shall be given to whom, sir? Existing equity shareholders in proportion to their paid up share capital held by them. Very good. Come to the next one. Sir, for example, company is having 1 lakh shares. How many? Company is having 1 lakh shares. Company is giving rights offer at the rate of 1:2. 1 share for every 2 shares held. Next, issue price is 20, face value is 10, market price is 25. Market price is 25. Right, sir. Now pass the necessary journal entries. Pass the necessary journal entries. Pass the necessary journal entries. Sir, how many shares were there? 1 lakh shares. Rights issue 1:2. Then how many right shares? Number of right shares is equal to total number of existing shares 1 lakh divided by, if shareholder holding sure shares, company will give you 1 share. Total number of shares 50,000 shares. 50,000 shares. Yes, sir. Now all existing shareholder is subscribed for this offer. Assuming all existing shareholders subscribed for this offer. Subscribed for this offer. Entry: bank account to debit. Bank account to debit. How many shares? 50,000 into, what is the issue price? Issue price is 20. Everyone, then how much? 10 lakhs. Everyone, 50,000 into 20, which is 10 lakhs. 2. Equity share capital. How much? 5 lakhs. 2. Securities premium. How much? 5 lakhs. This is the entry for rights issue. This is the entry for what, sir? Rights issue. Rights issue. What is meant by rights issue? As per section 62 of the Companies Act, if any of the shareholder, if all the existing shareholders will have a right to what? In the participate in the further issuance of shares in the ratio of their proportionate paid up share capital. Whenever a company is issuing further shares, the first right shall be given to whom, sir? Existing equity shareholders in the proportion of paid up share capital. In proportion of paid up share capital. I hope you are getting the clarity. In proportion of their paid up share capital. Right, then they will tell in the ratio of 1:2, 1:4, 1:10, like that. Are you getting, sir? Shall I solve one problem based on this? to problem number 4. Come to problem number 4. Pass journal entries for issuance of right shares, assuming that all the shareholders accepted the rights issue. Assuming all the shares accepted the rights issue. So, company having how many shares? 70,000 shares of how much? 10 each. As its issued share capital and having market value of 21. Market price is equal to how much? 21. And issue price how much? 10. Then the right ratio 1:10. Right ratio 1:10. I hope you are getting the clarity. And market price is how much? 21. Issue price is 10. Face value is also 10. Calculation of number of right shares. Next, existing number of equity shares. Existing number of equity shares. How much is the existing number of equity shares? Example, existing number of equity shares in our case 70,000. I mean in the problem it is 70,000. Right ratio is how much? 1:10. Then number of right shares is equal to 70,000 divided by 10 into 1, that is 7,000. Number of right shares how many? 7,000. Now assuming all the right shares were subscribed, they are only telling in the problem all the right shares were subscribed. Yes, assuming that all the shareholders accepted this rights issue. If all the shareholders accepted this rights issue, entry bank account to debit. How many shares? 7,000 into what is the price? 10, which is 70,000 to equity share capital. How much? 70,000. I hope you are getting the clarity. Done. Yes sir. Calculation of number of right shares. Done. Next one. Company having 1 lakh shares. How many? 1 lakh shares. Yes. Face value of rupees 10 each. Having a market value how much? 46. So market price is how much? 46. Face value how much? Face value 10. Issue price how much? Issue price 31. Now the rights ratio is how much? 1:10. Assuming all the shareholders accepted the offer. Calculation of number of right shares offered. Existing number of equity shares. How many? 1 lakh. Right issue ratio 1:10. Number of right shares. Number of right shares. 1 lakh divided by 10 into 1, 10,000 shares. All the shareholders subscribed for the offer. Face value how much? 10. Issue price how much? 31. Issue price 31. Entry, sir. Bank account to debit. How many shares? 10,000 shares into 31. 3,10,000. 2. Equity share capital. How much? 1 lakh. 2. Securities premium. How much? 2,10,000. To securities premium 2,10,000. Done, sir. Done. Yes. Bank to share capital. Which one this is? Fourth one. Yes, sir. Bank to share capital. Next one. Bank to share capital. Securities premium. Done. Done. Next one, sir. Calculation of value of right and calculation of value of right and X right price. Calculation of value of right and X right price. Example, I am holding 1,000 shares at a price of market price is 30. My holdings cost is 30,000. Company made a rights offer at the rate of 1 share for every 2 shares held, and company is giving me 500 shares which is at the price of 20. This is what? Right price. Right price is how much? 20. Right issue price. Then what I did? I denied the offer. I don't want this offer. Hence, I don't want this offer. Hence, I didn't subscribe this. Okay. If I said no means, what will company will do? Company will allot these shares to some other person for the same amount. That other person may be existing equity shareholder or some employee or some other on a lottery basis or some other basis. Company will allot to existing our shareholders or employees as some basis. Yes, sir. Imagine what happened to the market price. Company is issuing for what? 500. 500 into 20, which comes to how much? 10,000. Total 40,000. Number of shares 1,500. Now 40,000 divided by 1,500 shares, which is 26.67. What is this 26.67? Market price. Before rights or after rights? After rights. If I am not subscribing these shares, some other idiot will subscribe and the market price will fall down after the issue of this rights issue to 26.67. Now, I am holding 1000 shares. My price will become 26,670. Means forcefully you are asking me to subscribe for right shares. Forcefully you are asking me to subscribe for right shares. Forcefully you are asking me to subscribe for right shares. If I don't know the offer and I don't want to subscribe, then my holdings cost after rights, my market price is 26.67 and I am getting a loss to the tune of how much? 3,370, 330. 3,330. I hope you are getting. Now, company is giving one offer. What is that offer? If you don't want to subscribe, at least to renounce your right so that you can gain this 3,370. If you don't want this offer, at least do what, sir? Renounce this right. How much is your loss? 3,330. How many shares you are holding? 1000. Then how much? Then how much, sir? 3.33 is what, sir? Your loss. This 3.33 is known as value of right. Value of right. How much you are losing? 3,330. And get this 3,330 from how many shares? 500 shares, because that is you are having right shares as 500 divided by 500 shares, claim 6.66 from the whoever you are renouncing from that idiot purchase, sell for 6.66. I hope you are getting the clarity. Value of right comes to what? Come right price, that is 30, minus X right price, that is 26.67, which comes to 3.33. What is this 3.33? Value of right. 3.33 is what, sir? Value of right. Now, come right price I can see. How to calculate X right price in this problem low? 26.67 is X right price. How I calculated this X right price? That is 26.67 means come right shares how many? 1000 into come right price 30 plus right issue 500 into right price 20, come right shares plus right issue shares is equal to, you will get how much? 26.67. Are you getting? This is known as what? X right price. What is meant by X right price? After rights, this is the price. After rights, this is the price. What is before rights? Come right price. How much? 30. The difference between come right price and X right price is how much? 3.33. Come right price minus X right price is how much? 3.33. Next one. Next one. How to write this? How to write this? Come right shares. Come right shares into right price. Come right shares into right price plus come right shares into right price plus right issue shares into right issue price. Right issue shares into right issue price divided by total number of shares or come right shares plus right issue shares. right issue shares. You will get what? X right price. The value of right is what? Cum right price minus X right price is what? Value of right. Value of right into number of shares hold will is equal to what? That is that how much you can renounce. Value of right into number of shares held. That is what you are losing. Value of right into number of shares. In our example, you are holding 1000. Value of right is 3000. I mean 3.33, and you are losing 3,330 divided by. You can recover this from 500 shares, which is 6.66. I hope you are getting the clarity. Yes, sir. From the following information, calculate the value of a right. Okay, they are asking you to calculate the value of right and X right market price. They are asking value of right and X right market price. Okay. The company offered new equity shares of rupees 100 each. Face value 100 at 25% premium. Company offered new share at issue price is how much? 125. On 1/4 basis, the cum right market price is 150. They are telling 1:4 is right ratio. One is to 4 is right ratio. Cum right, and they are telling how much is the cum right value. That is 120, 150. 150. X right how much? 1. X right how much? 120. X price I need to calculate. Issue price how much? 125. This I need to calculate. Are you getting? Now they are not telling number of shares are there. Assuming in the ratio of rights means I am assume that I am holding only 4 shares. I am holding only 4 shares. That's what our ICAI did. 4 shares into cum right per share is how much? 150. Yes. If you are holding 4 shares, company will give you 1 share, which is at 125. Total how many shares? 5 shares. This is your X right price. 600 plus 125 divided by 5, you will get 145. What is this 145? X right price. Then value of right. Value of right. How much is the value of right? 150 minus 145, that is 5. That is 5. Value of right is how much? 150 is cum right price minus X right price. The value of right is 5. Yes, the value of right is 5. Same how I did, they also did in the same manner. No sir, I want to assume I am holding 1000 shares. Assume and do, you will get the same answer. Assume and do, you will get the same answer. Next one. The company decided to increase its existing share capital by marketing rights issue to its existing shareholders. Company offered 1 new share for every 2 shareholders shares. The market value of the share is 240. This is cum right price. Company offered for 120. This is right issue price. 240 cum right price. Right issue price. Right issue price 120. Cum right price 240. If you are holding 2 shares, company will give you 1 share. Example. 2 shares I am holding and my market price 240. 2 shares I am holding, my market price 240. that is come right shares. They will give you 1 share for 120 divided by 3. How much? 2 into 240, which is 480, plus 120, 600 divided by 3. 200 is what? X right price. X right price. I am getting what is the come right price? Come right price is 240. X right price is 200. This 40 rupees is what, sir? Value of right. X right price is 200. Value of right is how much? X right price is 200 and value of right is how much? 40, and X right price 200 and it is 40. You can also assume I am holding 1000 shares. That is up to you. Yes, sir. Moving on to the one more chapter, sir. Accounting for bonus issue. Accounting for bonus issue and rights issue. Sir, what is this bonus issue or rights issue means? To the existing equity shareholders. Who, sir? To the existing equity shareholders, issue of shares in proportion to the number of shares held at free of cost. At free of cost. In other words, capitalization of reserves and surplus. Capitalization of reserves and surplus. Existing equity shareholders are there? Yes, sir. Existing equity shareholders are there. In proportion to their holding, what? In proportion to their holding, if you issued what? Shares at free of cost, that is nothing but bonus issue. Bonus issue is nothing but what, sir? Issue of shares to the existing equity shareholders at free of cost in proportion to what? In proportion to shares held by them. What, sir? Sir, bonus, there are two types, sir. One is bonus issue. One is bonus call. What is this bonus issue? Bonus issue will be given only if the shares are fully paid up equity shares. If shares are fully paid up, then only bonus issue will be given in proportion of 2:3 or 1:4 or some 2:5 in any ratio. 2 bonus shares if you held 3 shares. 1 share for every 4 shares. If you are holding 4 shares, you will get 1 share. 2 shares in the form of bonus if you hold 5 shares. What is this bonus call? Sir, shares are not fully paid up, partly paid up shares. So, partly paid up shares. Converting a partly paid up share into a fully paid up share by way of bonus call. By way of a bonus call. For a partly paid up share, you can't issue bonus issue. You can't issue a bonus share for them. Hardly what you can do? Convert that partly paid up share into a fully paid up share by way of bonus call. 10 is nominal value. Issued paid up is 8. Paid up is 8. Still 2 rupees is there. Called up capital. It is not a fully paid up. Now can I issue bonus issue for them? No. If I want to issue a bonus issue, first it should be fully converted. I mean fully paid up. It should be fully paid up. Convert them. Convert these partly paid up share into fully paid up share. Then give bonus issue. Means first make what? Bonus call. Then make bonus issue. Are you getting, sir? Very good, sir. Next. Sir, this bonus issue is nothing but capitalization of reserves. Of reserves and surplus. Now, which reserve need to be capitalized? There are so many reserves. Tell me which reserve to capitalize. For bonus issue, bonus call. For bonus issue, if it is a bonus issue, sir, CRR, capital redemption reserve, which we have created at the time of redemption of what? Preference share capital. That CRR will be used only for the purpose of issue of fully paid up bonus share. Take that CRR. Securities premium if it is realized in cash fully. Securities premium if it is realized in cash. Capital reserve if it is realized in cash. Journal reserve. Dividend equalization reserve. Credit balance in P&L account. So, what and all the reserves that I can use for the purpose of conversion of partly conversion. I mean, what and all those reserves which I can use for to issue bonus issue. CRR, securities premium, capital reserve, general reserve, dividend equalization reserve, P&L account. Sir, can I use revaluation reserve? No. Can I use securities premium not realized in cash? No. Can I use capital reserve not realized in cash? No. Can I use the development rebate reserve? No. Can I use workman compensation fund? No. I can use only CRR, securities premium realized in cash, capital reserve realized in cash, general reserve, dividend equalization reserve, P&L. Sir, if I want to convert partly paid up share into fully paid up share by way of bonus, then those two cannot be used. CRR can be used only for the purpose of issue of fully paid bonus share. Securities premium will be used only for the purpose of what? Fully paid bonus share. Can I use capital reserve? Yes, realized in cash. Can I use general reserve? Yes. Can I use the dividend equalization reserve? Dividend equalization reserve is a reserve which is created in the year of excess profits to repay, to pay dividend in the future years in the event when they are not having surplus funds to pay dividend, inadequate funds to pay dividend, then I can use this dividend equalization reserve. Then profit and loss account. So these and all the four reserves which I can use for what? Convert partly paid up shares into fully paid up shares. So bonus is nothing but what? Capitalization your reserves into capital. So your reserves are there. Convert that reserves into capital. Now your shareholders will get more shares without their paying anything. So no cash inflow of this because of this bonus. Next. Entries, sir. Accounting entries. On the date of declaration, reserves account to debit, bonus to shareholders account. Bonus to shareholders is a liability account. Reserves account is nothing but I am reducing reserves. Reserves will have credit balance. I am reducing this reserve. Second one, sir. Now, at the time of allotment of this bonus shares, reduce this liability. Bonus to shareholders account to debit to equity share capital to equity share capital account. So these are the two basic journal entries for bonus. Nothing is there. Bonus to shareholders account debit to equity share capital account. Third one. This is what? For bonus issue. These two entries for bonus issue. Next one, sir. First make the final call. What is that final call? Equity share final call account to debit to equity share capital account. If I am getting cash, I might write cash account debit to equity share final call. Okay. Now I am converting what? Reserves. Reserves account to debit to bonus to shareholders account. On the date of allotment, matlab on the date of converting these partly paid up shares into fully paid up share by way of bonus, what is the entry? Reduce this liability, bonus to shareholders account debit to equity share final call account. The first entry is what? Normal final call due entry, equity share final call to equity share capital. Next, this is what? Converting your reserves into reduce reserves and create what? One liability. And this is what asset I created, equity share final call. It is no more an asset. This is no more a liability. This is the liability. This is no more a liability. Once I allotted this, once I converted this final call entry, bonus to shareholder, cancel this liability, cancel that asset. First entry, equity share final call account debit to equity share capital. Yes, sir. Second entry, what is the second entry? Reserves account debit to bonus to shareholders. Yes, sir. Reserves account debit to bonus to shareholders. Reserves are decreasing. Bonus to shareholders is the liability. Once I converted this partly paid up into fully paid up, there is no such liability called bonus to shareholders. Cancel that liability by debiting. First entry lo I debited equity share first call, assuming that is asset. Once conversion is done, they will not give anything. Cancel that asset also. So equity share final call. Now these are your basic entries for what? For bonus issue. For bonus issue, these are the two entries: reserves to bonus to shareholders, bonus to shareholders to each share capital. Here, these are the three entries. Shall I go to one problem? Sir, moving to the next chapter. The next chapter is redemption of preference share capital. Redemption of preference share capital. Sir, what is the meaning of the term redemption? Sir, what is the meaning of the term redemption? Redemption refers to repayment. What? Redemption refers to repayment. What I am repaying? Repaying preference share capital. What I am repaying, sir? Repaying preference share capital. Okay. Sir, forget about this capital. If I took one loan, what is the entry? Bank account to debit to loan account. This is the entry when I took the loan. What is the entry at the time of repayment of loan? Loan account to debit to bank cash or bank account. As simple as that. Similarly, the entry for when you took that capital in the form of preference share capital entry, bank account to debit to preference share capital. When you are repaying this preference share capital entry, preference share capital account to debit to bank, right? Right. So this is the entry when you are taking the loan bank to preference share capital, when you are repaying preference share capital account debit to bank. But the issue is, sir, let's take one balance sheet. In this balance sheet low, I am having equity share capital. I am having equity share capital. How much equity share capital I am having? 5 lakhs. Right? I am also having preference share capital. How much? 3 lakhs. Right? Right. I am also having debentures. Long term borrowings. How much? 4 lakhs. Now, yes, some short term borrowings. How much? 912, take to some 2 lakh short term borrowings. Total assets I am having worth 5 plus 3, 8, 10, 14 lakhs. How much I am having assets? 14 lakhs. Now, when you are redeeming, we are also take some reserves and surplus, sir. Take reserves and surplus to the tune of 4 lakhs. Make it this at 18 lakhs. Total will comes to 18, right? 5 plus 3, 8, 12, 14, 18. Yes, the balance sheet total comes to 18. Sir, what happened when you are redeeming your preference share capital? You are throwing this out. If you are throwing this out, to throw that preference share capital, who are affected is your debenture holders are affected. What your debenture holders are telling? Hey, what you said at the time of taking loan from me? You said that equity share capital is 5 lakhs, preference share capital is 3 lakhs, total how much? 8 lakhs. What you said? In the event of repayment, first you said that you will repay me that 4 lakhs, then only you will repay that 5 plus 3, 8. But what you are doing now? You are repaying that 3 lakhs. My rights get affected. What affected? My rights get affected. Please don't do that. Who is asking? Debenture holders is asking. Now, there is one provision under section 55. What is this section 55? What they are telling? When you are repaying the preference share capital, when you are issuing the preference shares, you are supposed to be repay your preference shares within 20 years. Within 20 years. The maximum period for this preference shares were 20. You can't issue irredeemable preference shares. If you are an infrastructure company, for you the maximum period is 30 years. If you are an infrastructure company, the maximum period for you to redeem these preference shares were 30 years. But what happened other than infrastructure companies? 20 years. Now you might issue for 5, 4, 10, 8 up to 20 years, it's up to you. So I issued for 5 years. 5 years over. As per section 55, I need to repay this 3 lakhs. But my debenture holders are stopping me to pay them. Please make payment for me. Then only make payment to whom? Preference share holders. I am not having funds. Are you getting? I am having funds only to repay preference share capital. Now, what that section 55 is telling? What this section 55 is telling? If you want to redeem what? Your preference share capital, no problem, redeem your preference share capital. No problem, redeem your preference share capital. But I don't know what you will do, but make your capital block, make your capital to the tune of how much? 8 lakhs. Earlier it is 8 lakhs. Whatever you want to do, but I want that to be there at 8 lakhs. Oh, then option number 1, issue new equity shares. Issue new equity shares to the tune of 3 lakhs. Yes, then capital is 8 lakhs, repay that preference. No. Issue preference shares, new different class of preference shares to the tune of how much? 3 lakhs. Now repay, no problem. Or you are not having any interest or you are not having any market to do what? To make fresh issue. Then do one thing. You are having what? Free reserves. Fund that free reserves transfers to what? Capital. Transfer to capital. From free reserves to transfers to capital means this is nothing but what? Bonus. This is nothing but bonus issue. Transferring from the free reserves to your capital is nothing but bonus issue. What they are telling means, they are telling from free reserves, from where sir? From free reserves to transfer to a reserve called CRR. Tomorrow, for the external people, it might be CRR. For a commerce profession like us, CRR is nothing but what sir? It is capital only. And today or tomorrow, the CRR will be converted into what? Fully paid bonus share. It will be converted into what sir? Fully paid bonus share. So what you are telling sir? Nothing sir. Wait, I will tell what I have said. When preference shares are redeemed other than by way of proceeds from the fresh issue of the shares. When preference shares are redeemed other than by way of proceeds from fresh issue of shares. When preference shares are redeemed other than by way of proceeds from fresh issue of the shares, then the nominal value of preference shares, so redeemed shall be transferred from free reserves to CRR. This is the ultimate moral of this preference redemption. When preference shares are redeemed other than by way of from the proceeds from fresh issue of the shares, then the nominal value of preference shares so redeemed shall be transferred from free reserves to CRR. Sir, I redeemed preference share capital by issuing equity shares. CRR required? Not required, because capital block is fitted is with what? Equity share. Sir, I redeemed preference share capital and I issued new separate class of preference shares. Sir, CRR required? No sir. When CRR is required? When you redeemed preference shares other than by way of proceeds from the fresh issue of the shares, then CRR is required. My focus is always on nominal value. Example, I want to redeem 1 lakh preference share capital. How much? 1 lakh preference share capital. How much preference share capital is reducing? 1 lakh. Now, how much debenture holders are expecting to fill that? To the tune of how much? 1 lakh. Now, debenture holders are expecting to what? To fit how much? 1 lakh. Now, what you are supposed to write? My entry, my how much means now I am supposed to be fit in this 1 lakh from where to where? Free reserves to CRR. No sir, I am redeeming preference share capital 1 lakh at a premium of 10%. I am redeeming 1 lakh 10,000. How much redeeming? Sir, how much preference share capital you are redeeming? I am redeeming preference share capital to the tune of how much? 1,10,000. In your capital block, how much is decreased? 1 lakh. Even though you might redeem at a discount, you might be redeem at a premium, my focus should be on what? Nominal value only. Why nominal value only? Because that is the amount what is going out from my balance sheet in capital block. I want to fit this capital block only to the tune of nominal value. When the preference shares are redeemed other than by way of proceeds from the fresh issue of the shares, then the nominal value of the preference shares so redeemed shall be transferred from where to where? Free reserves to CRR. Sir, my free reserves includes what, sir? Is securities premium free reserve? A big no. Free reserves are those reserves which are freely available for dividend distribution. Free reserves are those reserves which are freely available for dividend distribution. First free reserve. Journal reserve. Accumulate balance in the profit and loss account. Dividend equalization reserve. Any other reserves, for example, I created one workman compensation fund. What I created? Workman compensation fund to the tune of 20. And in the current period low, I want to use from what this workman compensation only 5,000. Can I call balance 15,000 as free reserve? 100% you can call the balance 15,000 is free reserve, provided in the question they are highlighting you that in that workman compensation fund low, I want only 5, I want only 10, the balance is free reserve, the balance you can use, then I can treat it as what? Free reserve. Question they are telling only in the 20 low, only 5,000 only I want to use for the what? Workman compensation. Means they are telling that balance 15,000 is a free reserve, they want to take that 15 reserve including in the free reserves. They are telling what, sir? In the 20 low, I want only 5 and they are not telling about balance. Means they are asking you to use that 15 lakhs as your free reserve. Sir, in the balance sheet low, preference share capital 1 lakh. Balance sheet low, preference share capital 1 lakh. I am redeeming at a discount of 10%. How much I am redeeming? At a value of 90,000. Can anyone tell how much CRR shall be transferred from free reserves to CRR? Either 90 or 1 lakh. Why? What is going out in the capital box? That is my discussion. 1 lakh? Yes. Now transfers to CRR only 1 lakh. I am repaying 1,10,000 for a capital of 1 lakh. How much capital? Capital how much in the balance sheet low? How much is the reduction in the capital? 1 lakh. Not 1 lakh 10. Now transfer from free reserves to CRR only 1 lakh. Now whenever redemption of preference share capital is done, now the amount to transfer from free reserves to CRR, it depends upon how much the nominal value of the capital so redeemed. When the preference shares are redeemed other than when the preference share capital is redeemed. When the preference share capital is redeemed other than by way of proceeds from the fresh issue of the shares, the nominal value of the shares so redeemed shall be transferred from free reserves to CRR. Are you getting, sir? Yes, sir. In the problem low, they are telling preference share capital 1 lakh. How much? Preference share capital 1 lakh. They are telling issue sufficient number of how much? Issue sufficient number of equity shares. Issue sufficient number of equity shares if the redemption is made at par and the issue price of equity share is 10, face value is also 10. Sir, what they are asking? Sir, the preference share capital what you are redeeming is how much? 1 lakh, and they are asking you to what? issue sufficient number of equity shares if the redemption is made at par, means you are repaying 1 lakh only. Yes sir, I am repaying 1 lakh only, and they want to issue sufficient number of equity shares. 1 lakh divided by, what is this 1 lakh? Number of total value of preference share capital redeemed divided by face value of preference share capital redeemed divided by issue price, matlab face value is equal to 10. Now 10,000 equity shares you are supposed to be issue, where if they want to issue the equity shares for the purpose of redemption. Are you getting? Case 1. Come to the example 2. In this case lo preference share capital 1 lakh only, but I am redeeming these preference shares at a 10% premium, means the repayment comes to how much? 1,10,000. Now tell me sir, now I want to issue equity shares, I am not having what reserves and surplus, now I want to issue full equity shares. Now tell me how many equity shares to be issued. Face value is 10, issue price is also 10. Tell me what is the sufficient number of equity shares to be issued. Face value of preference share capital redeemed. What is the face value of preference share capital redeemed? 1 lakh divided by, what is the face value? 10. In this case also I am supposed to issue 10,000 equity shares into 10, which comes to 1 lakh. Here 1 lakh is gone. Maybe you are redeeming at a premium, but your capital block should be filled by what? With the equity share capital, matlab with the face value only. Example number 3. I am redeeming preference share capital how much? 1 lakh. Sir, if I redeem preference share capital which is to the tune of 1 lakh and I want to redeem at a premium of 10%, I want to redeem at a premium of 10%, issue sufficient number of equity shares, face value is 10, issue price is 12. Now tell me sir, how many equity shares to be issued? No doubt 1 lakh is what I want in the form of equity shares, divided by 10 or 12? 10 only. Now what I want to tell me is, you might redeem at a premium, even you might issue at a premium, my focus should be their nominal value of the capital should be replaced with the nominal value of the capital gone. Nominal value of the capital gone is replaced with the nominal value of capital. Even though my issue price may be 12, if my issue price is 12, 1 lakh divided by 12, which comes to how much sir? 1 lakh divided by 12, which comes to 83,333 shares. The nominal value comes to how much? 10. Means in your capital block low 83,000 only it is fitting. I want how much? 1 lakh. So what is that? Can I draw in one formula base? Number of shares to be issued is equal to nominal value of capital redeemed divided by issue price or face value? Face value divided by nominal value or face value. Right? Very good sir. Come to the next case. Sir, reserves and surplus comes to 40,000. How much? 40,000. Preference share capital comes to 1 lakh. I want to redeem the preference share capital. For the purpose of redemption of preference share capital, I am issuing 10,000 equity shares at the rate of 10 rupees each. Face value 10,000 equity shares at the rate of 10 rupees each. Now, will I need to touch my reserves and surplus or not required? Not required. Why? Capital block is fitted with 1 lakh. Will I need to touch my capital block? Not required. Sir, I am issuing 8,000 shares into 10. 80,000 capital block is fitted. Now to comply with section 55, when the preference shares are redeemed other than by way of proceeds from fresh issue, how much is other than by way of proceeds from fresh issue? I am redeeming 1 lakh. 80,000 is by way of proceeds from fresh issue. Other than by way of proceeds from fresh issue is 20,000. How much? 20,000. Then the nominal value of the preference share capital so redeemed, that 20,000 have to be transferred from reserves, free reserves to CRR. Means from this free reserves, CRR will be 20. Reserves and surplus will come and sit at other reserves at 20. Are you getting? One more example. Reserves and surplus 60. Preference share capital 1 lakh. Now, for the purpose of redemption, company wants to use maximum reserves and surplus. For the purpose of redemption, company wants to use maximum reserves and surplus subject to retain a balance of 10,000 in the reserves and surplus. Means how much they want you to use for this purpose? 60,000 minus 10,000 balance, balance 50,000 used for the purpose of what? For the purpose of redemption. Means balance how much is required? 50,000 is required. Issue necessary number of equity shares. Issue necessary number of equity shares. Face value 10, issue price is also 10. Now 50,000 I required, divided by 10, issue 5,000 equity shares. Or issue necessary number of equity share, issue necessary number of equity shares where face value is 10, issue price is 12. Even though the issue price may be 12, but I want my capital block to be fitted with 50,000 nominal value. I want 50,000 nominal value divided by here also 10. I don't want to consider the issue price. I want to consider the nominal value 5,000. If I multiply with 10, 50,000 will come and sit in where? Will come and sit in my capital block, equity share capital. I hope you got the clarity. Last adjustment. Last adjustment. Always check sufficient cash is there or not. Always check sufficient cash is there or not for the purpose of redemption. Always check sufficient cash is there or not for the purpose of redemption. If sufficient cash is not there, if sufficient cash is not there, then as per the requirement of the question, follow the instructions of the question. If sufficient cash is not there, follow the instructions of the question. In question law, they will ask you to issue sufficient number of equity shares. In the question law, they will ask you to follow sufficient number of equity shares. Now, in the sufficient number of equity shares law, you might get some lesser number of sufficient equity shares because of reserves are high. But because of cash, you might issue more. Wait, I will show in the problem. Wait, I will show in the problem. Yes, sir. Cash available or cash balance. 1 lakh is the cash balance. Right. Preference share capital. Preference share capital 1,50,000. I want to redeem the preference share capital. Reserves and surplus 1,40,000. Reserves and surplus 1,40,000. In the question law, what they are telling, redeem your, this is the face value, redeem the preference face value, redeem the preference share capital by utilizing maximum from reserves and surplus, retaining a balance of 20,000. Balance if any, are you getting? Balance if you still requirement any, issue equity shares at the rate of 10 each. Issue equity shares at the rate of 10 each. What is the requirement of the question, sir? Cash balance is 1 lakh. You are having cash of 1 lakh. Preference share capital 1,50,000. Face value. Reserves and surplus, they are asking you to use maximum reserves and surplus for the purpose of redemption, subject to a balance of 20. Now, how much I can use, sir? I can use 1,20,000. Balance, how much is required? 30,000 is only required, right? How much I want to fill my capital block? 1,20,000 is filled with the help of free resource to CRR. Rest 30,000 is enough if I want to fit in the capital block. That 30,000 question they are telling balance issue equity shares. By looking into that, if I want to issue 3,000 equity shares into 10, which comes to 30,000, if I kept here the capital block is 1,50,000 done. But where is cash? In all our existing problems, I assumed that cash is there sufficient. Then only that is the reason I solved on that basis. But when the cash balance is not sufficient, now here how much is I am supposed to issue, sir? How much I am supposed to issue? I am having only 1 lakh. I am supposed to issue 5,000 shares. I am supposed to issue 5,000 shares. Right? Now, how much I want to, if I issuing 5,000 shares, then it is enough to transfer from where? Reserves and surplus. How much? 1 lakh. They want a minimum balance of 20. You are maintaining them, reserves and surplus maximum balance, that is more than 20. Are you getting? This is the extreme they will ask in the exam, sir. See, comparing with other questions, if I am having sufficient cash balance, then do what? If their question law they are telling issue maximum number of equity or issue maximum from the reserves, accordingly follow the instruction and use the maximum to the reserves, balance only for the balance face value, issue equity shares. Question law they are telling maximum they want to issue equity shares, issue maximum to the tune of equity shares, and a balance used from where? Used from free reserves. But they are talking about cash available balance of the cash, and if the balance is not sufficient, even though reserves are there, you are supposed to issue more number of equity shares. I hope you got the clarity. Can I solve problems based upon this? Any problem in the exam you can easily solve based upon this backdrop. Yes, sir. Come to the journal entries. Journal entries for redemption of preference shares. First one. Preference share capital account to debit. If it is 10 lakhs, capital will always have credit balance. The moment you are repaying the liability, it will be cancelled debit. If you are repaying at a premium on redemption of preference shares, premium on redemption account debit 1 lakh to preference shareholders 11 lakhs. How much? Preference shareholders 11 lakhs. Next one. Now go and check whether for the purpose of redemption you are issuing any equity shares or preference shares. Yes, we are issuing any equity or preference. Entry. Bank account to debit equity share capital account. How much? How much you are getting? Imagine if I am making 10 lakhs, then in the problem no CRR is required. Imagine I am not raising any fresh issue of equity shares. Imagine I am not raising any fresh issue of equity shares. Now what I am supposed to do? Now immediately this premium on redemption will be adjusted against what, sir? Free reserves. That is nothing but your P and L account. That is nothing but your capital reserve or general reserve account to debit. Free reserve, P and L, general reserve, capital reserve, all your free reserves only. Even in the balance, capital reserve balance which is realized in cash, the balance in capital reserve which is realized in cash can also be utilized. 2. Premium payable on redemption. How much? 1 lakh. 1 lakh. Now the balance, if you are not raising in the form of what? Proceeds from the fresh issue, you are supposed to transfer your free reserves to where? CRR. Entry. Free reserves account to debit. CRR account. Free reserves means what and all the reserves you are supposed to take? General reserve, P and L, dividend equalization reserve, and any reserve which you have maintained for a specific purpose, and any excess amount than that specific purpose, like investment allowance, like investment fluctuation reserve, 10,000 I maintain, I enough 5,000, balance 5,000 I can utilize. Free reserves account debit to CRR. Last entry. If you are selling any investments, bank account to debit. If I am selling at a loss on sale, this loss on sale should be against P and L. 2. Investments. If I am selling at a profit on sale of investment will be taken to P and L. Loss on sale to profit on sale. Now, preference shareholders, you are supposed to repay them. Preference shareholders account to debit. Preference shareholders account to debit to cash or bank account. How much? Preference shareholders account debit to, in our case I said 1 lakh 10, 11 lakhs. Done. Throw that 11 lakhs. Very good, sir. These are the journal entries. Cancel your preference share capital. The excess amount is a loss premium on redemption to preference shareholders liability, and issuing fresh shares. It might be there, might not be there. This is not the mandatory entry. Might. But this is the mandatory entry. If premium is there, this is also mandatory. Premium is there. Next, if you are not following this entry, if you are not having this entry, then you should have this entry, free reserves to CRR. And if you are having investments, you can sell land also, you can sell, you can discharge. Can I move to the problems? Come to the CRD 6. Come to the CRD 6. Just go through. The board of directors of a company decided to issue minimum number of equity shares. They decided to issue minimum number of equity shares of rupees 9. What is this of rupees 9? This is the face value of rupees 9 to redeem 5 lakh. This is rupees, not numbers. To redeem 5 lakh preference shares. The maximum amount of available, the maximum amount of divisible profits available for redemption is, so I am having the maximum amount of divisible profits is 3 lakhs. How much I am having the maximum amount of divisible profit is 3 lakhs. Calculate the number of shares to be issued by a company. Calculate the number of shares. So what they are telling, sir? Sir, I am redeeming 5 lakhs preference share capital. Rupees 5 lakhs. The amount of free resource what I am having is 3 lakhs. And clearly they are telling the company decide to issue minimum, means if they want to issue minimum number of equity shares, in other words what they are telling, they want to use the maximum amount from where? Divisible profits. The maximum amount of divisible profits available, they are only telling how much is available. The maximum number is available is 3 lakhs and the minimum number they want to issue in the form of equity shares means 5 lakhs you redeemed. And how much is the free resource you are having to transfer to CRR? 3 lakhs. Balance how much is left? 2 lakhs. For this 2 lakhs, they are asking you to issue what? Equity shares at a face value of 9 per share. Are you getting? 2 lakhs divided by 9, your answer is what? 22,222 to 23. And they are telling that also determine the number of shares if the company decided to issue in multiples of 50. If the company, so calculate the number of shares to be issued by the company, the calculation of number of shares to be issued by the company. How much? 2 lakhs divided by 9, 22,223. If the company want to issue in multiples of 50, then 22,250. 22,250. If the company want to issue in multiples of what? 50. 22,250. How to write this answer? Yeah, calculation of number of shares to be issued for the purpose of redemption. Calculation of number of shares, equity shares, calculation of number of equity shares to be issued for the purpose of redemption. Particulars amount. Face value of preference share capital redeemed. Face value of preference share capital redeemed 5 lakhs. In the same question law, even though they might be redeemed at a premium, my answer will not change. Even though they might be redeemed at a premium, my answer will not change. Face value of preference share capital redeemed, how much? 5 lakhs. Less maximum amount of divisible profits available for redemption, less maximum amount of divisible profits available for redemption, means that is the free reserve that can transfers to CRR, less 3 lakhs. Balance amount, balance 2 lakhs, balance 2 lakhs. Now for this 2 lakhs, the company decided to issue minimum equity shares, issue minimum equity shares, minimum number of equity shares. Next line, minimum number of equity shares to be issued, 2 lakhs divided by 10, 2 lakhs divided by 9, 9 is the face value, 2 lakhs divided by 9, 22,223, 22,223. Number of shares to be issued is 22,223. Next, if the company decide to issue shares in multiples of 50 only, if the company decided to issue shares in multiples of 50 only, then 22,250 nearby. Either you can issue 22,200 or 250 in multiples of 50 means. So you, if it is 200, it is not the sufficient. Issue 22,250. I don't think they are not asking entries. Enough. Same question lo. Imagine company is redeeming at the rate of 10% premium. What is the change in your answer? No change. Why? Whether you are redeeming at premium or discount, my focus will be always there on the face value of redemption. Why? Only that value should be occupied with my CRR, or it should be transferred from a new capital, but not premium amount. I hope you got the clarity. Yes. Nominal value of preference share 5, maximum 3, balance 2 divided by 9. Oh, same thing. Hence, minimum number of shares to be issued is 22,250 if the company wants to issue the shares in multiples of 50. I hope you got the clarity. Come to the question number 3. Yes. Come to the question number 3. Please ask me any doubt is there in relation to CRT 6. Sir, let us begin with one more problem, number 3. Yes, sir. Yeah, the capital structure of a company consists of what? 20,000 equity shares of 10 each fully paid up and 1,08% redeemable preference shares of 100 each fully paid up. Okay, sir. The capital structure of the company consists of 20,000 equity shares of 10 each. Okay, I don't want to bother about this. It is fully paid up and 1,008% redeemable preference shares, 100 each fully paid up, sir. Preference shares will be redeemed only when they are fully paid up. If they are partly paid up, I am not in a position to redeem that preference shares, convert them into fully paid, then only you can redeem. In other words, partly paid up shares cannot be redeemed. Okay. Undistributed reserves and surplus stood as general reserve. How much is there? 80. Profit and loss account 20. Investment allowance reserve 10,000, out of which 5,000 not free for distribution as dividend. Securities premium 2,000. Cash at bank amounting to how much, sir? 98,000. Very good, sir. Preference shares are to be redeemed at a premium of 10%. Okay. Preference shares are to be redeemed at a premium of 10%. And for the purpose of redemption, the directors are empowered to make fresh issue of equity shares at par. Okay. For the purpose of redemption, the directors are empowered to make fresh issue of equity shares at par after utilizing the undistributed reserves. Means the directors are empowered to make fresh issue of equity shares at par after utilizing undistributed reserves and surplus, subject to a condition that a sum of 20,000 shall be retained in general reserve. What they are telling, sir? This general reserve lo retain 20,000. Balance left in the general reserve how much? 60. Balance left in P&L how much? 10. Balance left in 5,000. These two were not useful. Cash is, forget about cash. Securities premium cannot be useful for convert to CRR. Means I am having how much? 60 plus 20 plus 5. How much? 85. Right? Okay. First write the first entry. What is the first entry? Preference share capital, right sir? Preference share capital, how much is the preference share capital? Preference share capital 1 lakh. Premium payable on redemption of preference shares 10,000 to preference share holders. Preference share capital, premium payable on preference share, premium payable on redemption of preference shares to preference share holders. How much? 1 lakh 10,000. That 10,000 premium is there, no sir? Immediately write off the 10,000 premium with the help of what? Either profit and loss account or journal reserve. Anything is fine. Anything out of the P&L or journal reserve, reduce that 10,000. I am reducing from the P&L. Now, what is the balance in P&L? 10,000, right? I am having what? Profit and loss account lo balance 20. In this balance of 20 lo, reduce how much? 10,000. How much balance is there? Balance left is 10,000. Now total 60, 10, 5. I am having 75,000 in where? In my free reserves. Now immediately what I am supposed to do? The balance, how much capital has to be filled? Nominal value of the capital to be filled is 1 lakh. Nominal value of the capital to be filled is 1 lakh. Less 75,000 reserves will be transferred to what? Maximum utilization will be 3RR. Balance left is how much? 25,000. That will be issued in the form of what? Equity share capital. Sir, my focus will be on redemption value or face value. Only on the face value. That is 1 lakh. How much I am transferring from where to where? I am transferring from my free resource. They are only telling. After utilizing the undistributed, directors are empowered to make what? Fresh issue of the face. When? After utilizing the undistributed reserves. First utilize this. How much is there? Retain 20 for them and write off 10. You will have 75. Now that 25,000 you want, right? Pass the entry. Bank account to debit to equity share capital. So first entry, preference share capital, premium payable on preference shares redemption to preference share holders. Second one, profit and loss account to debit to premium payable on redemption. Second entry, profit and loss account debit to premium payable on redemption. Come to the third entry. What is the third entry? Bank account to debit to equity share capital. Bank account debit to equity share capital. What is the fourth entry? Journal reserve 60, P&L 10, investment allowance reserve 5, 2. General reserve, P&L, investment allowance reserve 2, CRR, 2, CRR. Because convert these free reserves into one reserve, that is CRR. Last entry, preference shareholders account debit to bank 1,10,000. Check whether sufficient cash balance is there with you or not. 98 plus how much you are raising? 25. Then yes sir. I hope you got the answer. They are asking only to pass journal entries. Preference shareholders account debit to bank. How much? 1,10,000. 1,10,000. Yes, I am having sufficient cash to pay to them. So settle their amount. I hope you got the clarity for this answer. Yes, sir. Come to the CRD number 4. Just now only I have said, if it is a partly paid up share, now you can't redeem these shares until these shares are converted into as fully paid up. If it is a fully paid up, then only you can redeem these shares. If these are partly paid up share, then you can't redeem these shares. Right. Sir, 50,000 8% preference shares of 100 each, 70 paid up. Okay. Means you want to redeem these shares means first you are supposed to make the final call. So entry preference share final call account to debit to preference share capital 50,000 into 30. Preference share final call account debit to preference share capital. Bank account to debit to preference share final call. How much? 15 lakhs, 15 lakhs, 15 lakhs, 15 lakhs. Next. These equity shares of 1 lakh of 100 each fully paid up, no issues. Securities premium. CRR means already CRR is there means already previously also you redeemed some preference shares as that redemption is done from the reserves. So CRR came here. Journal reserve. Okay, bank balance is 15 lakhs. Under the terms of their issue, the preference shares are redeemed as on 31st March 2022 at 5% premium. Means that 50 lakhs they are redeeming at what, sir? At 55 lakhs. 5%. Then 50 lakh into 5% which comes to 2,50,000. Total, sir, 52 lakh 50,000. I hope you got the clarity. Yes, sir. Now, in order to finance the redemption, the company makes rights issue. How much? 50,000 equity shares of 100 each at 110 per share. Okay, in order to finance the redemption, the company makes the rights issue of how many shares? 50,000 equity shares of 100 each at 110 per share. 20 being payable on application, 35 including premium on allotment, and the balance as on 1st January 2023. Sir, when the redemption is taking place? On 31st March 2023. On 31st March 2022, the redemption is taking place. In order to finance the redemption, the company makes the rights issue equity shares 100 each at 110 per share. 20 being payable on application, 35 is paying means 20 application, 25 means how much? The 10 is what? Premium, don't consider, sir. How much then? 45 face value of 45 rupees you are collecting now. Balance amount you are collecting as on which date? 1st January 2023. If you are collecting the balance amount as on 1st January 2023 means for that balance amount, CRR is required. As on the date of redemption or 1 or 2 days here and there you can give an exemption regarding what? For creation of CRR. Redemption is taking place on 31st March and the issue for the balance calls you are making on the next year January means that application of 20 and allotment face value of allotment 25, those two only consider as proceeds from the fresh issue of the shares. Balance is considered you are supposed to take from where to where? Free reserves to CRR. Yes, sir. 50,000 preference shares into 27.5. What is this 27.5? That is the amount is required from transfer to where, sir? From CRR. How much? 50,000 and 45 is gone. Then 50,000 into 55. This is the amount required, sir. 50,000 into 55. That is 27,50,000 is required. What is this 27,50,000? This 27,50,000 is required. Shall be transferred from where to where? Free reserves to CRR. Total I require how much? The capital block to be replaced by 50 lakhs. In that law, 20 rupees application, 25 rupees face value allotment, total 45. How much? Into how many shares you are raising? You are raising 50,000 shares. Means how much? 22,50,000 is replacing with what? Capital block. Balance amount of 27,50,000 shall be transferred from where? From free reserves to CRR. What is the first entry? Preference share final call account debit to preference share capital, bank account debit to preference share final call, 15 lakhs, 15 lakhs, 15 lakhs, 15 lakhs, done. Now, pass the redemption entry. Preference share capital account debit, preference share capital account debit 50 lakhs, premium payable on redemption 2 lakh 50 to preference shareholders 52 lakh 50,000. Come to the third entry. Third entry, from free reserves, from your journal reserve, write off that premium payable. Entry, journal reserve account to debit to premium payable on redemption of preference shares. How much? 2 lakh 50, 2 lakh 50. How much journal reserve balance is left? 47 lakh 50,000. Now, you are making fresh issue. What is the entry? Bank account to debit to equity share application. Bank account to debit to equity share application. 50,000 shares into 20 per share, which comes to 10 lakhs. Equity share application account debit to equity share capital. Equity share application account debit to equity share capital. Second entry, equity share allotment 50,000 into 35, 17 lakh 50. Equity share allotment, account to debit, equity share allotment account debit to equity share capital to securities premium. Equity share allotment account debit to equity share capital to securities premium. 50,000 into 35. 17 lakh 50 is what? Equity share allotment account debit to equity share capital. 50,000 into 25. 12 lakh 50. Securities premium. 5 lakhs. Next entry. Next entry, sir. Now, bank account debit to equity share allotment. Bank account debit to equity share allotment. Bank account debit to equity share allotment. Next. Next one, sir. Now only repayment is there. Yes, sir. Preference shareholders account debit. Preference shareholders account debit to bank account. Preference shareholders account debit to bank account. One more entry. How much I need to transfer from CRR to, from journal reserve to CRR? Yes, 27 lakh 50. Yes, sir. 27 lakh 50 will be transferred from where to where? From journal reserve to CRR. 27 lakh 50. Entry, journal reserve account debit to CRR. Predominantly better write this entry before and pass the preference shareholders account debit to bank account. I hope you got the clarity, right? Yes, sir. Let's start with CRD 7. What is this? Yes, share capital 2 lakh 90, perfect. Reserves and surplus 48,000, perfect. Trade payables 56,500, okay. Next, assets lo you are having all these things. Current liabilities lo you are having trade payables, assets lo property, plant and equipment, and non-current investments lo 18,500, and current assets lo cash and cash equivalent 31,000. This is what you are having in the balance sheet. Next, the share capital of the company consists of 50 each. Equity shares of 2,25,000. Okay. Now, in this 2,90,000 lo, share capital is how much? Equity share capital is 2,25,000 of rupees 50 each. Okay, sir. 2,25,000 of rupees 50 each, which is 4,500 shares. Very good. And 100 each. And 100 each. Preference shares of rupees how much? 65,000. So preference shares were rupees 100 each, which is divided by 100, you will get 650 preference shares. And rupees 100 each preference shares of 65,000 means 650 preference shares. Reserves and surplus comprising of, in this reserves and surplus law, you are having what, sir? Profit and loss account only. Very good. Means a free reserve. Very good. What they are telling. In order to facilitate the redemption of preference share capital at a premium of 10%, company decided to sell the investments at 15,000 to finance a part of redemption of company funds subject to leaving of cash balance. Now, to finance part of redemption from company's funds, what is meaning of company's funds? Cash subject to leaving bank balance how much? 12,000. What they are telling, whatever the bank balance there is how much? 31. Retain 12,000 with the company only. Use the balance how much? 31 minus 12, 19,000. Use this 19,000 for redemption. Use this 19,000 for redemption. Perfect. Next one. To issue minimum equity shares of 50 each. What is this minimum equity? Means if they are telling issue minimum equity means maximum you have to be used from your where? Free reserves to CRR. They are not telling to issue equity shares of 50 each. They are telling to issue minimum equity shares of 50 each to raise the balance of funds required. Balance of funds required. What is meaning of balance here? After, see how much is there from free reserves to CRR and the balance of funds required from where, sir? From fresh issue of the shares. I hope you are getting the clarity. You are required to pass the necessary journal entries to require the above. Okay. X Limited give the following transaction. In the books of X Limited, journal, date, particulars, LF, debit, credit. First one, preference shares. Okay, they are not telling what is the rate of dividend. Okay. Preference share capital. Preference share capital. How much? 65,000. Next one. Premium payable on redemption of preference shares. Premium payable on redemption of preference shares. How much? 6,500. 2. Preference share holders. How much? 71,500. Next one, sir. Next one is immediately transfer this premium to P&L. P&L account to debit. 2. Premium payable on redemption of preference shares. How much? 6,500. 6,500. Next. Third one. Open our working note. Calculation of minimum number of shares to be issued. What is this calculation of minimum number of shares to be issued? Sir, tell me available cash balance. How much is the available cash balance? 31,000 minus minimum balance to be maintained. How much that minimum balance to be maintained? Minimum balance to be maintained 12,000. Then what about the other balance? I can use 19,000. Add sale of investments. How much? 15,000. Now balance left how much? 19 plus 15, 34. Cash available. Next. Amount required for redemption how much? Amount required for redemption of preferences. 65,000 plus 6,500, 71,500 is what? Amount required for what? Redemption of preferences. Okay. Balance amount required from issuing equity shares. 71,500 minus 34,000. 71,500 minus 34,000. 37,500. How much? 37,500. This is how much you required. From where? From balance amount. Number of shares to be issued. How much? 37,500 divided by 10. 3,750 shares to be issued. 3,750 shares to be issued. Yes, sir. Number of shares to be issued, how much, sir? 3750. Okay. Entry, sir. Bank account to debit 2. Equity share application. Equity share application account. How much? How much means 3750 into 10. That is 37,500. 37,500. Next one. Equity share application to equity share capital. Equity share application account to debit 2. Equity share capital. How much? 37,500. 37,500. I hope you are getting the clarity. Yes. Next. I am selling. What I am selling? Yes. And how much is the working note number 2? Calculation of amount transferred to CRR. Face value of preference share capital redeemed. How much? 65,000 less face value of equity share capital raised. How much? 37,500 balance minus 27,500. Reserves to be transferred from CRR. First reserve. There is only one reserve, that is what? P&L account. Some 48,000 given in the problem, minus 6,500 for premium, minus 3,500 for what? Loss on what? Loss on sale of investments. To CRR. How much? 48,000 minus 6,500 minus 3,500, 38,000. Enough balance is there. 27,500. 27,500. Enough balance is there. To CRR 27,500. One more entry for sale of investments. Bank account to debit 15,000. P&L account to debit 3,500 to what is that? To investments. To investments 18,500. Now last entry. Preference shareholders account debit to bank. How much? 71,500. 71,500. This is how you are supposed to solve this problem. Yes, first preference share capital premium to preference shareholders, adjust with your P&L, then how much to raise depends upon, they are telling your cash balance how much? 31, minimum balance to be maintained how much? 12, and sale of investments how much? 15, and then cash available how much? 34. Amount required for redemption of preference shares how much? 71,500. In that you are having cash balance how much? 37,000. You are having cash balance how much? Available cash 34. Balance cash required how much? 37,500. Are you getting? Yes, for that I am giving on this. From reserves point of view, you might have reserves. What is the actual balance of reserves? 48 less 6,500 is what? Premium less 3,800 is what? Loss. 48 minus 6,500 minus 3,800. How much? 37,700 reserves I can transfer to CRR. But if I transfer 37,700 minus 65, then I will get only 27,300, which is not sufficient. If I am using 37,700 from where? CRR to free reserves to CRR, how much preference share capital redeemed 65 minus CRR transferring to free reserves. Balance how much? 27,300. This 27,000 if I am raising from equity share capital, then cash is not sufficient to repay. That is the reason I am issuing more number of shares. I hope you are getting the clarity. Once again, from reserves to CRR, how much I can transfer? 48 minus 6,500 premium minus loss on sale of investments 3,800. I can transfer to CRR 37,700. I can transfer to CRR. But nominal value of preference share capital how much? Redeemed 65 minus free reserves available to transfer to CRR. Then this is the amount I need to raise from equity share capital. If this is the amount I am raising from equity share capital, that is not sufficient to make it as 71,500. That is the reason I issued more number of shares. I hope you are getting the clarity. Done.